Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Now let's take a look at the setup today. It's not looking encouraging. Middle East tensions are escalating once again. The tariff demon is back. India has been hit with a 10% tariff. We've got Brent crude above 100. I think that's the most significant one. Let me pull up Brent crude for you really quickly. There you have it. So the rupee once again at near record lows, and bond yields are surging. So all in all, everything's really just pointing to the setup going back to what it was about 2-3 months ago. And Nasdaq again cracking with chips selling back. Let's pull up global markets for you this morning. Asian markets have opened in the red as well. Dollar index also above 101. So overnight cues not encouraging from Wall Street or from Asia. And we're just going to wait for pre-open. But clearly on the back of that, it doesn't sound like we're in for a great start this morning. Let's see what the pre-open indicates for us in a few moments there. Let me also welcome in our guest this morning. We got Vishukant Upadhyay joining us, AVP Research and Advisory Technical at Master Capital Services Z13. Vishukant, thanks for being with us. Let me first get a view from you on the setup and how it stands currently.
Hi, Avaji. Very good morning. Well, so as you mentioned, the setup is not positive, and this is going to be a very disastrous week. In fact, until yesterday, market was down somewhere around 2%, and if today's losses, as I am seeing in GIFT Nifty, sustains, the closing will be somewhere around 23,650 odd levels, right? But on a technical graph, if you see the Nifty prices on a weekly graph is trading in a ascending triangle, which is a bullish continuation pattern. But yes, we are gradually coming very close to a lower range value. So today's closing is a very important. If market closes below 23,850 or 23,600, somewhere around, there could be a further pin in the market, and the decline should be containing somewhere around 23,200. If market manages to close above 23,850, then we can expect some respite, but still carrying long position over the weekend is not suggested because the driving force will be a bank nifty, and we are seeing bank nifty is giving a sign of further deceleration, and I think that fall should be containing somewhere around 5500 55,800 55,500 sort of levels. And the most concerning factor is rising crude oil prices and rising US 10-year bond yield, which is now currently at 4.7, the level not seen since January 2025.
Okay, let's pull out some of the stocks that will be in focus on the back of earnings, and clearly all the current triggers are overshadowing anything really on the earnings front. But nevertheless, let's get your view on IT and Infosys in particular, Vishukant. Strong revenue growth, margin outlook also maintained. What's your view on Infi this morning? Vishukant, I think you're on mute.
Abaji, I'm expecting some pain in the Infosys. In fact, constant currency revenue, just did disappoint to the market. In fact, technically, if I talk, the next support arrives somewhere around 990, and I'm expecting prices are all set to extend the fall towards 1020 and 1010 sort of level. So I need to see a price action if prices comes close to that trajectory, but still there is no buying as of in the Infi based on the technical chart structure.
Okay, so pain expected on an Infi. What about Indigo? Because strong revenue, but currently pressures on the back of oil and the West Asia crisis, so those pressures continuing.
Yes, undoubtedly, there will be a pain further in the Indigo. And yesterday we have seen prices, just fell below its a very crucial horizontal support, 5,100, and now it is heading towards the 200-day exponential moving average that aligns near 4,900. So definitely rising crude oil prices and accelerating, unrest in West Asia will definitely put pressure on Indigo share prices as well. So I'm not very much optimistic, and I'm not expecting any firework in the Indigo. the prices in a short term will remain on the selling side. So every rise in the prices close to 51.20 will give you an opportunity to get a sell position, at least for intraday. On the lower side, first support aligns 4900, which is broken decisively. Next support aligns 4800.
All right. I want to bring up something like an India Cement as return to profit, given the infra push that we're seeing as well. Some of these counters will be back in focus. Is it still too early, or do you find perhaps that these could be good levels to get into something like an India Cements or something else from the infra or industrial space?
So our technical stock is looking quite good because a few days back we have seen a very clear-cut breakout from the falling trend line resistance. Any corrective dip comes in today's trading session, which is quite possible scenario because no sector is immune from this such kind of sell-off. So I believe any corrective fall close to 398, 395 will that's the proximity of 200 exponential moving average will surely provide you an opportunity to create a fresh long position. On the higher side, I'm expecting 440, 450 sort of levels can't be ruled out in a very short term. I believe stop loss should be placed below 380.
All right, that's on India Cements. I want to just get your picks, Vishukant. What are the top 3 stocks that you're tracking?
In fact, my first pick is a Hero MotoCorp. Yesterday, in fact, we have seen a very good breakout in Hero MotoCorp. The stock, briefly settled the session above the 200-day exponential moving average. The recent gain just brought prices above the cluster of all key moving averages. So I believe prices are now all set to extend this gain towards 5400, 5500 sort of level. So if any decline in market comes close to 5100 or 5080, which is a most likely scenario, and one can go long, and stop loss should be placed below 4920. Having said that, on the higher side, 5400, 5500 sort of levels can be on card. My second pick will be a CP plus. That is the Aditya Infotech Limited, right? Yesterday we have seen a very good closing. That's like a Marabuzo candlestick pattern, and the good part is that the gain has been accompanied by a very good volume, and also prices regain. It's a short-term moving average. That's a 21-day exponential moving average. I believe if prices remains well above it's a recently formed low, that is 3350. On the higher side, 3800 and then 4000 sort of levels can't be ruled out. So one can, consider Aditya Infotech stop loss should be placed below 3350. On the higher side, 3800 and then 4000 sort of levels can be on card. For an intraday Abaji, I would prefer to play a sell bet on a Hinching. So basically, Hero MotoCorp and CP Plus is my short-term pick, and Hindustan Zinc is only and only for an intraday. So I believe on the lower side, considering the falling silver prices and overall pessimistic view on the market, I believe yesterday's fall in the Hindustan Zinc should be extended towards a 515 and then 505 sort of level. So one can go short in intraday on a Hindustan Zinc. Stop loss should be placed below 540. First target comes 517, second target comes 505.
All right. So those are a few strategies coming in from Vishukant for the day on the charts. And, in terms of, where are you finding, Vishukant, in terms of, potentially stocks that may have seen a run up already and where you're feeling perhaps it's time to cool off a little bit? Anything that you'd stay away from or you feel that has topped out for the moment?
Basically, we have seen good run up in a mid cap IT. In fact, due to a better than expected Q1 numbers like LTTS, LTM, Mphasis persistent. I believe there could be some cool off in the market, but personally I believe any corrective dip in such kind of stock will definitely be a opportunity to build a fresh long positions. If you look at a chart of LTTS, right, L&T Technology. Yesterday we have seen a very good setup in the prices. Prices just took a U-turn from the proximity of 21-day exponential moving average, right? after falling somewhere around 10% from its recently formed high, that is, uh, 30, 36, 6, 7, somewhere around. And we have seen a very healthy corrective fall in the prices. And now the pattern is clear cut showing if prices manage to hold above 3290 sort of levels, there could be a further acceleration in prices. And that, gain should be containing around 3600, 3700. So yes, there has been overextended rally in some mid cap, pack and in some healthcare and pharma. So one can, let the prices come down towards, or we can also, expect some mean reversion trade in all these, stocks. So one can stay away from the pharma and healthcare because we are going to expect some sort of corrective fall in these packet.
Okay, great. What about the broader indices? Do you think that this is a time perhaps to look at those in context to what you just shared versus the headliner index?
Yes, definitely. But for last few days, in fact, the market breathe is completely narrowing, and we are witnessing pain from the pain in a mid cap and a small cap. But yes, I'm quite optimistic on mid cap and small cap. Simultaneously, headline indices are also doing good because we have seen a very good numbers from such some heavyweight stocks, including ICICI Bank, Reliance, and many more. But yes, one is stock, one heavyweight is due to post their earnings. That's the SPI, and all eyes are now on that stock. So considering the mid cap and small cap, yes, these sector have been done immensely well. But yes, for last few days we have witnessing some corrective fall in this packet. So I believe this correction can be extended. So for a very short term, one can stay away from the mid cap and a large cap. Let the situations cool down and oil prices come down close to a $90 US 10-year bond yield, a cool of close to 4.2, then we will consider putting money in mid cap and small cap. But yes, as of now, we can expect some pain in mid cap, small cap as well.
All right. What about the Leela hotels and resorts? I want to get your view on some of these hotel stocks because Indian Hotels, of course, came out with earnings and has been continuing to deliver, of course, consistently. From the hotel counters, what would be your pick and why?
Until a few days, Leela Palace Hotel was looking quite good. But yesterday we have seen a very sharp, fall in the stock. And the stock is now below its 21-day exponential moving average. Simultaneously, the stock has started to form a lower highs. In fact, so it's a little concerning for a short-term perspective. I'm expecting, considering the ongoing chart pattern, there could be a further a selling pressure in the Leela Palace, and I believe on the lower side the stock might find support somewhere around 454, 450 sort of levels as stock has shown a very good strength in earlier. So considering that gain, I believe any corrective dip in the prices close to 450 can be seen as an opportunity to get a fresh long position. On the lower side, I believe the stock should not fall below its 200-day moving average. That's a 440. So one can go long close to 450. Stop loss should be placed below 440, while on the higher side, first resistance aligned 495, which if broken, 510 will be on card. So apart from the Leela Hotel, the second is my preferred pick will be a Lemon Tree.
All right, do you want to talk us? Yeah, do you want to talk us through the levels on Lemon Tree?
Yes. So the stock is forming, the ascending triangle kind of pattern, and the stock is now very close to its lower range value. So I believe one can go long somewhere around 104, 105, 106, and stop loss should be placed below 103. On the higher side, I believe 120, 118 sort of levels can't be ruled out. So Lemon Tree could be a alternate of the Leela Palace if someone wants to buy the hotel space at a current level.
All right. I also want to bring up the fertilizer and chemical pack because I know you've talked about it earlier. Is that still on your radar? Chambal Fertilizers is one that you'd identified earlier.
Basically, I just did not, see any chemical stocks except Himadri Specialty. and we have already seen a very good run up in the counter. But I believe this is a very strong counter and in a very strong momentum. So I believe if trend for the trend followers, I believe let the stock come down towards 720 and 715 sort of levels. That is the proximity of 21 day exponential moving average. And if a stock comes close to that trajectory, one can go long. Stop loss should be placed below 695. While on the higher side, I'm expecting 825 and then 840 sort of levels can't be ruled out in Himadri specialty chemical.
All right. A lot of stocks are going to be in action on the back of earnings. What are you keeping your eye on, even from just a technical reaction POV? We have almost 80 stocks that are going to be reporting today. Yesterday, of course, we had Adani stocks in focus and continuing to be in focus today on various news buzz. And then going forward, today we have a whole host of other names as well.
Basically, Abaji, I'm just in today's trading session, I'm just keeping eyes on a metal and upstreams and downstream oil companies, in fact, due to the this volatility in the oil prices. So in metal pack, having said that, I would prefer to play a selling bet on the Hindustan Zinc. Apart from that, GSW still will be on my radar, in fact.
Great, Ishukant, thanks so much for joining us this morning and talking us through some of your picks and your strategies. Good to have you with us. We'll leave it there for now. We'll be back with you shortly for market opening. From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m. only on India Today.
India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation. Catch India's magnificent rally and make it a part of your booming portfolio. Look out for the next set of multi-baggers at BTTV.
Democracy in India is happening right now.
From protests and anger on the street of the capital to deadlock in the parliament. Neat firestorm has taken the country by storm. But there seems to be a division in the voices in the opposition. After 3-hour dharna outside Prime Minister House, leader of opposition Rahul Gandhi stepped up the offensive. Wearing a black armband in solidarity with students, he demanded Education Minister's resignation, accountability for the police brutality against students, and an apology from Prime Minister Modi.
Dharmendra Pradhan, who has failed as an education minister, who is known to be corrupt, should be relieved of his duties. 100% legitimate demand, nothing wrong with it.
But Akhilesh Yadav is striking a different note. The SP chief says NEET is bigger than politics.
ये मुद्दा कांग्रेस समाजवादी पार्टी बीजेपी का नहीं है, ये मुद्दा युवाओं और छात्र नौजवानों का है। छात्रों की नहीं सुनी जाएगी तो सड़कों पे आएंगे। क्या प्रधानमंत्री स्टेटमेंट नहीं दे सकते हैं? युवाओं के लिए आप बाहर बोल सकते हैं, सदन में क्यों नहीं बोल सकते हैं आप?
On the streets, the CJP is refusing to blink. The government has reached out again, but the protesters rejected talks at Nadda's residence. And their red lines remain unchanged. Pradhan must resign.
What happens if Dharmendra Pradhan doesn't resign? The protests will continue. The protest is going larger. There are protests across the country, and this protest is going to become bigger and bigger.
But from his hospital bed, Sonam Wangchuk is signalling a different path. In a letter to government, he said don't act against protesters. Calling the Sansad March peaceful, he says give an assurance of fast continues. Intriguingly, Wangchuk's letter does not mention Pradhan's resignation as a prerequisite to break his fast.
आश्वासन अगर जल्द मिल जाए तो मैं आप सबके और जो नेतागण यहाँ पर आए उनकी बातों का इज्जत करते हुए अनशन आज ही तोड़ूंगा.
Even though his wife Gitanjali insists that stay is a core demand, but his wife in a conversation with India Today dismissed Rahul Gandhi's protests, saying it lacked sincerity and that the movement must be above politics.
I would like this movement to be above politics. As was evident from the protest outside PM's house, everybody knows that it lacked sincerity. You know, it would have been more sincere if it had been done by joining hands at Jantar Mantar.
For the government, the stance is clear that they want dialogue. 4 voices, different demands, but one neat firestorm. The government says its doors are open for dialogue, but with neither side willing to blink, the streets remain restless and parliament remains deadlocked.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m.
Only
only on India Today.
India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation. Catch India's magnificent rally and make it a part of your booming portfolio. Look out for the next set of multi-baggers at BTTV.
Four days, 4 washouts, one question. Can Parliament debate the country's biggest education controversy, or will politics drown out the issue itself? Day 4 of the monsoon session ended exactly where it began, with chaos. Both houses were repeatedly adjourned as the centre and the opposition dug in over the NEET controversy.
सभा की कार्यवाही कल शुक्रवार प्रातः 11 बजे तक के लिए स्थगित की जाती है. चर्चा होना चाहिए.
Parliamentary Affairs Minister Kiran Rijiju started by reiterating that the government is ready to debate NEET, paper leaks and every related issue on any day and for as long as the opposition wanted, only if the opposition stopped attaching preconditions to the debate.
हमारे छात्राओं का भविष्य के साथ कोई भी खिलवाड़ बर्दाश्त नहीं किया जाएगा. भविष्य हमारे युवा का अच्छा हो, इसके लिए चर्चा होना जरूरी है. हम विपक्ष से फिर से हाथ जोड़ के हम अनुरोध करना चाहते हैं कि आप भी तय कीजिए कब चर्चा शुरू करना है. हम तैयार हैं, लेकिन आप कंडीशन लगा करके बहाना मत बनाइए, क्योंकि अगर आप कंडीशन लगाता है, आप एक्सक्यूज देते हैं, तो इसका मतलब सब समझ जाते हैं कि आप चर्चा से भागना चाहते हैं. हमारी सरकारें, आपकी सरकारें.
Union Minister JP Nadda escalated the attack, accusing the opposition of deliberately paralysing Parliament. His charge? The government accepted the demand for a NEET debate, but the opposition has now shifted the goalposts.
विपक्ष का व्यवहार बहुत ही गैर जिम्मेदाराना है, बहुत ही गैर जिम्मेदाराना है। ये न चर्चा चाहते हैं, न ही हाउस को चलने देना चाहते हैं। पहले इन्होंने कहा कि आप पेपर लीक पर चर्चा करो और सरकार ने कहा कि हम नीट पर चर्चा करेंगे, हर विषयों पर चर्चा करेंगे, उसके लिए हम तैयार हैं।
The opposition, however, stood its ground. Leader of the opposition, Mallikarjun Kharge, made it clear that any debate can only follow accountability, insisting the education minister must resign first.
जो इस्तीफा हम पूछ रहे हैं और एजुकेशन मिनिस्टर इस्तीफा देना चाहिए और लाखों हजारों लोग आज रास्ते पे गिरे हुए हैं, लाठीचार्ज हो गई है और बहुत से हॉस्पिटल्स में हैं और उनके माँ बाप परेशान हैं। इसीलिए मैं आपसे विनती करता हूँ उनका रेजिग्नेशन पहला लीजिए, डिस्कशन शुरू कीजिए, हम तैयार हैं डिस्कशन के लिए। इस्तीफा जरूर होना चाहिए और जब तक आप इस्तीफा नहीं दिलाएंगे डिस्कशन शुरू।
And so, the political deadlock only deepens. Not just within the walls of the temple of democracy, but also outside. The government says, debate first. The opposition says, resignation first. Between competing political red lines, Parliament remains stalled, while the debate over the future of India's students is yet to even begin.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m. only on India Today.
India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation. Catch India's magnificent rally and make it a part of your booming portfolio. Look out for the next set of multi-baggers at BTTV.
Protesters are raging in the heart of the national capital. Parliament is paralyzed and opposition has smelt blood. Amidst the spiraling situation, Prime Minister Modi has sent a big message to the youth. Prime Minister Modi has sought to assure the protesting students. While stating that the future of the youth was a priority for him, Modi vowed that stringent punishment will be given out to all those responsible. The Prime Minister also said that fast-track courts are being set up to try paper leak case accused. Senior Modi ministers reassured students that the government has their best interests in mind and appealed for talks.
At the level of the Prime Minister, a response has been given. In fact, much before today's announcement of setting up fast-track courts and assuring the punishments will be handed over to those people who violated the sacredness of an exam by leaking the papers, by buying papers, by selling papers.
The government is ready for talks whenever you want, at whichever hour of the day, and for as much length of time that you wish to. The talks can be held at the residence of Shri Nadda because the talks will be led by the Health Minister of India and the senior leader Shri Nadda ji, and of course I will be accompanying him. The talks could be held at Shri Nadda ji's residence or at an office, whichever of the two you wish to.
But the outreach has failed to cool tempers in opposition camp. CJP rejected Prime Minister's appeal and vowed that they won't accept anything other than Education Minister Dharmendra Pradhan's resignation. Rahul Gandhi too did not buy into Modi's appeal. The leader of opposition accused Modi directly of destroying the education system and even shielding the accused. More importantly, Rahul reiterated his core demand, which is sacking of Dharmendra Pradhan.
He takes credit for every achievement of this nation, which is the achievement of our youth and the achievement of our people. He takes credit, doesn't it? Doesn't he? So now's the time for him to take responsibility. Now is the time for him to take responsibility for his actions. It is him who is getting people beaten up. Under his nose, there are 152 papers have leaked in 10 years. 152 papers have leaked, not one conviction, zero convictions. Zero convictions. Under whose nose? Who's responsible?
Will government's olive branch be enough to contain the raging protests?
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m. only on India Today.
India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation. Catch India's magnificent rally and make it a part of your booming portfolio. Look out for the next.
Look, this investment guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise, consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange.
Good morning, you're with us here on Business Today. I'm Abha Bakaya. Here are the top stories at this hour. Trump tariffs are back. Fresh duties of up to 12.5% slapped on 60 countries on forced labor charges. India enters the lower slab of 10%. Key export sectors like textile, gems, jewelry all may take a hit. The government removes a major hurdle ahead of the proposed US trade agreement. E-commerce players like Amazon and Flipkart now allowed to buy from India and sell directly abroad. Government says the change is aimed at boosting exports. $800 billion lost in market cap. That's the kind of sell-off in the 7 major tech stocks on Wall Street. And overnight, investors are nervous of AI spend even as Brent crosses $100 a barrel overnight. Indigo speaks out against reported plans to allow airport operators like Adani Group to enter airline businesses. Say it will be a massive conflict of interest. India's biggest airline flew into losses in Q1 FY27. And markets to react to Infosys earnings today. The IT major posted a 12% rise in Q1 profit, trimmed the upper end of its FY27 revenue growth guidance to 3%, and named Ashish Kumar Dash as CEO designate. Investors will also track Q1 earnings from NTPC, Bank of Baroda and Tata Consumer. Look at the currency this morning. The rupee opening at 96.63 versus a previous close of 96.57. So still trading at those record lows. So remember the setup this morning, not very encouraging with tariffs back, Brent above 100, global markets collapsing, the rupee at near record lows, and bond yields once again strengthening. So all in all, it's looking like we've regressed back to the scenario that we were in a few months ago when the war first broke out. Mayuresh Joshi joining us this morning. Mayuresh, is not looking too encouraging this morning.
Morning, Ava. Oh, absolutely not. And I think everything's come together in a flurry. Geopolitics is escalating as we speak. Trump tariffs in regulation. Tech earnings have disappointed in the US. And therefore, I think a combination of all these factors is pushing the 10-year US yield to record highs at 4.7%. Now trying to pencil and brace in that if this continues, inflation will be higher. And maybe the Fed has to take some call before the end of this calendar year, which was not expected. What do the central bankers do in a scenario if inflationary pressures start building up is a concern for the markets as well.
All right, so keeping the markets under pressure, and it looks like in pre-open we're down about 200 points already. 23666 is what we're looking at this morning. Just to bring you up to speed with what Trump is now saying, the administration is rebuilding its global tariff wall, announcing new duties of 10% to 12.5% on imports from 60 countries. The interim tariffs imposed after the U.S. Supreme Court held Trump's Liberation Day tariffs illegal, and those expire today. The new tariffs, based on investigations of forced labor, ensure a seamless transition. India has been placed in the lower 10% bracket because of efforts against forced labor, and the tariffs are lower than the 12.5% rate that was proposed in June. The duties take effect today, changing the legal route while largely retaining the existing tariff floor. White House arguing that weak enforcement abroad gives foreign producers an unfair cost advantage, while Section 301 offers firmer legal ground after the Supreme Court struck down the earlier reciprocal tariffs. Some exemptions include oil and gas, fertilizer, and certain food products and goods that are already covered by Section 232 tariffs, including auto, steel, aluminium, and copper. For India, the pressure is likely to remain concentrated on non-exempt US-facing exports such as textiles, gems, jewelry, engineering goods, leather products, and selected electronics and chemicals. Textiles are also likely to face tariffs from the 1st of September. Let me see if Surbhi is with us to run through this in more detail. Surbhi, take us through. It's really been a nightmare for businesses trying to keep track of what is going on with the tariff regime as it continues to be in a state of flux, but Trump ensuring that the pressure remains.
Yes, so there was some expectation that the US would come out with fresh tariffs because the tariffs expire 9:31 a.m. IST today. Although there was also hope that, there would be some kind of a relief, and with the ongoing discussions on the trade deal, there could be some kind of a reprieve, but the US has gone ahead with the tariff. The only silver lining is that India continues to have a 10% tariff compared to several other countries where it's a 12.5% tariff. Now industry is also waiting to see how the other, investigation by the USTR on excess manufacturing capacity goes through. It's expected that in the next 2-3 months, this investigation will also go through, and we'll have to see what kind of tariffs they go. One key thing in the new tariffs is that there's a bit of an exemption for goods shipped from August 24 to August 28. So goods shipped during this time to the US will not face the 10% tariff. But for the rest of it, it continues to be a 10% tariff. India is hoping that in the trade deal which is being negotiated, this tariff will also be pulled back, and there'll be, better market access and more competitive tariffs for India. So for now, it's still wait and watch on how this goes.
All right. Coming down to market opening now, 2-3 minutes to go. I just want to take you through the overnight setup as well. Look at global markets in Asia this morning and look at the weakness that's set in. As we mentioned, crude continues to be above 100 and the rupee close to record lows. And this morning, we are looking at a 200-point cut in pre-open. Just 2 minutes to go for market opening now. That's the US action overnight. Look at the cuts coming in on NASDAQ, S&P, NASDAQ down close to 2%, and that's on the back of tech. And that sentiment translating into Asia this morning as well. So that's the setup for trade, and I mean, remember, it is the AI crash that everyone has been seen coming. We don't know if this is it yet, but the Kospi this morning down over 4%, Nikkei down 2.5%. The cuts are deep right now. Mayuresh, of course, we'll also be tracking earnings. There are a whole host to discuss, but Infi or Indigo, which one should we lead with right now?
Both have been disappointing, and for obvious reasons. I think Infosys revenue below par, margins have been stable. However, I think the expectations in terms of earnings delivery, largely with TCVs, was in constant terms reasonable to say the least. The revenue guidance cut at the higher end from 3.5% to 3% is something that will not go well. And again, I think the tech sell-off that is happening in the US and the outlook thereof looking a little bit dismal as far as Infi's earnings are concerned. For Indigo, I think the input cost definitely paid a price because with input cost shooting higher, which could not get compensated in higher fares going through because they were capped to a certain extent. I think that definitely played down on the bottom line for Indigo. And therefore, I think how things evolve as far as crude is concerned will definitely keep on playing its part because they still form 40 to 45% of the airline's input cost.
All right, those are the two key earnings to watch out for. And remember, Indigo also with Brent at those levels continues to be under pressure of external factors as well. Let me also bring up, really some of the other news that we're going to be tracking on aviation. There's news coming in on Adani as well. They have denied the airline launch reports, saying that there has been no plan to enter the airline business, and those reports are baseless. This is coming on the back of comments from Indigo saying it would be detrimental to have airline operators, airport operators entering the aviation business. And this is an Adani comment coming in saying they're not evaluating any airline proposal. They've rejected market rumors on these plans, saying there's absolutely no plan to enter the airline business. So not sure where that rumor stemmed from, with the Indigo CEO reacting to it, but Adani Enterprises coming out and saying that they have no plans and rejecting all rumors altogether, calling them baseless at this point of time. Market opening on your screen. Let's pull up some of those opening ticks. 200 points down as anticipated this morning. And let's take a look at where the cuts are coming in from. Let's pull up IT. Let's take a look at Infosys. Let's take a look at oil-related counters as well. The Nifty Bank is down 0.7%, so pressure clearly coming in there as well. Infi is very much in the red. Interglobe is also down in the red. Shadowfax on the back of big bulk deals right now. That's why it's down about 4% this morning. Infi down 2% post the numbers right now. If I could just get a look at the overall market setup, and if we could see the individual gainers and losers so that our viewers get a sense of the overall composition of the market right now. If I can pull that up quickly for my viewers and take a look. On the upside, we've got small gains coming in, few select stocks. Ciplas are looking good this morning, 2.5. I'll just check if that's an earnings related reaction coming in. But let's take a look on the downside and on where the pressure is. We've got let's just pull that up for you. We've got Heroes, Zomato, Infi on the downside. In fact, interesting to see Heroes also down about 2%. It was on the radar of some of our technical analysts this morning. Bharti, Shriram Finance, the financials, banks, IT, led by Infi in particular, are where we're seeing a cut coming in this morning. Dr. Reddy's continues to see weakness post the semaglutide delay. Indocin continues to cool off as well. JSW Metals also on the downside right now. So it's not actually a full-on sell-off. We're actually, I would say, advanced decline, and I'll just pull that up in a minute, is broadly skewed towards the declines, but I think the cuts are deep on a few handful of names. The VIX is up about 5% right now, so VIX is also spiking as we speak. Remember, West Asia tensions, heightened crude, these are the elements that are playing into markets, and of course Trump tariffs and the rupee. Let's also pull up the exporters, take a look at what's happening there and whether they're reacting to all the news that's come in today or whether it's now par for the course. So gems and jewelry, for example, other exporters, and take a look at some of those stocks in the broader markets as well, and what's really causing markets to get nervous this morning. We'll take a look at some of those reactions coming in. Marginal cuts, otherwise it's pretty steady for now, so not seeing a knee-jerk reaction on that front. It's the banks and financials, Mayuresh, where the pressure's coming in. Markets are clearly finding, weakness. They're cautious, and the first area to see that we're going to see buckle is always the banks and financials.
Oh, absolutely. They have the largest weightage as far as the index is concerned, and the largest ownership is well as far as FIs are concerned. And therefore, if you probably dissect the numbers, I think the large private sector banks specifically had a okay set of numbers. I think that were expected to be softish. Axis, to say the least, disappointed on the downside. HDFC Bank was always expected to be soft. ICICI Bank, among the large names, turned out to be a outlier of sorts with better set of numbers coming through. But what the street is a little perturbed is with the large bases that they operate out of. Where is that deposit growth going to come from over the next few quarters to suffice the credit deposit ratios? And if credit lending has it grown excessively in unsecured areas, which might probably then make us believe that if that probably happens, and if there is some element of volatility as far as macros are concerned, does that reflect in higher GNPs, NPs, and slippages going down the line? And therefore, I think the mid-private sector banks, in my opinion, have delivered a very strong set of numbers. Again, a few of them have disappointed out there, but I think relatively, mid-private sector banks relatively better placed. The more surprising aspects would be, Abha, was that the NBFCs actually delivered quite well. So I think a whole host of NBFCs have actually delivered a very strong set of numbers, which was very, very surprising within the BFSI space.
Absolutely. Okay, we've got a whole host of stocks in focus. We talked about Infy, Indigo, Shriram, and banks. Swiggy is also taking a bit of a cut coming in. And let me just pull that one up for you as well. And from the e-commerce players, Shadowfax, as I mentioned, is on the back of a bulk deal. But Swiggy, also the board has approved a 49.5% cap on aggregate foreign ownership. That's the news in the stock, but it's down about 4.5% today. That's the latest on Swiggy, and I'll pull up Shadowfax for you as well, because that's also seeing a cut in trade, but that is for other reasons this morning. 5-6% cut coming in. Again, it's on the back of a block deal right now. So a couple of those seeing some sharp moves in case you're wondering at this point of time. Now, the government has relaxed its tightly controlled e-commerce policy, clearing one of the big hurdles ahead of the proposed US trade deal. E-commerce giants like Amazon and Walmart-owned Flipkart are now allowed to purchase Indian-made goods directly from sellers for export. Until now, these companies were largely restricted to operating as marketplaces, connecting independent buyers and sellers. The change applies only to exports, meaning that existing restrictions governing their domestic e-commerce operations will remain in place. The government says the new framework will now give Indian manufacturers and smaller businesses easier access to customers across global markets. Amazon, which has sought this relaxation for months, believes the move will support its target of achieving $80 billion in cumulative exports from India by 2030. However, trader organizations are also warning that strict monitoring will be essential to ensure the export relaxation is not misused to gain greater control over India's domestic supply chains. For more on this, let's go across to Palak. Palak, what has the government changed and why is this significant?
Abha, this is a targeted liberalization of India's FDI policy. Until now, foreign e-commerce companies such as Amazon and Flipkart could only operate as marketplaces. They could not own inventory, which caused them challenges in margins and everything in between the supply chain. The government has now allowed foreign firms to procure products directly from Indian manufacturers and sellers only for exports, while the domestic restrictions remain unchanged. The objective is to make it easier for Indian MSMEs and manufacturers to access global markets without opening up the domestic inventory model for e-commerce.
All right. So why is this a big win for Amazon, and any concerns on this in the domestic market?
So Amazon has been pushing for this change for months because it allows the company to build a far more integrated export supply chain that would make Indian exporters more competitive internationally and also support Amazon's ambitious export targets from India, as you mentioned, $80 billion. However, the government has been careful on this relaxation. Trader bodies are concerned about possible misuse and whether inventory meant for exports could indirectly influence the domestic market. The key challenge for policymakers will be ensuring strict compliance and maintaining a clear separation between export inventory and domestic operations. If implemented well, it could definitely boost exports without diluting India's existing safeguards for some retailers.
Okay. Yeah. All right, Palak, thanks so much for joining us on that. Okay, a few other stocks. I think we've got Max India spiking. We've got Hyrocare also spiking this morning. Let's pull up some of those for you just to show you in the broader markets what's at play. But Mayuresh, what would you suggest as a strategy right now in the broader markets? We've been talking about stock-specific trades. We're looking at some of these bright spots even this morning. Would you consider perhaps, suggesting that we focus our attention there, or would you just remain risk-off and stay on the sidelines for now?
No, so I think we have not added anything very aggressively, honestly, over the last couple of weeks, 3 weeks, 4 weeks. And therefore, I think the existing positions stay on our portfolios, and we are monitoring the situation every passing day. Our sense is that certain pockets, as we've always believed, pharma should relatively hold up. Domestic-oriented infra/manufacturing companies selectively should hold up as far as earnings are concerned. Select mid-private sector banks, select NBFCs, which have obviously reported a decent set of numbers, should continue holding up as far as earnings is concerned. And very, very niche specialty chemicals, because that is where I think the play is turning. You might see some volatility in earnings for this quarter or next. But as a structural play, I think some of these niche specialty chemical plays will be back in action. So I think these 4-5 pockets is somewhere where we believe the strength lies, both from an earnings perspective and from a resilience perspective as far as the macro and the micro outlook is concerned.
All right. Now, Samsung has unveiled its latest generation of foldable smartphones, the Galaxy Z Fold 7 and Galaxy Z Flip 7, betting big on AI-powered features and a slimmer design to strengthen its leadership in the premium smartphone segment. With reports suggesting Apple could enter the foldable market, competition is expected to intensify. As AI-driven memory costs continue to rise, how is Samsung now preparing to defend its leadership? Business Today's Aishwarya Panda speaks with Akshay Gupta, Director MX Business at Samsung India.
From a market perspective, we have been seeing the RAM prices going up and shortage due to the AI demand. How is Samsung India managing the component inflation, especially for a foldable phone, which requires premium display and mechanical changes? Yeah.
So, this is an industry-wide challenge that everyone is facing right now, and so are we. Having said that, we at Samsung believe in democratizing technology, and even in this difficult scenario, we are trying to mitigate as much impact as possible on the consumers. And for the new foldable devices, we will have enhanced affordability options for our consumers, and we will try and ensure that these devices remain as accessible as possible for our consumers.
So Samsung has been in the foldable market for over 8 years now, right? So what advantages do you believe Samsung have if a new foldable competitor like Apple comes into the market?
Competition is always good for the industry because what it is able to do is bring in more consumers. Having said that, our 8 years, the biggest learning, what I would say we have is listening to the consumers, because consumers are the real deciding factor. They will decide who they are choosing or why they are choosing. And over the past 8 years, what we have understood is consumers don't want to make a compromise. They would buy a foldable, but they will never compromise on an experience. They expect a flagship level experience, and that is what I think we are now very, very close to an bar type flagship experience with the Galaxy Fold 8 Ultra, whether it is the top of the line camera system, whether it is the display brightness or the size or the battery or the fast charging, everything is flagship level, and customers don't have to make any compromises.
All right, markets are still down at about 23,700, but like I said, the fall seems to be contained for the moment. Let's see how things continue towards the latter half of trade. We'll be back with you at 3 p.m. to take you through market closing. Mayuresh, thanks so much for joining us, and keeping an eye on earnings, keeping an eye on the currency, as well as what we do beyond 23,700. That's all from us for now. Thanks for watching.
presented by National Stock Exchange.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Hello and welcome. You're watching Business Today Television. I am Sakshi Batra and this is our special focused edition on mutual funds. अब आपने हमेशा सुना है लोग कहते हैं म्यूचुअल फंड सही है, but what exactly is a mutual fund? Do mutual funds only invest in stock markets, and is there a lot of money needed to start off your investments in mutual funds, or can you start off with as little as 500 rupees as well? And with so many options from equity, debt, hybrid, index, ELSS, which mutual fund option is actually right for you? If those are the questions that you always had in your mind, then this is the show that will help you understand everything that you need to know about kickstarting your mutual fund journey. And if you've always wanted to invest, did not know which mutual fund should you be choosing, we will also help you understand the strategies of identifying the right kind of mutual fund schemes for yourself as well in a simple possible way. We will also decode for you what are the different types of mutual funds available, where should you be really looking at getting the best options with the cheapest expense ratio. All of those things will be discussed on this special edition, Mutual Fund Ka Funda. So we'll start off by inviting our guest on board. We have Ankit Tikmani, the CIO for PMS Jainam, all joining in on the program with us. Hi Ankit, warm welcome. Good morning. First up, for all our viewers who are just joining in afresh, we have started this new series on our personal finance coverage every day at 10:30. Today's topic is mutual funds and the basics of mutual funds. First up, give our viewers a basic understanding of why mutual funds are seen as the best way of growing wealth.
Yeah. So basically, mutual funds have, last couple of years have not given that kind of returns. But historically, if you have seen, it has delivered, a multi-cap fund, a flexi-cap fund has delivered a return of 12 to 14% kind of return. So hence, I think mutual funds is a good, instrument to invest, because as a individual retail investor, it becomes very difficult to track stocks and build the portfolio. So rather, it's best to give it to a perfectionist and give the money to them. So that's why we feel that MF is a good instrument. Yeah.
So, Ankit, also help our viewers understand, when one starts off their journey in mutual funds, what is it that they should be really looking at? Many people still have a lot of confusion. They believe the companies that, have a lot of mutual fund schemes to offer are the places where they invest in. So people look at more brand names, whether I'm going for an ICICI mutual fund or an SBI or an HDFC Axis. They do not understand that much that you are actually not investing in the company, but those companies are providing you a lot of schemes that you can invest in. So first up, break that myth for all our viewers. How should one be really looking at, a mutual fund to start off with? Is it important to look at the brand name, or is it important to look at the scheme?
So basically, the type of mutual fund an investor should choose totally depends on the three primary factors. Its financial goals. What is the financial goal of that investor? What is the investment horizon? And what is the risk appetite? What is the drawdown, that investor can take? So there is no single best mutual fund for everyone, nor any scheme. So I'll just elaborate. Example, large caps equity schemes would be suitable for conservative equity investors seeking relatively stable long-term growth. Flexi cap would be appropriate for investors who wants to have a diversified portfolio with the fund manager having the flexibility to invest across market capitalizations. Mid cap and small cap is better suited for investors with higher risk appetite and a long investment horizon, typically 7 to 8 years, as these funds can be very volatile. I'll give you an example. Last couple of years, index have gone nowhere, but we have seen a lot of small caps and mid cap companies have corrected. So it so happens that if you take it from peak to through, I mean, it is a like 3 to 4 year cycle. So even if someone has invested at the top of the cycle at one of the schemes managing small cap and mid cap fund, so they need time to exit. So that is why unless India's growing economy, small cap, mid cap companies are doing well, but then the horizon has to be 7 to 8 years because they are very volatile in nature. Similarly, index funds and ETFs are ideal for investors seeking low cost passive exposure to the broader market without relying on active fund management. Hybrid funds is suitable for investors looking for a balance between equity and debt with lower volatility than pure equity funds. Now, hybrid funds, I'll explain this with an analogy, with a cricket analogy. In an innings, in a cricket batting innings, Dravid gives stability to the innings, and Sehwag takes care of the the scorecard, basically hitting the runs and everything. So similarly, a person, an investor who is more who is like who wants to take the benefit of both. For them, hybrid instruments are essential. For debt mutual funds, they are appropriate for capital preservation, regular income, or short to medium term goals. So investors should understand interest rate and credit risk.
Ankit, the question that I want to ask you is that simply first help our viewers understand. Usually people think that mutual funds is equal to stocks. First, help us understand whether this is a big myth there, and investors usually believe that mutual funds are risky. Are there also options where one can minimize the risk and yet take the benefit of mutual funds offering better set of returns than some of the very common schemes that investors invest in, like PPF or an NPS, or they go for some government schemes? Why does this option of mutual fund always equates to a lot of risk that people have to take? And how would you advise investors what to think about this?
So rather, I'll say that mutual fund is one of the less riskier asset compared to equities, because he has a equity. You as a mutual fund manager, they have got a team, investment team, they have got sell-side analysts to assist them. So they can have 20, 30, 40 companies in their coverage. It becomes very difficult for a retail investor to have that kind of diversified portfolio. At max, they can invest in 3 or 4 companies, and also entry and exit is very important. For them to take a call on which instrument in equity to buy and when to enter, when to exit becomes a very tough task. So that is why we prefer mutual fund scores over direct equities in that sense. Now, depending upon the purpose of the investment, whether it is retirement, buying a house, children's education, emergency corporate, etc., the investor can invest in that kind of scheme. For example, now I'll again explain this with an example. Now, Diwali is around the corner. Now, let's assume there is a trader, not stock trader, but a trader, and a businessman, who will be requiring some working capital needs to stock before the Diwali, let's assume. So he should not invest, he or she should not invest in equity, because he'll be reading the funds 2 months down the line. So for them, that will come to a play. So it totally depends upon where that person is thinking, what state of life he is. But otherwise, mutual funds are much more simpler, and it's efficient compared to direct equities. That is what our sense is.
Okay. Let me also try and understand from you, Ankit, when people start out first, somebody who has never invested in mutual funds before, what are the categories you advise them to invest in?
See, it is not about first investment or second investment or third investment. Let's assume he is or she is at 20 to 22 years old, and he has that kind of money flow. He having that kind of money flow, so he can take that risk of equity. For another person who is sitting at 55 and 60, he's already retired and he wants an ideal steady state inflows. Then for them the debt funds is play a role. So at what stage of the life you are, whether you are a trader, let's assume one more example I'd like to give to explain the viewers. Let's assume I am into stock market. Let's assume, okay, I'm getting my bread and butter to the stock market now, and let's assume the market, God forbid it doesn't happen, but let's assume that Nifty falls by 30%, 40%, and I have already invested, say, in equities comes. So that way, it is not diversifying. Rather, it is like consolidating my risk. So for me, it makes sense to invest in debt funds. So it totally depends, upon what age he is, what is his income. One more example I like to give. Let's assume I'm a jeweler. I'm already having 50 kgs or 30 kgs, 50 kgs kind of gold in my inventory, because that is how the business functions. Right? Whether it is B2B or B2C. Now I'll typically not invest in a commodity and mutual fund scheme that has got exposure to commodity, because God forbid again if the gold prices comes down, I'll take a inventory hit as well as take a hit on the MF scheme that is having more exposure to the gold thing. So it is totally dependent upon that particular person. What is his risk profile? That way. Yeah.
Okay. Let's also try and understand, a lot of people usually think about ELSS as the best way to invest in mutual funds because it offers investment and tax saving opportunities as well. But how would you really look at the ELSS option at a time when 90% or more people have already shifted to the new tax regime? Does it really make sense to look at the ELSS options?
So again, it depends upon what bracket you fall in, whether you fall in the 30% bracket. What is your so this question has got more to do with the taxation part, again individualistic thing. Let's assume I'm sitting at 20 lakhs package, then it doesn't make sense for me to go through that ELSS route, because anyways the government has increased the tax bill. Now let's assume I'm sitting at 50 lakhs and at a higher package. Then at that point of time, maybe I would look for an old regime and I'll take ELSS into that consideration. So that again is very individualistic. There are a lot of portals on the website. They assist you. Investor can take guidance from their CA. There are a lot of personal finance programs like what we are conducting. So maybe that should be helpful for them to take a call on that part.
Okay, let me also try and understand, when it comes to a lot of themes, people usually get attracted with when they say a particular thematic or a theme is working well in the stock markets. People usually go for those. Say for instance, defense, infrastructure, power space. Whenever we see a strong run up in a particular theme in the stock markets, there are a lot of new fund offers that are announced by a lot of mutual fund companies, and therefore people think that those are the right times to invest in those themes. When should a thematic fund become a part of your portfolio?
See, historically, more often than not, so it's not a rule, but it's a guideline that, and what we have seen being associated with the equity markets last 20-25 years. Whenever a new sectoral scheme comes, most often we have seen in the 2000 cycles, we have seen that there were a lot of IT schemes launched, and we had seen post 2001, 2002, this NAVs coming at 10 rupees becoming 2 rupees, 3 rupees. So it so happens that it is a human psychology. It's got more to do with behavioral finance. As the theme is more on the limelight, it becomes very easy for the investors to put money. It becomes very easy for the mutual fund, mutual funds to launch schemes in that particular schemes. So we should be very selective in that sense. If something is in limelight, that doesn't guarantee that it will generate a return from there itself. Rather, we should think from a pinch of salt. So that has been my experience. For the viewers, I would like to say that we should not blindly invest in a sectoral scheme, especially when the sector has been very hot for last 4-5 years. Because what we have seen is that after every 4-5 years or 6 years, there is sectoral rotation that happens, and God forbid if someone gets stuck, then there is a problem. So that's my opinion to the viewers.
Okay. Also trying to understand from you, what is the right mix between market cap based funds, say large caps, mid caps, small cap funds? What should be the ratio there? Then there are these multi-cap funds, that we look at as well. So how should one be deciding what is the right way of approaching or having the best diversification in market cap based funds in the portfolios?
So best and the simplest way is to invest through flexi cap schemes. Like the flexi cap schemes, more than 65% has to be invested in the equity schemes, and it is a good blend or mix of small cap, mid cap, and large cap companies. If the investor doesn't have to take a call on the which part of the segment that market will move. Let's assume it so happens that every 1.5 2 years, sometimes large cap outperforms the mid cap, small cap companies. Sometimes mid cap, small cap companies outperform the large cap. So if the investor is able to read that cycle well, then he can do a direct investment in mid cap and small cap companies. And if he doesn't want to take a risk, then he can invest in flexi cap. And the third thing is that let's assume that he doesn't want to take he or she is of the opinion that Nifty will give, let's assume 12, 13, 14 kind of CAGR kind of return, and he doesn't want to take a bet on the fund manager's active calls. Then there are ETFs also, where index-based funds also where the investors can invest. So it totally depends actually.
Okay. Also trying to understand, when it comes to selecting the mutual funds or selecting the mutual fund, companies or houses as well. What are the top 2 or 3 things that you advise clients to look at when they go for a fund? And, if you could also explain, there is always a confusion between whether you should go for direct or for regular. If you could help us understand, how should one be looking at those options?
So when deciding, in which mutual fund to investors should evaluate, a combination of quantitative and qualitative factors rather than focusing only on the past returns. Because every fund manager, every scheme have their own style of investment. Some are value focused, some are growth focused. So it sometimes so happens that 2-3 years the value stock will outperform, 2-3 years, 4 years the growth stock will outperform. So immediate history should not be immediate 1 year or 3 year history return should not be construed as the future performance. So then what? Then the next question comes: if not this, then what? So we should ensure that the fund's objective aligns with the financial goals. Whether the investor is opting for wealth creation, income, tax saving, etc. Then for fund category, I have already explained, flexi cap, large cap, when to invest. Hybrid also, we have already discussed giving the Dravid and Sehwag analogy. Then we should also look at risk-adjusted returns. SEBI has started this thing, which is wonderful. Every fund house should give their risk metrics like Sharpe ratio, standard deviation. So these are some of the factors that needs to be taken care of. So ultimately the best mutual fund is not necessarily the one that has given highest recent returns, but the one that has consistently aligns with investor goals, risk tolerance, and time horizon. Some mutual funds have got this risk-taking ability, so they deliver good returns, say from 5 to 7 years perspective. But in we have seen some mutual funds. I'll not quote, but we have some mutual funds have given good returns 5 to 7 years perspective. But last 2 3 years they have not performed because in that case, if the risk appetite of the mutual fund investor is less, then maybe they should look for another. So it totally depends upon the time horizon, risk tolerance, ability, everything. The broader risk,
Okay. Time up, and we'll have to thank you, Ankit, right here. Thanks for being with us on the program and giving us all your insights there. Viewers, we'll wrap it up on that note, but we'll continue to get you market coverage on the other side of this break.
Thank you so much.
Hello and welcome. You're watching Business Today. I'm Neetu Chandra Sharma. Last quarter, Jupiter Lifeline Hospitals Limited announced major expansion plans that will significantly increase its bed capacity over the next few years. With the company set to announce its quarterly results later this month, it's a good time to take stock of its expansion plans, funding strategy, and long-term growth outlook. To discuss all of that, I have with me on the show Dr. Ankit Thakkar, Managing Director and CEO of Jupiter Lifeline Hospitals Limited. Dr. Ankit, warm welcome and thanks for taking the time out. So let me start off by asking you about your expansion plans. So what is the total capital investments that you are committing over the next 3 to 5 years? And if you can also tell us that what is the timeline for these projects?
So ever since we got listed, we have announced 4 new hospital projects, one of which we have just delivered last quarter. That is in Dombivli, we started our 500-bed hospital. Besides this, we have 3 more projects in the pipeline. We are doing one hospital in south of Pune, where we are building 500 beds. We are doing one in Meera Road in the north-western Mumbai metropolitan region, where we are doing around 300 beds. And then we are doing BKC, about 400 beds. So this entire cycle of CapEx, which is adding around 1,700 beds in capacity, is likely to cost us about 1.5 crores per bed.
So also let us know that how do you plan to fund this expansion, and how much will come through debt and how much through the internal accruals or equity. Also tell us that at what level of leverage do you begin to get cautious after about this further expansion?
So currently we are holding around 500 crores in cash, and last year we had a EBITDA of 350 crores. So if you extrapolate the earnings growth whichever way you like, and you add cash to that, then you will find that for the most part there is enough money available in the system to fund the current cycle of expansion. So by the end of 4 or 5 years, the internal accrual should pretty much match the need of capex. On the leverage front, we at the board have discussed about this, and we believe that 2 to 3 times, but no greater than 3 times of consolidated EBITDA should be our debt at the current times.
So Dr. Ankit, also help us understand, when you invest in a new hospital, what return metrics do you underwrite? And could you also take us through your IRR targets, payback period and break-even occupancy, and also tell us that how do you ensure ROCE remains protected during this rapid expansion phase?
So essentially, ROCE, in my view, if you take care of the CE, the RO eventually takes care of itself. So you have to be judicious in the capital that you employ. You have to be judicious in the investment decisions that you take. So if your land, your building, your interior projects, civil, all of that, if your acquisition cost, so to say, of the asset is within reasonable limits, then the returns eventually do pan out and take care of themselves. So as I said some time back, that our entire cycle of capex, that is 1,700 beds across 4 hospitals, is going to cost us on an average of 1.5 crores per bed, which is quite modest in the current scheme of things, where a lot of new hospitals are being built at north of 2 crores. And of course, when they are being acquired at a still higher price. So, as far as we are concerned, with a greenfield heavy model and with a conservative capex, I think we are quite responsible with the capital that we employ. And I think eventually that is what will protect the returns.
So, Ankit, what gives you that confidence that demand will absorb this additional bed capacity without putting pressure on the pricing? And are you already seeing any early signs of oversupply of margin pressure in any of your existing hospitals?
So we have decided to focus on the Western India market, and in Western India, I think it's true pretty much all over India, but we'll leave alone a few cities. But especially in Western India, I think there is a huge demand-supply gap even today. Even arguably the most important city in the country, right, Mumbai. Even here we have a huge supply gap where if you count the number of beds and you juxtapose it with the quality of beds, you will realize that about 75% of the beds in Mumbai are in the unorganized sector. So there is a huge room for expansion as far as organized and corporate healthcare is available, not just in Mumbai, but in the Western India segment. So I think we are very far from the risk of oversupply. We currently have a problem of undersupply, which we need to solve.
Okay, so how is the payer mix evolving, if I want to ask you, across insurance, cash and government schemes? And what does that mean for you and margins of the company?
So as far as Jupiter is concerned, government schemes are pretty much zero. We don't really have any government schemes. They contribute to about 1% of our revenue. Insurance contributes to roughly 55% and around 45 or whatever, 44 is cash. Over a period of is going to increase more and more penetration and eventually account for higher and higher share of the case mix for most hospitals.
So, Dr. Ankit, you are one of the doctorpreneurs, as we call it. I want to ask you, to what extent do doctor-led partnerships or revenue sharing models play a role in your expansion strategy, and how important are they in attracting and retaining the clinical talent as you scale up going forward?
So, fortunately, we have been able to create very strong and sticky medical teams in all the hospitals that we operate. And we have probably amongst the lowest medical attrition rates one can have. It is in low single digits. So we have been quite successful in attracting and retaining doctors both. Having said that, we don't really have equity partnership model for doctors. We believe that a fair compensation model is essential. You can't sustainably either underpay or overpay anybody over a long period of time. It needs to be fair and market linked. But besides compensation, the cultural aspects of the relationship and engagement definitely need to align if you are going to have long-term relationships.
So when it comes to scaling up a hospital, it takes a lot of challenges as well. So what are the biggest execution risks in your current expansion pipeline, sort of land approvals, construction timelines, funding, or any clinical staffing? So what's your view on that? How are you navigating that part?
Well, yes, the most difficult, it is in the order actually that you spoke about. The most difficult is getting the right land at the right location with the right legal title at the right cost. Too many things have to align for the land to become available and suitable for a hospital. So that is in my mind, the number one challenge. After that, of course, the regulatory hurdles in India are no secret. There are multiple licenses and multiple regulatory, hurdles that you must clear before you can start operations. So essentially, these are the two most difficult things. And then going forward into operational phase, of course, you need to ensure the right care delivery to your patients and the right engagement model for your doctors. But on that front, fortunately, there aren't too many challenges.
All right. So once this expansion cycle is complete, that all of that we are talking about, so what do you want your hospital to become? A strong Maharashtra-focused healthcare network or a broader national hospital chain? So what is there in the pipeline? If you can please tell our viewers that what are your plans going forward for the hospital's future, maybe 10 years down the line or 5 years down the line?
Yeah, so the next 5 years are pretty well defined and laid out for everyone to see. Going forward, we definitely want to continue doing what we are doing. We want to build more hospitals and provide good healthcare to newer locations. We have committed ourselves to Western India currently for the current cycle. I don't want to restrict and say only Maharashtra, but Western India is pretty much our canvas as we speak now. And we will restrict our growth in this region because we believe it is the most favorable in terms of supply deficiency and opportunity.
All right. So when your company is, all set to release its quarterly results later this month, what are the key milestones that investors should watch for over the next 12 to 18 months? And what else is your message to the investors?
Well, I think in the horizon that you mentioned, 12 to 18 months, two key things to watch out for, or at least even what I am watching out for. We have committed year to EBITDA breakeven in Dombivli, which will happen in the next 18 months also. We must meet that milestone. So that is an important milestone to meet. The other important milestone in the next, again, close to 18 months is the commissioning of the South Pune Hospital. We have set calendar year 28 launch for South of Pune. We must meet that milestone. Currently, we don't envisage any challenges on that front, but these are two key milestones that we are looking forward to delivering in the time period that you mentioned.
All right, Dr. Thakkar, thank you so much for your time and speaking with Business Today, and all the best for this quarter. We look forward speaking with you again. Thank you very much. It was a pleasure to have you on the show.
Thank you. Have a good day.
That was Dr. Ankit Thakkar, Managing Director and CEO of Jupiter Lifeline Hospitals Limited, sharing his views on the company's expansion strategy and growth outlook. We'll take a short break now. Stay tuned to Business Today for more news and analysis. Hello and welcome. You're watching Business Today. I'm Neetu Chandra Sharma, bringing you this earnings special on Dr. Reddy's. The company reported a challenging quarter with profits hit by lower lenalidomide sales and an unexpected semaglutide API issue. Even so, the company says its underlying business continues to grow in double digits. To discuss the quarter, company's growth drivers and what lies ahead, I have with me on the show M.V. Ramana, Chief Executive Officer, Global Generics, Dr. Reddy's Laboratories. Ramana, a very warm welcome to you. It's always a pleasure to have you on the show. So let me start off by asking you that your quarterly performance was impacted by the semaglutide API issue. So what exactly went wrong and what corrective measures have you taken? And when do you expect the supplies?
everyone. Welcome. You're watching Business Today Television. I'm Sakshi Batra and with me is my colleague Pawan Nahar. We are going to be focusing our attention today on the IPO space, especially the precision engineering components maker Indo-MIM, the IPO which opened in yesterday's trading session, and on day one itself we saw the entire IPO getting fully subscribed as well. Remember, the price band is fixed between 461 to 485 rupees per share, and the company has already mobilized around 1141 crores from the anchor investors. The total size is about 3,800 crore rupees, and we're now joined by the top management of the company to give us an understanding of what their vision for the company is, what are their growth trajectories going forward from here, and of course to explain to us their business model as well. Let's welcome on board Krishna Chivukula. He's the of course whole-time director and CEO of Indo-MIM. We also have P. Balasubramanian, the Vice President for Finance and CFO of Indo-MIM, joining in. A warm welcome to both of you, and thank you so much for taking the time out for this conversation. First up, congratulations to you. It's been a strong start to the IPO. On day one itself, you can clearly see the demand that's coming in from across the board in various segments for your IPO. Clearly looking like there is a lot of interest about your company. I'll start off by understanding from you, Krishna, if you can help our viewers understand Indo-MIM being seen as a global leader in metal injection molding technology. Many retail investors would not be familiar with so far. So how would you explain the MIM process in simple terms, and what makes it superior to the conventional manufacturing methods?
So I think the key thing to understand about MIM is that it's a sort of the marriage between powder metallurgy and plastic injection molding. So you're sort of mixing these metals and plastics together so that they can flow into a die. And when you can do that and enable it to flow into that die, you can cut very complex shapes of that die and then extract basically a net shape component, or very, very near net shape component, but usually net shape. Then, depending on demand, you remove the plastic, sinter it to a very high density, and then maybe you may have to do a little bit of finishing on it. But then you get a net shape component, and you can do these components at very, very high volumes, which makes it very cost effective. And by going net shape, you avoid a huge amount of machining, which is inherent in subtractive processes. So for certain categories of components, this is a very cost effective solution.
Absolutely. Mr. Balasubramanian, let me also hear from you as well. Give us an understanding of, what's your focus as a company overall, and, what are the kind of clients that you deal with at this point in time. We're also looking at the dearth of comparisons in the listed sphere for you. So give us an understanding overall, what should investors come to you for?
Madam, as far as we are concerned, what we are looking at all the time is profitable growth of the company. We look at areas where we can actually offer cost-effective solutions to the customers and still make decent enough money. We have been very successful. We adapt technologies wherein we have margins and wherein we have a unique position to play. We are a very highly technically oriented company. The solutions that we offer to the customers, no other supplier can offer, and that's why we have a unique position. As far as comparison with the listed peers go, there is a Chinese company which we have listed in the RHP as a competition. See, there is not a single company in India, or for that matter anywhere in the world, which is exactly doing what we are doing.
Okay.
So that's why we are a bit different compared to all others.
Yeah, so I also wanted to ask you, as far as the large portion of IPO is actually an offer for sale. So if you could help us out, Krishna, could you explain who are the selling shareholders and the rationale behind their stake sale, and how will the proceeds from the fresh issue be also deployed?
I think actually that would be a good question for Bala.
Bala, if you could answer that.
Yeah. I would answer that question. There are 3 shareholders who are selling. Green Meadows Investments is a company which is promoted by Krishna Jr.'s father. He is the first promoter of the company, and they have been holding the shares for about 30 years now. The company was promoted in 1996. In 2026, there is an offer for sale to the tune of 12.5% of the company. The second shareholder is Ms. Sanurada Kuduri, who is the sister of Krishna Chivukula. She is selling her stake, which is about 2.5%. And then Krishna had given a donation of 1.5% of the shares that he is holding to IIT Madras, because he is a MTech from IIT Madras, and he feels that BTech from IIT Bombay, MTech from IIT Chennai. And he feels IIT Madras has played a big role in development of him as a businessman, and as to what he is today. So as a sense of gratitude he has given to them, they are selling 50% of the donation that they received to the tune of 0.75%. These are the three shareholders who are selling. As far as the offer for sale number itself being more is concerned, it's a company which is being run by the promoters for 30 years. And there is an equity event for the first time which they are taking, and they would like to hold their holding to the tune of about 75%. This would actually take them to about 77.5%. So I think that's a comfortable point at which they would like to be there. And that's about the offer for sale. As far as the fresh issue is concerned, it's going to be 500 crores of fresh mobilization, out of which 400 crores will be for debt repayment. That will reduce the debt by about 40%. And that will also reduce the interest obligation. And further debt, if any, to be taken in future, will be taken based on the needs of the company.
Okay, sir. As you mentioned that it will retire 40% of your debt. So how is it going to impact the margins and profitability of the company in the coming years? And since you have an 6.8% of the global leadership, so how do you see this industry evolving in the coming years, and what are the best opportunities for you in the next 3 to 5 years?
We'll talk about the industry, sir. Actually, we are into three distinctive segments in the company. We do metal injection molding, we do investment casting, and we do machining. Machining we do for aerospace business, and that is growing. The industry itself is growing at an average of 40%, and it is set to grow like that for the next 4 to 5 years. In investment casting section, we are into gravity casting as well as into the vacuum casting. The vacuum casting segment is growing at an average of 50%. All the players in this industry are experiencing this growth, and we too will be no exception. Metal injection molding business is expected to grow by an average of 10% as per the industry report, and we have always outgrown the industry as far as this segment is concerned. So, the industry in which we are operating today gives us this comfort that we will be able to comfortably grow even during future.
Absolutely. Krishna, let me get a word from you. Your business caters to diverse sectors, including automotive, aerospace, defense, even medical and consumer products as well. Give us an understanding which of these segments are currently the strongest margin contributors, and how confident are you of sustaining or improving the margins from here over the next 3 to 5 years as well?
Well, I think, maybe it would be better, we can't really talk about the future, but we can talk about what segments that are we in and what's going on in those segments, and why do we believe that they will be strong segments that grow in the future. And I think the first couple for MIM is about 65% of the group, 60%. Paula mentioned, there's aerospace machining and investment castings, but we also do fine powder production and automation services. In terms of the MIM, I believe we're gonna see, the medical device industry, has continued to be a source of growth for the MIM industry in the past, and I believe that's going to continue in the future. A lot of strong demographic trends for medical components in the Western world due to just aging populations. Obviously, increased defense spending in Europe is going to have some implications for military components and systems like that. The onshoring of the consumer electronics industry, also a lot of opportunities there, and then coming in future years. There's a lot of supply chain moves that have been going on globally as well. In terms of investment casting, I think the two biggest areas that really have been showing lots of growth now and will continue in the future is the land-based gas turbines and jet engine industry, which are clearly in a very period of high demand, which is expected to continue in the future.
Madam, on the margin profile you are asking.
Absolutely.
On the margin profile, we have seen that medical business actually offers higher margin. We are into 3 to 4 different segments. We are into medical, defense, automotive, and consumer goods. And apart from this, we are also into aerospace. On the margin profile, we always find that the medical and defense businesses offer higher margin. This is what has been the history of the company. And the automotive and other segments offer comparatively a lower margin. The years in which the medical or the defense business goes up, the margin of the company as a whole will go up substantially. And the years in which other businesses go, the proportion will be less. But overall, we are always trying to be margin accretive all the time in value term. So percentages can differ based on the proportion of business.
So, sir, my next question would be that your IPO is priced at a valuation of 44 to 45 times, which may appear a pricey bet for some investors, and some investors may find it reasonable. How do you justify this valuation, and what should why should investors believe that Indo MIM should be, should deserve a premium compared to its peers and other competitors in the manufacturing business?
Sir, in the main business that we are running, which is metal injection molding business, our capacity utilization is about 40%. And we are comfortably EBITDA positive at this level. And the day on which the operating leverage kicks in, as we go to a higher level of capacity utilization, the lines up to EBITDA may more or less be same. After that, the return for the shareholders goes up substantially because there is no pro rata additional expenditure that is going to happen beyond that point. So we feel that any valuation should be seen in conjunction with the kind of capacity utilization that you have. If you are running at 80% capacity and you are having a particular margin, then you don't get the same operating leverage. So Indomim's unique position is that we are achieving all these numbers at a comparatively much lower capacity utilization. That's why it gives room for growth for the company and gives room for investors to see better position for themselves.
Krishna, I want to get a word from you as far as your overall exports revenue contribution is to your overall top line. It's a large portion there, but I want to understand in this current environment, evolving global trade dynamics, there are tariff-like situation, geopolitical uncertainties. How are customers thinking about their sourcing strategies, and are you seeing more opportunities for India as a manufacturing hub as well?
I'll tackle the second one first. I think the trend for India as a manufacturing hub just continues. Maybe there'll be a few little hiccups along the way, but I think there's a lot of forces there and they can't really be stopped. Maybe they can be slowed down, delayed, but we see a lot of activity there. When it comes to, yeah, you are right, we do export a lot, probably about 75% of what we produce in India is exported. Tariffs are a concern, and they are things that we keep an eye on. However, very early on, we made the move at the group level to establish onshore manufacturing in the United States. So, we do have the ability, if necessary, to move parts to the United States and produce onshore, if that's something our customers want. So we're not really worried about retaining the business. It's just a question of, where is this really going to end up in terms of like a tariff structure? Is the administration policy, sort of settling and consolidating, and this is, sort of how it's going to be. But I would also add that, I think we've fairly successfully weathered the tariffs last year. Our parts are very sticky. We offer a lot of value to our customers. I think they recognize that. So, we're very confident we can manage it. But obviously, we are keeping an eye on it.
Mr. Balasubramanian, yeah, sure, please.
You're also asking question about Middle East, I think. What's happening in the Iran conflict? That also was a question. See, this is not actually affecting our business in any way directly because we neither have customers nor suppliers from this region.
Okay.
Most of our shipment goes through air, and Europe is the hub for transportation of material. And our raw material supplies are either from US, Europe, or Germany, and to some extent from China. So right now, we have not seen any impact of this on our business.
Okay. Krishna, if you could also highlight, when we talk about your next 3 to 5 years horizon, what are going to be your biggest growth drivers, and what is going to be on top of your radar? Is it going to be penetration with existing customers? Is it going to be newer geographies or new product categories, expansion into new end user industries? What exactly are you going to be focusing on, and how are you looking at your growth trajectory from current levels?
I think what we have in the DRHRP is very reasonable and a very strong growth trajectory. Once again, I think it's about the markets that we're in and where those going and what our history is. That's going to be the best predictor of where we're going to go. So I really can't get into too many more specifics other than what's the DRHP, excuse me. But again, we're very involved in the land-based gas turbine industry, and when you look at that market, it is a $55 or $50 billion market that's growing very rapidly right now, primarily from AI data centers and a lot of other requirements which are scaling, which require land-based gas turbines. Again, jet engines and the aerospace industry in general is doing very well historically, and driven primarily Southeast Asian and Middle Eastern demand and Northeast Asian demand. And that's something which is expected to continue for quite some time. Metal injection molding and the MIM industry, a lot of interesting developments historically, growing at 8% to 10% a year. We expect that to continue. We have a company have always historically done well and generally outpaced industry growth. So I think, once again, we should really look at what our past performance is. And I think, that's sort of where we are, in our opinion.
All right. I wish you both all the very best, and thank you so much for taking the time out for speaking with us. All the very best for this IPO, and of course, we will catch up with you once this listing also happens. I wish you all the very best, and of course, on the quarterlies, we'll keep on speaking with you as and when we get to see your earnings as well. Thank you so much for your time.
Thank you both of you. Thank you very much.
Thank you so much. Right, we'll also move forward to try and understand viewers. We've heard from the management what their core focus is, why are they so confident about, looking at higher premium valuations as well. Pawan asked that question, and they're looking at constantly that, how they have a unique moat here, something that none of the companies are doing, and even a lot of global companies are not doing what they're doing at this point in time. And they're betting big on various industries at large as well. But Pawan, what are the top brokerage houses really saying about this IPO? We've also already seen a big start on day one.
So Sakshi, as the all details we are displaying on the screen. So what brokerage firms are saying, they are suggesting to subscribe this IPO for a long-term view. And they are citing reasons like the company is the market leader in their business. They have a very diversified, business and sectors they are available in. Besides that, the financials have been very strong. The growth trajectory is very good, and it is a beneficiary of China plus one, the move that the world is seeing, and the company will be retiring its debt, so the margin profile is likely to be improved. And as we saw, the management is quite confident and quite experienced as well. So that is also another positive for the company. What are the key concerns? So the valuation, the question that we asked, and since they have answered that. And the largest, it is the large OFS component, that is the key risks for this business, along with the import of raw material. So if the situation worsens and from the West Asia, there might be a bit of concern of raw material supply for this business. So these are the small concerns, and that are being flagged by the brokerage firms, and the majority of them have rated it as long-term subscribe rating.
All right, okay. So Indo-MIM IPO, I hope that this has given you a comprehensive understanding, viewers, from what the management is kept in their focus and what Pawan has highlighted in terms of the top brokerage houses, the key risks that are being flagged out right at the start, but at the same time, the strong fundamentals, the unique moat, and the company's big vision going forward from here is concerned, and their confidence in continuing to tap various geographies also going forward from here. We'll look at the markets again, viewers, and the markets are in fact in a very weak spot. You can clearly see overnight action that we have seen. Crude oil prices jumping beyond $100 a barrel, the impact on the US bonds, and we've seen across the board, sharp pain developing. The Nifty is at 255 points lower, 23,612 can be seen on the Nifty, at least at this point in time. And all the sectors of the Nifty are down into the red. You can clearly see sharp cut on the real estate pack, on the auto space as well, 1.8, 1.7% of a decline coming in. Broader markets are down. India VIX has spiked by 8.8%. That clearly goes on to show how the impact has been seen as far as the crude oil prices spoiling the mood is concerned. Just 3 to 4 days ago, we were talking about $85, $86 a barrel, and within just about 3 to 4 sessions, crude oil prices have spiked above $100 a barrel, and that's the key worry for the markets, and there's been a sharp dip across the board. We'll look at the top Nifty laggards at this point in time to show you where exactly the pain has been panning out as far as the markets are concerned. You can clearly look at the top Nifty laggards coming in from the real estate pack, from the auto pack there. We'll also look at, let's pull up the top Nifty 50 laggards on the screens, please. And these are the gainers. We'll talk about, there are very few and far between gainers, but the laggards include Hero MotoCorp, Zomato, Bajaj Finance, 3 to 3.5% of a cut coming in. Hero Motors, Zomato, these are the stocks that are clearly topping the losers chart today. Shriram Finance, Bharti Airtel, these are heavyweight stocks. Even from the pharma space, you have Dr. Reddy's that continues its decline for the third consecutive session as well. That's where the pain is developing. Let's also pull up the top laggards from the Nifty 500 basket, and you can clearly see some of the names that are dragging. Ramco Cements, about a 10% lower. Go Digit General Insurance is lower. Swiggy is down by 6%, viewers. We're also looking at Physics Wala down by 5% today. Indo Solar is down 5.7% as well. We're also looking at names like MOFSL, Motilal Oswal Financial Services, down today, almost 6% of a decline coming in there as well. But on the flip side, where there is resistance and constant uptake, you can see Dilip Buildcon 10% higher, Clips Films also up in trade. You're also looking at several other moves that we are looking at into the markets as well. Epigral is up by about 3.5% in the session too. So we are looking at that. Let's also take a 2-minute break right now, and we'll come back, and we'll also be joined by another top management as far as Fractal Analytics is concerned to discuss their earnings as well. Stay tuned for that. From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m. only on India Today.
Protesters are raging in the heart of the national capital. Parliament is paralyzed and opposition has smelt blood. Amidst the spiraling situation, Prime Minister Modi has sent a big message to the youth. Prime Minister Modi has sought to assure the protesting students. While stating that the future of the youth was a priority for him, Modi vowed that stringent punishment will be given out to all those responsible. The Prime Minister also said that fast-track courts are being set up to try paper leak case accused. Senior Modi ministers reassured students that the government has their best interests in mind and appealed for talks.
At the level of the Prime Minister, a response has been given. In fact, much before today's announcement of setting up fast-track courts and assuring the punishments will be handed over to those people who violated the sacredness of an exam by leaking the papers, by buying papers, by selling papers.
The government is ready for talks whenever you want, at whichever hour of the day, and for as much length of time that you wish to. The talks can be held at the residence of Shri Nadda because the talks will be led by the Health Minister of India, the senior leader Shri Nadda ji, and of course I will be accompanying him. The talks could be held at Shri Nadda ji's residence or at an office, whichever of the two you wish to.
But the outreach has failed to cool tempers in opposition camp. CJP rejected Prime Minister's appeal and vowed that they won't accept anything other than Education Minister Dharmendra Pradhan's resignation. Rahul Gandhi too did not buy into Modi's appeal. The leader of opposition accused Modi directly of destroying the education system and even shielding the accused. More importantly, Rahul reiterated his core demand, which is sacking of Dharmendra Pradhan.
He takes credit for every achievement of this nation, which is the achievement of our youth and the achievement of our people. He takes credit, doesn't it? Doesn't he? So now's the time for him to take responsibility. Now is the time for him to take responsibility for his actions. It is him who is getting people beaten up. Under his nose, there are 152 papers have leaked in 10 years. 152 papers have leaked, not one conviction, zero convictions. Zero convictions. Under whose nose? Who's responsible?
Will government's olive branch be enough to contain the raging protests? From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our special personal finance show called Money Today, and today's topic is all about how should Gen Zs invest. Gen Zs are investing earlier, they are earning earlier, they're also borrowing earlier than any generation before. But are they clearly building wealth, or are they only chasing trends, from stopping SIPs too soon, or taking loans for even travel, or even getting lured by the buy now pay later schemes that are frequent and on everything that you see to be shopped on an everyday basis, to even diving into the newer formats of investments, say cryptos and even futures and options, which were usually only considered for experts as far as investors are concerned. Are they understanding the risks that happen in today's financial choices, and could all of that shape up their next 30 years of lives in the best way possible? That's something that we are going to be discussing today. We also are going to be talking about what is the right way for Gen Zs to invest. Let's actually welcome our guest on board. We have Mukul Malik, the founder of Asset Yogi, joining in to share with us his take on how is he looking to advise and discussing a lot of problems that Gen Zs are facing while their financial planning is taking place, and at the same time, how should they begin their financial planning journey as well. Thank you so much, Mukul, for taking the time out for this conversation. I'm sure a lot of Gen Zs approach you to try and understand what exactly should they be doing. Yes, we do know that Gen Zs are far more aware than millennials and the previous generations when it comes to taking decisions with money. They are more aware about the investment opportunities ahead. They are very clear they are here to take the money. But are they also creating a lot of mistakes while also looking at all of this? So give us an understanding of what are the key problems and the mistakes that usually Gen Zs are facing at this point in time or making at this point in time as they are on their fintech journey.
Yeah, first of all, thank you for having me on the show, Sakshi. It is always a pleasure to talk to you. Now, coming to your first question, which is about the problems that Gen Zs are facing. And I think once we acknowledge the problem, only then we can talk about the solutions. So, a clear trend that I can see is that, a lot of Gen Zs, people who are in their 20s or in early 30s, they are taking a lot of borrowings or loans. And without even realizing that how much it can dent their financial planning in the long term. So just to quote some of the data that, today in personal loans, the top category is vacations. People are taking lot of loans. Almost 27% of personal loans are taken for vacations these days. And this has displaced the top category of home renovation, which used to be the top category. So earlier, before 2020, we can see a clear change in the trend before 2020 and after 2020, once the social media has taken over. And, today, I think the aspirations are industrialized. So when I say that aspirations are industrialized means that, people are wanting to copy the influencers. I mean, not for the right things, but for everything. Right. So which means that if somebody is going for a vacation in France, everybody wants to go to France. Right. So and then you are taking a loan to do that. So that's clearly not the right trend, which I feel. And today, if I talk about some other data, then smartphones is the next category in personal loan. Right. So smartphones plus home appliances together, they form about 46% of EMI chunk today.
Wow.
Right. So this is one trend. The second trend that I can see is that a lot of youngsters are getting lured into trading. I mean, people are not able to, I think, differentiate between investing and trading. Today, if I can quote the rough data, I think 50%, around 48 to 50% of intraday traders, then futures and options traders are Gen Zs. Youngsters are losing money to big institutions. I think in the last 4 years, since the SEBI has published some data. So in 4 years, 4 lakh crores of retail money was lost. And I think 2 lakh crores out of that went to foreign institutional players. And I think about 80% of the balance was with the domestic institutions, and the rest of the money was lost to brokerages. So people have to realize that money is made in long term and not in short term. Futures and options, intraday trading, this is not for retail investors like you and me.
Okay, so there are clear trends that are being seen, viewers. In case you also are doing some mistakes like this, be aware. This is a trend that is being seen. Mukul has pointed out, yes, he's saying there's a huge trend of people going for frequent loans, even for things like vacations or smartphones. Remember, these are only going to get you into a debt trap. So ensure that you do not fall into this debt trap and be over leveraged, be deep into debt as well. That's something that you need to avoid. Do not go for everything that you see and you get lured by that. Yes, I can manage it with my current salary. I will keep on, creating extra EMIs for the next 2-3 years. In case you are just in a band of 25 to 30 years and you already have more than 2 EMIs running, you need to watch out for as to what's going wrong there. Also, apart from that, you also need to look at whether you are just dabbling with trends that are happening. Just do not see that everybody is making money in FNO, so you should also try FNO. And just look at what SEBI's data has pointed out, that Mukul just pointed out. The 90% of investors in FNO have lost money. And you're competing against massive institutional, investors there. You're competing against a lot of algorithms there. So please be aware of, up until the time that you do not have complete knowledge of something, just do not invest your money for the sake of trying on. So let's try and understand, Mukul, what do you truly advise first time investors, Gen Zs who've just started off their working career? What should they start doing with their first paycheck? What is the ideal way to go about it?
See, I think if I talk about the first paycheck, the very first paycheck, you can enjoy that money. That's not a problem. I mean, you get your first month's salary, you have some ambition, aspiration, you want to spend somewhere, that is fine, but don't take loans. So that's my first advice, that at the start of your career, you should not be taking loans. Just build a habit of saving and investing. This will take you a long way. I think people should realize the power of compounding. Just start small. So say no to loans. That's my first advice. Don't take loans very early in life. In fact, I'll just quote some more data also here. I have seen people, in fact, people don't even realize that they have taken 100 loans in an year, which means every third day they are buying something on EMI, whether it is online, no cost EMI, BNPL. So see, there is, I think I read somewhere in one of the books that the author says that if you have to think about something to buy, it is better that you don't buy. Probably you can't afford it, right? So, I mean, there are a lot of frameworks that people can use here that suppose you have to think about something before buying, and if delaying that, if so, for example, if your salary gets delayed by a month and you still have to think about the how am I going to pay the EMI and so on, so then it is always better to delay that purchase. So that is one that we can basically delay our loans. And if we have to take loans at all, it has to be a good loan. And by good loan, I mean that if it is going to improve your productivity, which means can you enhance your skills by taking that loan, whether it is an education loan, right? Or whether you are building an asset, for example, you are building a house, or whether you are going to enhance some skill, your productivity, if it is going to add a lot of value in the long term, then probably you can carefully think about taking the loan. But if it is only going to fund your experience, or if it is only going to fund your some luxury that you always wanted to have, then it is probably not the right loan to take. So you should always think about taking loans, number one. Number two, at the start of your career, I think the most important thing is to focus on your active income. All of us work somewhere, right? I have a small business, you are working with business today, and all of us have active income. So we should, I think, at the start of our career, focus on enhancing our skills, and the return that we can get out of enhancing those skills are probably the highest out of any asset class. Nothing can beat it.
Fantastic. So I think that's a very important point, Mukul, that you pointed out first. Look at only where are you looking to borrow loans. Borrow loans only for only good loans vis-a-vis bad loans, and good loans is something that you suggested wherever you have to take education loan or something to invest in yourself, in upgrading yourself, especially in the age of AI. If you need to upgrade your skills, those will be good loans to take. So invest in those rather than just upgrading your lifestyles and probably borrowing money for those things that you just need to show off on your social media presence. That's something that you need to put a question mark on as to whether you truly need it, whether it will help you today, whether it will help you later on, or is it only to, have a good social media presence. That's something that you should definitely avoid at this point in time. Second of all, let's also try and understand something that you mentioned, Mukul, very importantly, that if by purchasing something, your budget goes haywire, and in case there is some kind of a crisis that comes in, and you do not have an emergency fund, which means if your salary stops today, if layoffs happen, or if some kind of a problem happens at wherever you work and you're not able to get your salary for 1 or 2 months, then are you sufficiently provided for any kind of emergencies? That's something that you should know about. Give us an understanding of how should Gen Zs go about building their emergency funds, and how much of an emergency fund should they think of building?
Yeah, see, there are a lot of frameworks for every personal finance problem. So for building an emergency fund, there is a clear framework here that you can have a 6 months of your income or your expenses at least parked in FDs or liquid funds. I mean, these should be parked in such funds wherein you can take out the money whenever you want. So it has to be highly liquid. So FDs and debt liquid funds are a good way of investing that money. And if you want to have even better comfort, suppose you have a variable income. A lot of freelancers are also there out there, right? So if you have variable income in any form, then I think the ideal way of building a emergency fund would be of about 12 months of your salary or income level.
Absolutely. Now, give us an understanding. You also spotted a trend, Mukul, where you're talking about how, yes, investors have, or young investors are already looking at mutual funds or, SIPs as a way of building wealth. They have understood that very early in their career. But you're also noticing that with the shortest of the durations, a lot of SIPs get stopped, or they pause it, or they withdraw their money pretty early. So how are you looking at what's going wrong there? Yes, they've understood that mutual funds is probably a good way of investing or having direct exposure to stocks if they are identifying good quality stocks for their portfolios and they have an SIP strategy there. But how are you advising them as to what are you spotting as a trend?
See, another data I can quote here that only 10% of the SIPs continue beyond 5 years.
Wow.
So, which means that our investors are not investing for long term. And I think that because of this trading mentality, the same trading mentality has set in long term investing as well. So, people are, I think, whenever there is a high in the market, the markets are very, very bullish, then a lot of people enter the market. And whenever there is some kind of bearishness in the market, markets go flat. For example, in the last 2 years, we have seen that markets were flat. At that time, we see a high SIP stoppage ratios. So we have to, as investors, we have to follow a process, I think. So you should not be discontinuing your SIPs. You should be definitely continuing SIPs. And at the same time, whenever you have lump sum amount and the markets are down, it is always better to invest some lump sum amount as well. You should always increase the amount in these kind of times wherein the buying price is also very low. I mean, if you see the law of averages, then this is a very good time. You will average out your cost, and eventually we are saving and investing for long term, right? So if you are not here for 5 years, 6 years at least, then I think you should not be in the equity stock market or equity mutual funds as well.
What about cryptos? Are you increasingly also finding that people are investing a lot in cryptos, young investors, Gen Zs, even at the time when, Indian government is not very favorable towards this asset class? They have taxed it, any kind of transactions and profits that you make, but they have still not given it a legal, stance. And also when it comes to equating it with any other financial asset class, they've not given it that kind of a pedestal. So how would you advise investors here?
See, absolutely, you are right. If government is not giving legitimacy to an asset class, people should be wary about that asset class. It's very simple for me. So again, if we see the trend in crypto investing also, around, I think 37-38% of crypto investors are Gen Z, which means they are in their 20s only, not even 30s. They are in their 20s. Right. So this is again clearly showing a trend that people are wanting to make a quick buck. And see, the thing is that you have to learn investing. You have to focus on what you really want in life. If you are going to chase trends, it is not going to make money. However, it can make you poor. And in fact, I would also like to touch upon the insurance part as well. Wherein a lot of youngsters are not just youngsters. In fact, anybody middle class in India is just one medical emergency away from bankruptcy. I have seen this myself, around, and I have seen people. That there was a guy who used to live near my house, and he had to sell his house. He had to basically he lost his father, and he lost his house in his treatment, and then he was working for 40-50,000 of salary, and then he had to drive a cab. So these are some of the examples that we are seeing around us. So I think Gen Zs should stay away from these trends, understand every asset class, only then invest. SIPs are a beautiful way. You are not investing on your own. You are investing through a fund manager who is an expert. The fund manager is not going to buy on panic or sell on panic or buy in FOMO, right? Fear of missing out. So if fund manager can follow the process and you are not able to, better that you give money to him.
Absolutely. Now, you also recommend a clear financial order for Gen Zs. You're talking about how they should be looking at first insurance, then emergency fund, and then investing. Why is this sequence so important, especially for someone who's just started off their career? And if you could help them understand, if they're just starting out, what is the first process and the second process that they need to follow?
Yeah, so anyway, first step I have said that you should not be taking loans. You should not be even thinking about loans at the start of your career. Second step is, I think you should have some insurance, which means that you need only two insurances. One is term insurance, which will insure your life. And why should you take the term insurance very early in your career? Because your premiums will be very less, right? And you're going to lock in your premiums for the entire life. So low premiums you can lock in at very early age, number one. Number two is that you should always take a health insurance as well. So a lot of people who are working in corporates, they have some corporate insurance, but you should also top it up. So there are again a few frameworks here that, the cost of a heart surgery in your city can be the sum insured. So for example, if I am staying in Delhi and the heart surgery costs about 8 lakh rupees, so you should have a cover of at least 8 lakh rupees. And if your corporate insurance covers you only 4 lakhs, it is always better to take an extra cover of 4 lakhs. So this is the way how you can lower your premium at early age by taking these insurances. Then next step is you can start investing, and you can at least save or invest at least 20% of your salary or income. It is always better to have this number at 30%, but 20% should be the bare minimum. Yeah, I also touched upon the emergency fund earlier. So after insurance, then emergency fund, and then you should start investing.
Okay. Now, I also wanted to ask you that a lot of young professionals also aspire to buy cars and buy house also as early as possible. How would you really, let them know as to whether these decisions are good enough to take in the early part of the career, or should they wait it out, and what exactly is the right way of going about it?
See, the thing is, if you have to buy a car and if it is helping you reach your office earlier and you can easily afford it, right? So you have to do a cost benefit analysis here. So whether you are going to save a lot of time by buying that car and it is making sense for you economically, then you should definitely go ahead and buy that car. However, if you can use public transportation, you can use a cab and you can still reach in the same time, then it is always better to delay that decision. So this is a very personal decision. I think there are no frameworks here because this is a very personal situation, right? So probably you can reach your office in 10 minutes and I can reach my office in 1 hour, right? If I use a car, maybe I can reach in 40 minutes. So if I'm saving that 20 minutes and those 20 minutes are very important, I will probably think about buying a car. And I should not be chasing trends here again. I mean, if somebody is buying a 10 lakh rupees car, I should also be buying a 10 lakh rupees car. That should not be the way. So in early part of your career, at least, you should be thinking about value and not luxury. So value is very simple. You have to reach from point A to point B. Even a 5 lakh car can also do that. So that is my take on car buying. And on house buying, I feel that people, this is again subjective, but I feel that people should be taking this decision or delay this decision till they are in their 40s. This is not about financial planning alone. This is also about life planning. Because when we are buying a house, we are actually thinking about settling somewhere. So unless you are sure that you want to settle in a place, in a city, or you have identified the exact location where you want to spend the rest of your life, then you should not be taking this decision in a hurry. So it is always better that you save the money, invest the money, invest some money for the down payment. And houses or real estate is not going anywhere. I mean, you can always buy, and we have seen that, even mutual funds can beat the real estate returns easily.
Absolutely. So I hope that this has given enough clarity to all our Gen Z viewers. Thanks a lot, Mukul, for being with us on the show and for giving us an understanding of what is the right way of financial planning for Gen Zs. How should they invest and what should they not do clearly? Of course, like you pointed out, the first step is not to take loans. Do not get into a debt trap. If there is no need for you to probably fund yourself, maybe on education or medical emergencies, please do not go ahead and borrow any loans. Then insure yourself first. That definitely saves you from the medical emergencies. Buy a life insurance, a term insurance and a health insurance as well, so that you are safe on that aspect. Then go ahead, create an emergency fund and then start investing with 20 to 30% of your salary, definitely going into a systematic way. Do not stop your SIPs. Have your long-term goals, or goal-based investing is what you must definitely follow, and only then think of investing in very big purchases right there. At the initial part of your career, do not definitely go in and think that yes, you have to buy a real estate. You can, of course, defer that decision. First, build up your corpus and then probably invest at a later stage. Thank you so much, Mukul. It was a fantastic conversation and hope that has given a lot of clarity to our Gen Z viewers.
Thank you, Sakshi. It is always a pleasure. Thank you.
Thank you. All right, viewers, we'll wrap it up on that note. But in case you have any queries about the conversation we've had, then you can definitely send us your questions on the comment section below. The number also keeps flashing on your screen, so send us your questions there as well. And we'll be happy to get Mukul back to address some of your queries as well. Thank you so much for being with us.
Hello and a warm welcome, ladies and gentlemen, on Business Today Television. We continue with our coverage on different asset classes, in particular the commodity space. Fresh highs coming into the market of oil. As you can make out, prices have topped $95 a barrel. Not only one, but the second straight out of the Middle East is also closed, and that is adding pressure to oil prices, now well above $95 a barrel. This is the highest since June 11th. Gold and silver continue to languish, but oil is the new pain point as far as Indian markets are concerned, as also rising bond yields and a weakening rupee. Be that as it may, let's take a temperature check of what's happening in the commodity space. And joining us on the show is Mr. Kunal Shah, a very, very well-known market analyst in the world of commodities. He heads the research team at Nirmal Bang Securities. Namaste Kunal ji, and a very warm welcome. War clouds are gathering, and the supply of oil is now getting constrained on both straits. How are you looking at oil now at $95 a barrel?
I think it's really unfortunate, and the way after Strait of Hormuz, this new Strait of so near Yemen, this strait, I mean, I'm not able to pronounce it rightly. It's called Mandab Strait, okay, Babel Mandab Strait, and that strait is basically.
This is the one parallel to the other end of Saudi Arabia. So one side you have Hormuz, which is in a cut
Yemen,
like this.
Yemen and Ethiopia, between that. So on one side there is Ethiopia, on one side there is Yemen, and if you go inside, then comes the Saudi Arabia. So now what is going to happen? The Saudi Arabia is going to find difficult to export oil. So on one side, the Strait of Hormuz is closed, which is affecting roughly 20 million barrels of flow. And now with this Bab al-Mandab, another 5 million barrels of flow is at question mark. So total 25 million of barrels, it's a market of 105 million barrels per day, and out of which 25 million barrels is out of market. And out of that, US, Japan, China, all of their inventories are at all-time low. I mean, US inventories are at 50-year low. So if this get prolongs, it is an unthinkable scenario for the world. World is not in a position to absorb this kind of energy shock, and the prices, the only way prices can come down is just with a glimmer of hope, nothing else. Until there is any positive solution between US and Iran on this ongoing matter, if it doesn't take place, then I think it's a nightmare for the global financial market and even for the energy market. The world is going to have a very difficult time if this continues.
Okay, perfect. So, worst case, what are we looking at? 3 digits is very near.
So we are already at 3 digit shell buy, and I think most important thing here to watch out is what is happening with the product side. So all the refineries. So I would like to explain the severe scenario which is happening right now. On one side, the Russian refineries are operating at 50% level, and there is a shortage of diesel. There is a shortage of petrol. The refinery which are operating right now are having a margin of 70%. So the margin which used to be 8%, 10%, that is the margins have shot up to this extent. But there is a problem at the straight level, both straight level, and there is a problem at the refinery. So end product, the finished products, which are basically the one on which everyone is depending. So the finished product market stock scenario is even far worse than what is happening in the crude oil market. So this is not good. I think this should get solved as soon as possible. Otherwise, the world at a stage when it is having the highest debt, and at that time, if the inflation goes up, it's a nightmare.
So you didn't give me an estimate where oil could go.
Yeah, so I think oil should go up in such kind of scenario. Oil should go up, sir, because I mean, if anybody is giving you sell call, it's just a hope that the things will get sorted out. No. Otherwise, there is no question of sell call, sir.
No. Kunalji, I know oil will go up, but you are the guy who's the analyst who will give us an idea where it will go up to.
Sir, your voice is breaking out. I'm not able to hear clearly, sir.
Kunalji, I'm saying that even I know that oil will go up, but you are the person who are analyzing the markets in great detail. You are the top analyst. I am asking you till where it can go.
Okay, sorry, my bad. I could not hear that part because of the voice was breaking. So I foresee oil, if this condition persists for another 3-4 days, oil is definitely heading towards $105 to $110. Brent.
Okay, fair point. Now, because you analyze all asset classes and nearly all of them are linked, one goes into the other, we see rotation of money because money is finite, so it's moving into oil. Where is it coming from?
So I believe that if this condition, so the highest beneficiary right now is the oil and gas sector. That's where the money is going right now, and I think the energy prices, the crude oil, the people are having an exposure towards crude, having an exposure towards aluminum now again. With both this trade close, even the aluminum prices can go up. Commodity will remain top asset class going forward in this kind of scenario. So I would say commodities looks much better, and the defensive sectors also will continue to do well. But I think the energy sector and even the metal sector would be the big beneficiary of whatever is happening right now.
Okay, fair point. So we get another potential commodity which might rise further, which is aluminium. I'll request the PCR to kindly show us the charts of Hindalco and National Aluminium. The stocks have corrected fairly sharply, and you just might see an uptick coming into both National Aluminium as well as Hindalco. So, please show us the 3-month charts or the weekly chart. This is today. Let's see a 3-month chart if possible. Yes. See, this is what I'm talking about. In the last 3 months, at least a 10% correction in Hindalco has happened. In fact, it's much higher. And similarly on national. Hello and a warm welcome on Business Today Television, ladies and gentlemen. Just as the global macro gets a little troubled because of this escalating conflict in the Middle East, oil tops $100 a barrel, US bond yield goes beyond 5%, and of course the rupee heads towards an all-time low. All this is sort of creating a negative impression on the market, and as a consequence, the Nifty is losing steam. This is happening at a time when large caps have not really performed over the last 15-20 days, and Q1 earnings, especially in the large cap universe, has not been up to the mark. To discuss what should be the strategy way forward and what are the kind of stocks as also segments you should be adding to your portfolio or subtracting them, we are now joined by Mr. Anshul Singhal. He's the founder at Sehgal Associates. Namaste and a very warm welcome, Anshul ji. How are you reading the situation at this point of time in the market? It looks a little difficult as of now.
Namaste, Shalindraji. Pleasure to be with you as always. Yes, it is an unnerving, anxious situation for everyone. However, these things have a way of settling themselves out over a period of time, and our belief is that this situation will be no different. Although we can't predict what's going to happen, but in general, the balance occurs over a period of time, and you just have to be patient. That aside, our game is really not to predict the markets. Our game is to identify opportunities that will play in whatever market condition exists at a given point in time. What I mean by that is that given what is happening globally and in the data center world, artificial intelligence world, what we are seeing is that global hyperscalers, they're raising their capex targets in their respective geographies in artificial intelligence spends. Now, if that is a trend which bypasses whatever is happening geopolitically, then we can take advantage of it. And we can take advantage by playing into that theme, whether through power or through data center plays or anything which is concerned or related to that space. That is the theme, that is the game that we are trying to play, rather than predict market levels and volatility in the markets.
Okay. So, essentially you are saying that the top 5 or 6 FANG stocks that are there in the US are expanding their artificial intelligence data center facilities, their global customer support centers, and you are presuming that a large part or a decent percentage of that business will come to India, and therefore we play that theme via Dalal Street.
You can, I'm not trying to say that theme will translate into upside for India in general. What I'm trying to say is that there will be Indian companies which will be catering to that theme. And if there is so much spend globally, then these companies will also witness that kind of tailwind. And in that regard, we participate in those companies based out of India. One theme, there are other themes also. For instance, if there is geopolitically this tension which is playing out, oil is on the boil, you will see that sovereigns, and India in particular, is going to invest heavily in the oil and gas sector to ensure that we get energy security as we move ahead into the future. Because energy is really, as we all know, is really the basis on which an economy grows. And so there are plays in energy which you can take advantage of if you're here sitting in India and take advantage of that trend, which is a global trend. So that's really what I'm trying to say. Identify trends, micro trends, macro trends, and take advantage of those.
Two, two globally, which is the artificial intelligence play and of course oil. What other trends are there globally which you feel will have strong tailwinds in India?
See, oil has a ripple effect. Now, just to give you an example, when oil goes up, raw material for synthetic thread that goes up, raw material prices. And when that happens, prices of synthetic threads go up. Now, what is the replacement for synthetic thread? It is cotton thread or cotton yarn. Now, that has a ripple effect on cotton yarn, and cotton yarn prices move up. So, as a cycle, you benefit if you're invested in the cotton yarn cycle, and you take advantage of that. That is just a ripple effect of what's happening globally because of oil. In India, there are micro trends. For instance, in the last 2-3 years, the microfinance sector has been going through headwinds. And that headwind is on its way out as we speak. If you look at the last quarter's numbers, I'm talking about the fourth quarter of the last fiscal, you will notice that many of these microfinance companies witnessed a revival in their earnings after nearly 8 to 10 quarters of a decline in earnings. And their commentary for the future also looked quite robust. I was in a conference recently and I met with some of these companies. And the one question most analysts had for these companies was that if there is weakness because of geopolitical tensions and the war in Iran, will that affect their business? And most companies said that the impact on their business is minimal, if any, and in fact, growth is only going to catch pace as we move ahead. So this is a micro trend which plays out in the country because of something that happened over the last 8 to 10 quarters. These are the kind of trends one is trying to catch and take advantage of.
Okay, so microfinance is a micro trend. We have oil as a cross-sectoral play, and of course the global spend on artificial intelligence and whatever impact that we may be able to make out on the Indian subcontinent. Another worry coming up, Mr. Sehgal, is this Trump tariffs now, two sets of them coming into action, one of course on labor laws and the other on generic pharma medicines in 12 months and 24 months from now. How do you think that vitiates sentiment not only on these sectors but broadly on the Indian capital markets?
So, those, there are two parts to this answer. If you look at the pharma sector tariffs, I'm reminded of, a time, say 3-4 years back, when in US, you had a significant consolidation of distributors. Like distributors were in the range of 8 to 10, and they merged and consolidated to 3 to 4. What that did is that it gave significant leverage to these distributors to squeeze the final manufacturers on pricing. And the manufacturers had to reduce pricing quite materially. Over a 3-4 year period, their pricing went down in as much as double-digit year on year. Now, what that did is that it became unviable for most manufacturers to supply to the US So if you were speaking to some industry participants in US, they would tell you that for some medicines, racks were empty because there was no supply of those medicines because the manufacturers did not find viability in manufacturing those drugs. Now, what that tells you is that pricing is critical for manufacturing generic drugs because as it is, they are discounted drugs. In that context, if the US is going to ask tariffs to go up, it's not the companies who are going to bear it. It's the final consumer. And if their aim is to shift manufacturing to the US, even then, cost will go up and the final consumer will bear it. These companies are not going to manufacture at a loss and supply to the US. So in our judgment, while this kind of unruffles feathers, but in reality, the impact on generic medicines is not going to be substantial. It's actually going to be a pass-through impact for most of these companies. On the labor issue that you mentioned, I saw just today in the morning, there was a clarification that for India, it has been clarified by the US that India is taking steps in this direction. And as a result, the Indian tariffs remain at about 10%. So at least for the moment, it doesn't look like India is getting impacted because of this. However, when there is talk of tariffs, clearly markets get unnerved and that gets reflected in volatility going up. Which we are seeing today as well and in the last few days. So that is, of course, an impact. But for value investors like you and I, it is an opportunity because we get quality names at cheaper prices. What could be better than that?
I agree with you. If one can master fear and buy a red colored bar on a stock of his or her choice on a weekly or a monthly basis, I think that's a significant battle won. Mr. Sehgal, for the portfolio that you hold in the small cap universe, what has been the performance broadly in Q1?
See, this has been a very interesting time. While the frontline index has done nothing, but the small cap index has done very well in this period. And I mean, I was surprised myself to look at how the portfolio has done in the last 3-4 months. We may be up in the range of 40 to 50% because some of our stocks, in fact, many of our stocks have done quite well in line with the markets. Now, of course, in recent times, in the last few days, there has been volatility and that has impacted the portfolio as well. But that is par for the course. We are really, our aim is to identify quality businesses and which are underappreciated at the moment and where that appreciation will play out over a period of time. When that is the mix, of course, you go wrong in one or two, but by and large, the portfolio does quite well.
Yes. If I may press you a little further, what was, I mean, we are in July of 2026 and the original market peak on the Nifty was in September of 2024. How has your small cap portfolio performed compared with levels of September 2024?
So our peak, which was achieved sometime in September 2024, we saw a 15 to 20% decline from that sometime around the last 1.5 years. And we are slightly above that peak level as we speak today. So we've seen upside from where we were, and we are higher than where we were in September 2024. So I mean, I don't know the exact. I don't know the exact numbers, but by and large, this is the.
Yes. So ballpark, while Nifty is down about 10 or 12% from its peak, your portfolio of today is more than what it was in September of 2024.
That is right.
That is right, correct. Now let's get into the portfolio. The portfolio that was representative in September of 2024 and July of 2026, what is the material difference in number of shares and what those shares were?
See, number of shares, not much. I would say that we were in the range of 10 stocks then, and we are around that many stocks today. The portfolio might be different to the extent of about 40 to 50% for the reason that trends change and newer
Absolutely.
opportunities arise, and you take advantage of those.
Mm.
And so to that extent, there may be a difference or change in the portfolio. But number of stocks, our style is to remain concentrated and to take conviction bets, which continues.
Okay. So essentially 50% of the portfolio underwent a refurbishment, and about 50% remained the same. I'm sure you added fresh money in the past, say 18 months or so.
We are generally fully invested, Shailendraji. We have some investments which are sort of investments where we are trying to protect the portfolio from volatility. So these may be cash proxies in large cap names, in a sense. And so we may be shifting away from those large cap names into small and mid caps as the market becomes more attractive. But we are generally mostly fully invested.
So broadly, I'm just trying to find out and confirm that quality stock picking at a time when markets are in a corrective phase actually pays out far better in the medium to longer term rather than keeping your portfolio stagnant. The whole exercise of this, the whole outlook for these 2 or 3 questions was only this. Fair point.
Yeah. So just as a thumb rule, I'll tell you, our reason to trade in and out of a stock is when we want to, in times of stress, we want to enhance the quality of the portfolio. We want, because quality names also correct. And there are certain names that you hold in our portfolio which are not as high in quality as some of the other names which have corrected. So you shift from one to the other. The other is that you find trends change and you take advantage of those trends by shifting away from one segment to the other. So those are some sort of mixes in the portfolio that you play out as times change.
Okay, perfect. And that's how it should be. A dynamic portfolio is the one that keeps both the fund manager and his client on toes, and that's how it works in the longer term. Mr. Sehgal, when you look at your own portfolio now as also 18 months ago, have the top 3 stocks changed in terms of weightage as also in terms of names, or have you trimmed only the tail?
No, the top 3 names have changed also because mark to market has been quite substantial in some of the names. Some names where the initial position size was small, but where returns have been outsized, there the weightage has gone to the top 3 levels. And the top name in the portfolio remains the same, but the second and third name, those have changed, mainly because of mark to market.
Absolutely. I mean, that's the natural way of things. You keep your winners and let them rise and let them run. And the rest is actually more or less a mathematical exercise rather than any qualitative feedback on the performance. Fine. Now tell us, apart from these micro trends that you highlighted, one on global AI spending, the other on oil, and third on cotton within the country, what else do you think is flowering up or showing green shoots, whether in mid caps or small caps in Q1?
See, if you look at the results, firstly, I get a message every day in the morning from our broker where he lists results out for that day, and beat, underperform or inline results for that day. And it looks like generally out of 10 names that declare results on a day, 7 results are beat, and this is just anecdotal evidence. I have not aggregated the results, but I'm just looking at this data point, and I'm coming to this conclusion that anecdotally 7 look to be beat, 1 or 2 are in line, and 1 max 2 are underperformed results. Within that, I think that one space which is clearly standing out is autos. Auto results have been quite robust, whether it is the OEMs or automotive part companies. Clearly, the results have been quite robust in this space. Then, of course, there are other segments, capital goods, etc., where some defense companies as well, where results have been quite robust, as also financials. While some financials, frontline financials, have disappointed a little bit, but by and large, financials have also delivered robust results so far in this result season. So these are some segments which clearly stand out.
Fair point. And my final question, Mr. Sehgal, outlook for this crisis that we are now facing in the market. Again, Middle East flares up, again bond yields are up, again rupees weakening. For you and other value hunters, this is a good time. But broadly, do you see this situation changing or worsening or improving?
I'm an eternal optimist, and I've seen enough crises in the past, and I've ridden through them, in the past to feel pessimistic at this time. I think that every crisis is an opportunity, Shailendra, and this will turn out to be no different. While people talk of the currency depreciating, but look at it in this context that our currency has depreciated not only against the US dollar, but as also against the Chinese yuan. What that does is that it makes our exports more viable versus Chinese exports. So in the next 12 months, our expectation is that companies that export out of the country are likely to see significant tailwinds because of this crisis, which has turned into an opportunity for them. And aside from that, even on crude prices and other macro uncertainties that we are seeing, it will, while it will be unnerving while it plays out, but it will over a period of time abate. And if then you are not invested in stocks which are offering opportunity, then you will miss out on opportunity again. As we saw between March and today, there was significant money made. And if you were out of the markets in March because of the unnerving macro situation, really you did not take advantage of that opportunity. We see something like that playing out even in the future. India is coming off a weak period, both in terms of flows as also in terms of earnings. We see tailwinds in earnings. We see also tailwinds in flows. And this will be a very nice time to build portfolios in India.
Right. On that very optimistic note, Mr. Sehgal, we'll call it time. Thank you so much for such a wonderful insight on how small caps work and what should one be doing to create supernormal wealth in the shortest possible time. Have a nice day, and I'm sure you're going to enjoy the weekend in Mumbai thanks to rains.
Thank you very much, Shailendra. Always a pleasure. Wish you a great weekend as well.
Thank you very much.
Bye-bye.
That, ladies and gentlemen, was Mr. Anshul Sehgal, CIO and founder at Sehgal Associates. Thank you for watching. Hello and a warm welcome on Business Today television, ladies and gentlemen. The markets seem to be coming under pressure for various reasons. It could be rising oil prices, it could be a log-jammed parliament, as also a weak rupee, but the Nifty sort of consolidates around 24,000, and this is a space where the bulls are defending with all their might. What are the broader structures of the market telling us? Where is momentum and where is pain? To discuss this and a lot more, we are joined by Mr. Prashant Shah, founder and CEO of Definet Securities. Namaste Prashant ji, and it's always a pleasure to host you, sir. Prashant ji, ladies and gentlemen, specializes in a very niche market, which is point and figure, but his young frame does not tell us the kind of experience and the cerebral strength that he brings to the table. He is also an author of a number of books and has a very, very strong command on point and figure. With that background, Prashant ji, let us begin. First, tell us, what are the broader macro structures of the market, the Nifty vis-a-vis bonds, the Nifty vis-a-vis precious metals, and the dollar?
Okay. So if we look at the Nifty overall, my approach is usually a top-down approach. So we can start by what Nifty is doing, as you rightly asked, vis-a-vis dollar, vis-a-vis other asset classes. So right now, if we look at the overall Nifty trend, my take is on a broad level, from very short-term perspective, it is doing nothing as such. I mean, it is in a very tight consolidation range, where, technically we call it squeeze. It's a very tight squeeze. Nothing much is happening. But from a medium-term perspective, it is outperforming other asset classes, and it is still, kind of showing the strength. But if you ask me about momentum, the momentum is not in large cap. The momentum is in mid cap, small cap, micro cap. The stocks are doing much better than what Nifty is doing right now. So from trading and investing perspective, I guess the focus should be stock specific, and right now that should be the strategy in general.
Okay. Now, when you say that large caps are underperforming, that's easily visible. There is little or nothing happening in the private banking universe after Saturday's earnings. As also there is pain in Reliance. L&T is below 200-day DMA. Similar stories are abounding in the likes of ITC, so on and so forth. Yes. So what should be, let's look at the two parts here. What should be the momentum strategy for quick gains, and what should be the investment strategy?
Yeah, great. So if we talk about strategy, my approach is, so you said short-term strategy from short-term perspective or from medium-term or long-term perspective. As I said earlier, my approach is top-down. So we talked about Nifty, and then next comes what kind of sectors are moving, which space is doing good. So first of all, from short-term and medium-term perspective, I think auto is doing extremely good. They are the charts are good. It is the relative strength chart. So auto index versus Nifty and the other indices, it is at almost all-time high. And the chart setups are really great. There is a nice horizontal breakout formation. So that's a great setup out there. So I would say auto stocks one can look for from trading perspective and from investing perspective also when it comes to momentum trading or investing. As at the same time, consumption, consumer durables, chemicals, defense, these are the good sectors. Healthcare, we talked about it last time. Pharma. So these are the good sectors, and how we can build strategy is something which we discussed last time, and I keep on recommending that strategy is momentum investing and momentum trading strategy, a rule-based strategy wherein we select top performing stocks and then we create a portfolio and then rebalance it periodically. Even if it is a short-term strategy, we can do it on a weekly basis. That's a decent approach to create a portfolio in markets.
Okay. Prashant ji, before we get into the stocks that your momentum strategy has come up with, would you want to describe what are the essential features of how a stock makes its presence felt in the portfolio of momentum stocks?
Yeah. So on a broad level, there are see, there are multiple filters, but very important filters I would like to talk about. When we create a momentum portfolio, we should identify stocks which are in momentum, and how do we do it using very simple technical fundament filters. Let's say which most of your viewers will understand. Let's say stocks trading about 200-day moving average. So in general, stocks are in uptrend. Then we would say that stocks which are close to their kind of 52-week high, so maybe within 20% or within 40% of 52-week high. So they are not, we are not investing in stocks which are like in a very strong pullback. We want to invest in the stocks which are doing good compared to overall market and the other indices. Then we would filter those stocks. See, once we have these kind of basic screeners, then you'll have to rank the stocks to identify top performing stocks. So we can do it based on the stock's performance. Let's say stocks 1 year return on a daily basis, and that way we rank the stocks. So we identify, let's say, top 10, top 20 stocks, depending on the basket you have picked. So for example, in current scenario, I would like to invest or have a portfolio of mid and small cap stocks because they are doing good and they are outperforming. So in that space, let's say we have top 10 stocks, and then we create a portfolio. And once we have done that, we will review that portfolio, let's say on a monthly basis, and on a fixed date of a month, I will follow the same process. I will find new 10 top performing stocks. The stocks which are there in my portfolio, I would retain them, and others I would rebalance with the other top performing stocks. So that's the overall process of building a momentum portfolio.
Fair point. So these are the broad structures. Now, as you say, you would want a portfolio of mid and smalls. So what is the index that you would be choosing to get to a portfolio of 10 stocks or 12 stocks, whatever the number that suits you?
Yeah. So I would pick, there's an index, mid and small 400 stock index. It's a basket of 400 stocks. And so that's someone who is very aggressive, we can pick micro cap index also, which is a 250 stock index. But let's focus on, let's say, mid and small 400 stock index.
Okay. Now, out of those 400 stocks, the first filter you would employ is obviously, stocks above 200-day moving average or stocks outperforming. So, what are the 4 or 5 major filters that you would deploy, and what are the results of each filter and the final prognosis?
Yeah, so there was some voice drop, so I couldn't hear you properly, but I guess you were asking about filters that we use in momentum portfolio. Yeah, so filters, as I said, 200-day moving average and a 50% retracement from the 52-week high. Apart from that, there are some point and figure chart related filters which identifies a very a strong momentum in the stocks, and there is a relative strength filter. So the stock which we are picking in a portfolio should also be outperforming the markets in general. See, one should understand the overall logic. When we try to create a portfolio, see, in general, people keep trying to pick stocks, but we randomly pick stocks. We don't know the exact how do we actually exit then, and we keep on tracking the markets and keep on deciding. The most of those decisions turn out to be emotional decisions. Here the approach is we have a complete portfolio, a complete rules in place, and then when we try to pick stocks, our idea is the stocks which are doing good compared to markets, other sectors, other indices. So we are trying to pick stocks which are moving. Now there are two aspects of it. One, when we invest in the moving stocks, they could be breakouts, so they could be pullback stocks which are corrected recently from the peaks, but overall in general they are outperforming. So that's our basket. So when we invest in those stocks, we have to be prepared that there is a possibility that there will be a sharper correction, and stocks will be we will be investing in stocks which are already performed, and that is why the approach is to invest in the portfolio. Yes. So the mindset should be, if I've invested in 10 stocks, 5-6 stocks will perform, others will, they'll underperform, and will replace them with other performing stocks. When you backtest this overall method,
please continue.
Yeah, when you backtest this overall method, say last 25 years, 30 years, in sample, out sample backtesting, you'll realize that with this method, you can outperform any kind of indices significantly. And that's the biggest. So big, and this is not only about India. If you go back to this momentum investing, there are n number of research papers out there. There is a proven 300 market years data across market countries, across asset classes. Momentum investing is a method which is very sensible and one can really do well if it is followed with discipline and rules. So that's what I am trying to explain, that this is a good method. You can have separate portfolios for your random stock picking or for stocks which have come down, but this portfolio can actually complement your all kinds of portfolios and stocks.
Fair point. So what we'll do is we'll let your research team run the Momentify strategy on mid and small cap 400. Meanwhile, you and I will discuss the thing that is ailing the market, which is oil. We are now at 95 as far as Brent futures are concerned, and this is easily a 2-month high. How are you seeing oil prices in your PNF charts? What are they telling you?
So yeah, they are overall. If you look at the trend, that is a bullish setup, and there is a possibility that we'll see it in a short term. There's a possibility that it will be range bound between, let's say, 90 and 100 on a broad level. There is a possibility that it will go to 120, 125, but that's what I have figured out is there is no inverse relationship. There is a possibility that crude will go up. At the same time, in general, Nifty can remain sideways on a broad level. It can remain range bound. But I am also extremely bullish on stocks, mid cap, small cap stocks.
Fair point. No, the point here was that anything above 75 as far as oil is concerned is a negative for the Nifty. So the higher the oil goes, towards 90, towards 100, towards 120, it essentially means that money will be sucked away from the Nifty. It may not even remain sideways. Be that as it may. So there are no chances of it cooling down. You see 3 digits.
Sorry, last thing that you asked, I dropped.
You see 3 digits on oil.
3 digits, there is a possibility for short term. It can touch, and then I'm not saying that it is in strong uptrend or something like that. But yeah, it is right now. It is bullish, and because of that, Nifty is under pressure. See, otherwise Nifty would have done really well, the kind of structure that we have. But because of oil, there is a pressure, and Nifty can remain under pressure for some time. Maybe let's say in 2026 we'll see this kind of trends only. On a broad level, it will remain sideways. There is a possibility.
Okay. And what are the charts of gold and silver talking to you in terms of point and figure? Is the worst behind us, or are we showing some signs that, sensible people can start buying at least gold?
Yeah. See, when I look at gold and silver, or maybe bonds for that matter, my very important criteria is there's one, chart should be bullish, and second, the relative strength chart of gold and Nifty. So what gold is doing versus Nifty versus asset classes. Like we are analyzing Nifty, same way we analyze other asset classes, and gold is one of the asset classes. So right now, I would say on a short-term perspective, there is the gold is kind of oversold. There's a short-term bounce which is possible, which is and it is happening also. So that is for more of for traders. From investors' perspective, those are trying to pick gold. In fast, I have never found that it's an profitable method to invest when it comes down. The ideal way of doing it is when it starts outperforming Nifty, and that's not happening right now. So I would like to wait for that kind of trigger. And whenever that happens, so those are the right triggers. After that, you get good momentum, and kind of short term, your RRIs are also really nice. So that's an important trigger, and I'm waiting for.
Fair point. And it's sensible as well that you get into an asset class which starts to move, or at least starts to outperform its rival. And that's the outlook on gold as well as oil. Was your research team able to get back on the Momentify thing as far as mid and small 400 index is concerned?
Yes, I've got the stocks.
Yes, sir.
Maybe we can discuss some of the stocks which are there in the portfolio right now.
Okay, would you want to name them? We've decided a portfolio of 11.
Okay.
No, how many? Your choice. It's your baby.
Yeah. So I would like to discuss, the stock names, maybe because they are based on the rules that we discussed.
Yes, absolutely. This is a statistical exercise.
Correct,
there is.
correct. Yeah.
Okay, please go on.
So first stock is Arthur Engineering. Then second
Arthur
is
Energy.
Yeah.
Okay.
Then second is Acuitas.
Acuitas.
Third is HFCL.
HFCL.
Chart setup is also great.
Yeah.
Then then Kirloskar Engineering.
KOEL. Okay.
Yeah. Then Laurus Lab.
Laurus.
Federal Bank.
Federal Bank.
Bharat Forge.
Bharat Forge.
And Adani Enterprises Solutions.
Adani Ensol.
Yeah. Granules.
Granules India. Pharma space.
And Anand Rathi.
Anand Rathi Wealth.
Yeah, these are the top 10 stocks.
Okay, perfect. So, ladies and gentlemen, this is a very, very nice portfolio which has been made using a lot of statistical tools, a lot of relative strengths, not only of the stocks versus the remaining 390 stocks making up the mid and small healthcare index, but the index itself, and within them smaller subsectors. So no matter how hard you try, you can't make it as easily as Prashantji has done. And this is a portfolio that can be reevaluated after every 15 days. Those that fall below 20, what is the EMA? What is the exit?
The exit is, so as you said, after 15 days, we will run the same exercise and you'll identify top performing stocks, and then the stocks which are in the outperforming space and already in our portfolio, we will retain them, and others we will exit and replace them with the other outperforming stocks. Here I would like to add one more point. Some of the stocks which we are seeing in the portfolio are there from last maybe 4 to 6 months, because for example, Federal Bank, it has been the outperforming stocks, even though Bank Nifty was under pressure and then it did well, but in the overall space it was one of the outperforming stocks and it remained in the portfolio. So with this kind of approach, you don't have to actually see which stocks or which sectors are doing good. Automatically you'll have the stocks which are doing good, and they are outperforming the sectors, and the sectors are outperforming the markets. So automatically it becomes a top-down approach, and you have a decent portfolio which represents multiple sectors.
Okay, perfect. Ladies and gentlemen, it couldn't have been easier than this. And this is, as I say, a mathematical and statistical exercise to find out the top 10 performers, not only within mid and small 400 index, but compare these with many other stocks in the sectors from which they represent. For instance, Anand Rathi Wealth represents the capital market space. So it is the strongest sector in the capital market segment. Granules and Laurus are a part of pharma. They are the strongest stocks within pharma, as also mid and small 400 index. And similarly, when you look at all the reasoning for Bharat Forge, for Kirloskar oil engines, HFCL, Acuitas and Arthur Energy, the same logic applies. Now, Prashantji, what you have done is created a problem for yourself. Today is the 23rd. Let us say 15 days from now will be the 10th of August, which essentially means that you and I will again get together and rework this portfolio.
Sure, we can do that. Of course, we can do that, and that would be a nice exercise actually. And then we'll again discuss which from this entire basket, which stocks are remaining in the portfolio, which are moving at. So that will be a practical exercise. People will also love to kind of experience.
Okay. Now, since time is running short, what Prashantji will also do on 10th of August is make a wonderful portfolio of 4 ETFs or 4 good funds for you on the same logic.
Sure.
Okay.
And Shelji, we will do one more thing on 10th. We'll also create one ETF portfolio on that day.
Yes, wonderful. Sure. And on that note, Prashantji, thank you for joining us. It is always such a pleasure listening to you.
Thank you so much. Thank you. Bye.
That, ladies and gentlemen, was Mr. Prashant Shah, a very well-known market investor, as also the CEO of Define Edge Securities. He runs a fabulously practically oriented statistical tool on point and figure systems, as also hundreds and thousands of scanners, and he's set up a wonderful mid and small portfolio for you, which we will review after 10th of August, every 15 days. Stay glued. Thank you for watching.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Money Today. And today we're going to be talking about your tax filing guide. Filing your income tax return is now more than just an annual compliance exercise. It's in fact an opportunity to get your finances right. But every year, taxpayers always face same questions. Which tax regime to choose? Which ITR form applies to you? What deductions can you truly claim to reduce your tax outgo? How do you avoid the mistakes that can delay your refund or even trigger a tax notice? So whether you're a salaried employee, a freelancer, an investor or a first-time taxpayer, we will simplify the entire ITR filing process and answer all the tax-related questions that will help you understand and simplify the process this time around with you. And we'll now welcome our guest on board. We have our tax expert, Gauri Chadha, with us on the program. Welcome, Gauri. Good to have you with us. Well, I think this is the busiest time for you in the season. And, last about 10 days odd when the entire rush truly comes in to file the taxes. But the biggest dilemma every year taxpayers face is choosing between the old and the new tax regime. And because there are always every year in the budget some or the other tweaks that keep happening on the old and the new tax regime, the questions keep coming and people still do not know which regime is better for them. First of all, help them understand that now that they're going to be filing the ITR for the previous season, is there still time for them to choose between old and the new tax regime? And because the new tax regime is now a default option, does it also automatically make it a better choice?
Definitely, Sakshi. First of all, I think this year is a little different. There's slight relief for us because from this year onwards, the ITR filing date for non-business people, basically salaried and people who have income from house property and maybe other sources, is 31st July. And the people who have any kind of business income, and that includes F&O trading or any intraday trading, they have time till 31st August. So now coming to your question, the dilemma is, of course, there to choose between old regime or new regime. And I feel that mostly people now have shifted to new regime for two reasons. One is that they were making unnecessary investments or claiming unnecessary deductions and, making expenses just to save taxes. So now the new regime has such lower tax rates that without making those investments or expenses, they are able to save more taxes. Secondly, new regime is very simple and the chances of getting a notice are negligible if you are filing it correctly because there's no chance of tax evasion because technically you are not getting any deduction or exemption. Whereas in old regime, if we'll see, there are a lot of notices coming since last 2-3 years. Clearly, the income tax department is not promoting old regime. And now if you will see the forms are also asking for a lot of additional details. For example, if you will see the HRA case, HRA was the most misused section. In HRA, now you have to mention the relationship with the landlord, because a lot of people were giving rent to parents, or parents were giving rent to their children. So in that case, you have to mention the relationship with the landlord. And if you are giving any donation to any political party or any charitable institution, you have to mention the reference number of the payment made. So it is not very easy to claim deductions in the old regime. Now, if you have opted for new regime in your declaration to the employer, and employer has given you Form 16 as per the new regime, you can definitely change the regime while filing the income tax return. There is no restriction on switching the regime while filing the return unless you have business income. So if you have business income, in that case, you can't switch every year. Once you can exit, but if you don't have any business income, you can change your regime any and every time, but make sure that if your employer had the knowledge of new regime, he has given the Form 16 as per new regime, and you are opting for old regime, make sure all the deductions you are claiming, all the exemptions you are claiming are genuine. You have all the documentation, because you may get a notice to clarify. I'm not saying you will, but you may get. The chances are quite high.
So first of all, there are very important 3 points that you've marked out for our viewers, Gauri, that yes, the new regime is much simpler now. There is no chance of any tax evasion. Therefore, you are safe from getting any kind of tax notices in the new tax regime. In the old tax regime, the cases have been pronounced over the last 2 to 3 years. More and more tax notices were being brought in because there was some tax evasion happening. People were misusing the deductions by claiming fake claims of these deductions. And that's something that was leading to a lot of notices. So viewers, in case you do not have all the deductions that you want to take the use of in the old tax regime, better you shift out to the new tax regime. And any which ways, your tax outgo will be lower because the tax slabs are lower in the new tax regime. Second of all, importantly, in case you've told your employer that you have opted for the new tax regime, at this point in time, if you're switching to old tax regime while filing your ITRs, you will need to have all your documentation right as well. That's another very, very important point that Gauri is really marked out for all of you. Thirdly, remember, in case you have any business income, July 31st is not the last date for you to file ITR. You can file your ITR till 31st of August. If any F&O trades that you have taken in the last financial year will be counted as business income. So for all our stock market investors, know this thing. These are the 3 very important points that Gauri has marked out. Now, Gauri, walk us through real life examples of which are the cases that you believe are sure shot to assume that new tax regime is the best for them. In case you can break it up in terms of the tax slabs, that above this or below this, it absolutely makes sense to go for you. No brainer. Go for a new tax regime. You will also save a lot of your time and effort in arranging the documents, etc. And you save yourself a lot of hassle there.
Actually, no-brainer is 12 lakhs. If your income is below 12 lakhs or say up to 12 lakhs, you have to opt for new tax regime because you will get full tax rebate and you won't pay any taxes. In old regime, the rebate is still up to 5 lakhs. So 12 lakhs is a no-brainer. Once you cross 12 lakhs threshold, you have to analyze the deductions you have. Suppose you have a lot of heavy deductions. For example, you have HRA component or you have huge EMI outgo of your residential property, your house or your commercial property. In that case, probably if you club these deductions with your ATC, your ATD, or maybe NPS, and cumulatively, if you see it becomes a substantial amount, in that case, you can opt for old regime. But before opting for old regime, you have to match both the regimes. For that, you can use the online calculator, which I always mention. It is very easy to use online. There are a lot of calculators available. You don't need any guidance for that. Just go on that calculator, enter your income, just see what taxes are being calculated under old regime, what are being calculated under new regime, and you will get a fair idea. Maybe old regime can be made even better if you add on to any deduction. For example, you have HRA, you have LTA, you have ATC. but you missed out on NPS, which was not planned. And maybe if you make those investments, NPS is basically additional 50,000, which I'm talking about, that you can just club with that, and maybe you end up saving taxes in the old regime. But above 12 lakhs, also I feel that, it will make more sense to opt for new regime for most of the people. Only when a lot of deductions, and I really mean a lot of deductions, are there, and you are willing to take that risk also to respond to the notices, if any, you should opt for old regime. Otherwise, I think just move to new regime if you are not, saving any taxes. Secondly, if you are just making these investments and deductions, expenses just to save taxes, I feel you should not be doing it, because ultimately, if your take home is better, in case you are not making those expenses or deductions, and by paying little extra tax, you can take home more salary. I think that is still better any day. But of course, it is your call. And once you have analyzed both the regimes, you can choose the same.
Okay, I think one question that a lot of people will ask you is that, say for instance, if there are very young professionals, salaried employees who have just started out and their salaries are below 12 lakhs, so there is no tax component at all, do they have to file the ITR? And plus the second category is the retirees who have no income whatsoever at this point in time. Do they also have to file ITR? These are the two most common questions that we get.
In this case, you have to see if you're falling under any other category. For example, if your income is exceeding the basic threshold limit, which is say 4 lakhs or 3 lakhs in old regime, you have to file your income tax return irrespective of the taxability. You may not be paying any taxes. Maybe there is no TDS which has been deducted. Maybe the employer didn't deduct any TDS, but you are legally required to file your income tax return. Secondly, suppose your income is below the threshold limit and you are legally not required to pay taxes, file your return, but because there was some TDS, of course you want that refund, right? If suppose you just have any FD income and 10% has been deducted and there is no other income, but when you file your return, only then you will get your refund back. Thirdly, there are few conditions. If you fall under any of these categories, even though there is no TDS deducted, even though your income is below the threshold for that particular year, you will be liable to file your return. These conditions are that if you have paid for any foreign travel for yourself or any of the family members, and that foreign travel was for more than 2 lakh rupees, you fall in this compulsory category. If your electricity bill was more than 1 lakh, you fall in this compulsory category. If your cash deposits in the savings account was more than 50 lakhs or in current account it was more than 1 CR, in that case also you have to file your income tax return. Now, if you see these amounts are substantial amounts, so the government assumes that if you have this kind of money and you can spend so much money on your foreign travel, on your electricity bill, or you have so much cash lying with you, then definitely there is some source of income which you have and you must declare that.
Okay, fine. Now, a lot of people also believe that only if I have deductions should I look at old tax regime. But those who still have a lot of tax saving planned to use deductions are now looking at new tax regime. Are there still any benefits available, or is there no deduction absolutely at all? There's often this misconception that there are no deductions at all in new tax regime.
See, technically there is no deduction because if you talk about the famous HRA, famous 80G, 80E, 80C, all of that is not
Mediclaim,
there. But standard deduction is still there. In fact, standard deduction is higher in the new regime. So you get 75,000 of standard deduction, for which you don't need any expense bills. You don't need any proof. That is something which everybody is getting. So that 75,000 is there. Apart from that, 80CCD one is there where the employer is contributing to your NPS, of course within the limits, but it is there. So that would be allowed in the new regime. Apart from that, I would say some retirement benefits are there. When you retire, you get gratuity VRS if you are taking, or you get your any other retirement benefit that is still exempt. Provided that falls under that category, because every retirement benefit which you get has a certain calculation involved to it. Within that limits, it is still exempt. So these are very few deductions which are available in new regime. But I feel that is the whole charm of new regime, because there are no deductions, the rates are easier, lesser. So the return filing becomes easier, and of course the chances of getting notices decrease. So the ease of filing, I suppose, is much higher than the old regime.
So since you talk about the ease of filing, Gauri, what would you advise to investors who don't have much complications in terms of various sources of income, if they're only salaried employees and they have a very straightforward return to file here? Can they look at filing the returns this time on their own? Are the return filing processes simplified enough that they should? Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that answers your specific stock queries on the program. In case you're here for the first time, the WhatsApp number is flashing on your screens. This is where you send me all the questions that you have about the stocks in your portfolio or onto your watch list. I'll be happy to address that with our top market experts. You can also join us live on our Business Today YouTube channel. Go to Daily Calls Live. Use the comment section there to send me your queries. I'll be happy to pick up those questions and address it with our guest. Let's now welcome our guest on board. We are joined by our favorite on the show, Pradeep Haldar, founder and CEO of PhD Capital, joining in. Welcome to you, Pradeep. Good to have you with us. Happy Friday. Although in the markets, it's creating a lot of havoc as far as the Nifty moves are concerned. We are still better off slightly, but we are still hovering below 23,700 at this point in time. The India VIX levels were sharply higher, about 8.5–9% higher in some about an hour ago or so. But you can see slow gains coming in on FMCG, pack and media stocks. The rest of the pockets are still lower in the session. But Pradeep ji, बाजार आपको कैसा लग रहा है? ये जो $100 के पार एक बार फिर से क्रूड ऑयल पहुंचा है, उसका जो एक नतीजा हमने बाजार में देखा है, वो कब तक हमें इसी तरीके से कॉशियसली ट्रेड करने की राय देता रहेगा?
हाय, गुड नून मैम आपको एंड बिजनेस टुडे के सारे ऑडियंस को, एंड थैंक यू फॉर हैविंग मी ऑन योर शो. एंड इट्स अ सेवी स्टैंडर्ड डिस्क्लेमर. जितने भी स्टॉक्स एंड इंडेक्स को लेकर आज मैं बात करने वाला हूँ, कोई भी स्टॉक्स एंड इंडेक्स हमारे पोर्टफोलियो में नहीं रहता है. नो कॉन्फ्लिक्ट ऑफ इंटरेस्ट. ऐसा कुछ रहा है हम क्लाइंटों को भी देते हैं. हो सकता है कुछ कॉल क्लाइंटों के पोर्टफोलियो में हो, हमारे पोर्टफोलियो में नहीं रहता है. एंड रजिस्ट्रेशन ग्रांटेड बाय सेबी, मेंबरशिप ऑफ बीएसई, सर्टिफिकेशन फ्रॉम एनआईएसएम, नो वे गारंटी परफॉर्मेंस ऑफ दैट इंटरमीडिएट प्रोवाइड एनी एश्योरेंस ऑफ रिटर्न टू द इन्वेस्टर्स. तो बेसिकली जिस तरीके से हमने देखा है, कल $102 के आसपास ब्रेंट भी चला गया था. और ओवरऑल आप देखेंगे दुनिया भर में 25% जो ऑयल एक्सपोर्ट है, ये कहीं ना कहीं हिट हो रहा है बिकॉज ऑफ जो हॉर्मुज अभी बंद है. अब देखेंगे रशिया का जो ऑयल टर्मिनल है वो भी 4 दिन से ऑलमोस्ट पार्शियली क्लोज्ड है. अब देखेंगे जिस तरीके से अभी ट्रम्प के जो सेक्रेटरी है ऑलमोस्ट मार्को रूबियो, उन्होंने ईरान के ऊपर अभी अलग अलग अटैक कर रहे हैं बिकॉज ऑफ वो ट्रम्प जी का ही तो बात सुनेंगे. तो मुझे लग नहीं रहा है कि ये वॉर इमीडिएट लेवल पे खत्म होने वाला. एंड जिस तरीके से धमकी दिया गया है ईरान को, आई थिंक कि ये थोड़ा बहुत और लंबा चलने वाला है. सो अगर हम निफ्टी का बात देखेंगे, कहीं ना कहीं 23,650 के आसपास आज सुबह का जब गैप डाउन ओपनिंग हुआ, उसके बाद देखिए अभी भी 23,800 एंड अबव क्लोजिंग नहीं हुआ. थोड़ा बहुत रिकवरी हुआ है, लेकिन जब तक 23,800 के ऊपर क्लोजिंग नहीं हो जाता, अगर सेकेंड हाफ में क्लोजिंग हो जाती है 23,800 के ऊपर, सो कहीं ना कहीं नेक्स्ट आपको जो टारगेट आते हुए दिखाई देंगे वो 24,000 अगेन. लेकिन जब तक वो नहीं हो रहा है, अगर 23,800 के नीचे क्लोजिंग होता है, तब जाके जो लेवल है वो 23,150 से लेकर 23,200, ये एक निफ्टी का सॉलिड लेवल है. सेकंड, अगर हम बैंक निफ्टी का देखेंगे, बैंक निफ्टी कहीं ना कहीं अभी 56,386 के आसपास है. डे लो था ऑलमोस्ट 56,000 के अराउंड. बैंक निफ्टी 56,550 ये क्रॉस करने पे एक बार आपको बैंक निफ्टी 56,900 तक आपको आते हुए दिखाई देंगे. लेकिन अगर वो नहीं होता है तो शॉर्ट टर्म सपोर्ट आपको 55,745 के लेवल पे है. मैं ये भी दोनों साइड का लेवल आपको इसलिए बता रहा हूँ क्योंकि ट्रम्प का कोई भरोसा नहीं है। और अगर संडे में ऐसा कुछ न्यूज आ जाए इवनिंग पे, नहीं वो बस मैंने धमकी दिया था वैसे ही, वो धमकी उन्होंने मान लिया और हम फिर से मेरा मूड मैं चेंज कर लिया, तो अगर ऐसा होता है तो उस केस में मंडे फिर से गैप अप होने का भी पॉसिबिलिटीज है। तो इसीलिए दोनों लेवल मैंने आपको बता दिया, बाकी सेक्टर स्पेसिफिक स्टॉक स्पेसिफिक हमारा फोकस पहले भी था अभी भी है, लेकिन थोड़ा बहुत हाई अलर्ट पे रहना है। और जब तक देखिए ये ब्रेंट क्रूड नीचे नहीं आएगा, अल्टीमेटली इट्स ए पेन फॉर अस, एंड कहीं ना कहीं ये थोड़ा मुझे लग रहा है कि हमें जो है वॉच करते रहना चाहिए जी।
ओके, फेयर पॉइंट। चलिए आज के सभी सवालों की ओर बढ़ते हैं। बहुत सारे दर्शक हमारे साथ जुड़ रहे हैं अपने सवालों को लेकर। सबसे पहला हम सवाल लेंगे यूट्यूब के ज़रिए, जो हमारे साथ दर्शक जुड़ रहे हैं उनके साथ। लाइव हमारे साथ हैं गोविंद, अवनीश, अरविंद हमारे साथ हैं, विकास भी जुड़े हैं, जतिन है। स्वागत है आप सभी का। सबसे पहले गोविंद का सवाल लेते हैं। आईटीसी के ऊपर एक आपसे व्यू जानना चाहते हैं प्रदीप जी, कैसे देखते हैं आप इस शेयर को? 2 महीनों के लिए ही एक ट्रेडिंग पर्सपेक्टिव से आपसे राय लेना चाह रहे हैं आईटीसी पर।
जी देखिए आईटीसी अगर ओवरऑल हम चार्ट देखेंगे 300 के नीचे थोड़ा अभी भी बेस बन रहा है, लेकिन किसी का एक ट्रेंड हम लोगों ने देखा है रिसेंटली, जब चलता है 1.5-2 साल तक नॉन स्टॉप चलता है और अभी कंसोलिडेशन रेंज के अंदर है। और जब सिगरेट बिजनेस पे जीएसटी इंक्रीज हो गया था उसके बाद से देखिए लगातार एक सेलिंग प्रेशर, और वो आज तक मुझे लग रहा है कि बेस अभी भी कंफर्मेशन हुआ नहीं। तो बेस बन रहा है, बेस फॉर्मेशन के टाइम पे इट विल टेक जनरली 1 to 2 quarters, एंड बिजनेस बढ़िया है, बने रहना चाहिए। 255 का एक स्टॉप लॉस होगा यहाँ पे। 307 जैसे ही क्रॉस करके सस्टेन होता है आपको 340-350 तक फिर से मूव आते हुए दिखाई देंगे। तो घबराने का कोई बात यहाँ पे है नहीं, एकदम सॉलिड बिजनेस है, होल्ड करने का ही सलाह रहेगा।
ठीक है, आगे बढ़ते हैं नेक्स्ट क्वेश्चन की तरफ। ये सवाल हमारे पास जीएस अरुण का आया है हैदराबाद से। लिखते हैं, हाय साक्षी, होप यू आर डूइंग वेल। आई एम वेरी वेल, थैंक यू सो मच मिस्टर अरुण फॉर आस्किंग एंड आई होप द सेम फॉर यू। द क्वेश्चन ही हैज इज ऑन एम फाइनेंस, महिंद्रा एंड महिंद्रा फाइनेंस। 100 शेयर्स हैं इनके पास 319 पर। कुड यू प्लीज एडवाइस वेदर आई शुड कंटिन्यू टू होल्ड फॉर लॉन्ग टर्म? व्हाट इज योर व्यू हियर प्रदीप जी?
कौन सा स्टॉक बताया, सॉरी?
महिंद्रा एंड महिंद्रा फाइनेंस 319 पर खरीदा है।
ओके, महिंद्रा एंड महिंद्रा फाइनेंस का अगर हम चार्ट देखेंगे इस वक्त अभी 363 के लेवल पे है, बने रहना चाहिए। एक सपोर्ट जो मुझे दिखाई दे रहा है वो 335 के लेवल पे। स्टॉक में एक रेसिस्टेंस जो 378 से लेके 384 के लेवल पे है, ये क्रॉस होने पे आपको एक अच्छा खासा मूव आते हुए दिखाई देंगे। फिलहाल तो अभी बने रहिए, ऐसा ज्यादा नेगेटिव नहीं लग रहा है, एक नॉर्मल सा रूटीन करेक्शन है, होल्ड करने का सलाह रहेगा।
ओके, नेक्स्ट हमारे पास क्वेश्चन आया है अवनीश का। ये लिखते हैं, हाय साक्षी, गुड आफ्टरनून। एसबीआई फंड मैनेजमेंट के आईपीओ में मुझे आईपीओ अलॉट नहीं हुआ, लेकिन उसके बाद अब जो डिप आ रहे हैं, क्या इसमें इन्वेस्ट करना चाहिए? प्रदीप, आईपीओ है, 2-3 दिन पहले ही लिस्ट हुआ है और बहुत ज़्यादा चार्ट तो आपके पास है नहीं यहाँ पर। आईपीओ के अगर हम लिस्टिंग पर्सपेक्टिव से देखें तो 7-8% तक का अप मूव इन्वेस्टर्स को दिखा था। उसके बाद कंसोलिडेट भी हुआ ये स्टॉक, थोड़ा नीचे भी गया, आज भी फ्लैट है 578 पर। कुछ आइडिया यहाँ पर?
देखिए मैम, लास्ट फ्राइडे भी आई थिंक आपको मैंने बोला था कि आई एम नॉट इंटरेस्टेड, मैं उतना इंटरेस्टेड नहीं हूँ पर्टिकुलर स्टॉक में, क्योंकि आई बिलीव कि ऑलमोस्ट सेम ही पी के आसपास चल रहा है। अगर आप ओवरऑल एएमसी बिजनेस देखेंगे ऑलमोस्ट कोई 34, कोई 38, कोई 48 के आस 42-43 के आसपास का पी पे अभी पी मल्टीपल पे चल रहा है। अब जैसे ही लिस्टिंग हुआ, लिस्टिंग के दिन भी आप देखेंगे 6-7% के आसपास ही कहीं ना कहीं लिस्टिंग गेन मिला, उसके बाद फिर से कहीं ना कहीं प्रॉफिट बुकिंग देखने को मिला। अब मेरा व्यू यही है, अगर आप शॉर्ट टर्म के लिए पर्टिकुलर स्टॉक में इन्वेस्टमेंट आपने किया है तो शॉर्ट टर्म अभी ये नहीं चलेगा, इट विल टेक सम टाइम, कंसिडरेशन के लिए टाइम चाहिए। लेकिन एज ए बिजनेस मैं अगर देख रहा हूं, अभी एसआईएफ मार्केट में न्यू प्रोडक्ट लॉन्च हुआ है, कल फिर से सेवी का सर्कुलर आया था जो पीएमएस को, सो वो कंसल्टेशन पेपर है, बाद में फिर से न्यू रेगुलेशन बन जाएंगे। वो भी थोड़ा बहुत आपने देखा कि रेगुलेशन थोड़ा बहुत ईज ऑफ डूइंग बिजनेस के तौर पे सेवी अभी कर रहा है। एंड सेकंड आप देखेंगे एआईएफ, बहुत सारे एएमसी से भी एआईएफ के जो है लाइसेंस लेने के बाद एआईएफ का बिजनेस धंधा जो है वो आगे लेके जा रहा है। एंड म्यूचुअल फंड इंडस्ट्री जिस तरीके से म्यूचुअल फंड, सो ओवरऑल मुझे ये बिजनेस बहुत ही बढ़िया लगता है, लेकिन लॉन्ग टर्म व्यू से शॉर्ट टर्म में मुझे लग रहा है कि एक बार 550-545 पॉसिबल है।
ठीक है, आगे बढ़ते हैं। अरविंद का सवाल लेते हैं। ये ऑर्कला लिमिटेड पर आपसे पूछना चाह रहे हैं, बाइंग का क्या लेवल होना चाहिए और अगले 1 साल तक के लिए अगर आप इनको टारगेट सजेस्ट कर पाएँ। ऑर्कला इंडिया अगर हम देखें तो ये एमटीआर फूड्स की पेरेंट कंपनी है और ये पिछले साल 2025 में अक्टूबर में ही आईपीओ आया था इसका। और देखा जाए तो कंपनी ने लगातार फोकस किया है अपने साउथ इंडियन फेमस चेन को ग्रो करने का, लेकिन स्टॉक प्राइस में बहुत ज़्यादा एक्सेप्शनल मूव तो कुछ दिखा नहीं, क्योंकि पिछले 6 महीने में 2-2.5% नीचे ही गया है स्टॉक। साइडवेज है काफ़ी ज़्यादा। कैसे आप देखते हैं एमटीआर फूड्स को?
एमटीआर फूड्स का चार्ट अगर हम देखेंगे कहीं ना कहीं मुझे अभी भी आप एमटीआर फूड्स का ही चार्ट के बारे में पूछ रहे हैं ना?
जी।
या अगर हम एमटीआर फूड्स को देखेंगे तो कहीं ना कहीं अभी भी मुझे लग रहा है कि ये स्टॉक थोड़ा बहुत यहाँ से नीचे आने का पॉसिबिलिटीज है। जब तक ये 485 490 का जोन रिविजिट नहीं हो जाता तब तक यहाँ पे बाई करने का सलाह नहीं रहेगा। कुछ भी उछाल मिलता है तो एक बार एग्जिट होने का व्यू रहेगा पर्टिकुलर स्टॉक्स।
ठीक है, आगे बढ़ते हैं नेक्स्ट क्वेश्चन की तरफ। ये सवाल हमारे पास आया है जतिन दवे से। ये आपसे पूछना चाहते हैं खासतौर पर अदानी एनर्जी सॉल्यूशंस के बारे में। ऑलरेडी इनके पास शेयर्स हैं 1531 पर, 350 शेयर्स अपने पोर्टफोलियो में इन्होंने रखा हुआ है। अगले 6 मंथ्स के लिए अगर टारगेट और स्टॉप लॉस जो दोनों जानना चाहें आपसे, आप इनकी क्या मदद कर सकते हैं?
अब देखिए मुझे लग रहा है कि बहुत बढ़िया चार्ट पैटर्न है, ऐसा ज्यादा कुछ प्रॉब्लम नहीं लग रहा है। हो सकता है छोटा मोटा एक डीप आपको 1602 एंड 1580 तक देखने को मिले, लेकिन बने रहना चाहिए क्योंकि ओवरऑल वीकली चार्ट पैटर्न में ना एक फ्लैग फॉर्मेशन बन रहा है। जब भी फ्लैग पैटर्न बनता है ब्रेकआउट के बाद 2-3 हफ्ता लगता है वो जो कंसोलिडेशन रेंज है इसको कवर करने के लिए। सो एक इनसाइड बार मैं चार्ट में देख पा रहा हूँ और उसके बाद का ब्रेकआउट। सो अभी तो बने रहना चाहिए, कोई प्रॉब्लम नहीं लग रहा है। इसका जो पैटर्न टारगेट होगा ऑलमोस्ट 1850 से 1900 के आसपास आपको आते हुए दिखाई देंगे।
ठीक है, आगे बढ़ते हैं नेक्स्ट सवाल की तरफ। ये सवाल हमारे पास आया है एक और हमारे दर्शक का, अमल है इनका नाम। स्टरलाइट टेक्नोलॉजीज को किस लेवल पर खरीदें लॉन्ग टर्म के लिए, ये आपसे पूछना चाहते हैं। स्टरलाइट टेक्नोलॉजीज ने काफ़ी बढ़िया परफॉर्मेंस इन्वेस्टर्स को दिखाई है। अगर हम पिछले 6 महीने की बात करें तो शेयर में 500% तक का अप मूव भी हमने देखा है। कैसे आप देखते हैं इस शेयर को?
अब देखिए ऑलरेडी एक रैली इसमें आ चुका है। मैं बोलूंगा कि एक बार आप उछाल में कोई भी उछाल मिलता है या तो करेंट जोन से एग्जिट करने के बारे में सोचिए। ऑलरेडी जिस तरीके से एक तरफा रैली हुआ है मुझे लग रहा है कि कम टाइम में समय से पहले एंड जितना प्राइस होना था उससे बहुत ज्यादा आ चुका है। सो बिकॉज ऑफ दैट रीजन मैं यही बोलूंगा एक बार आप प्रॉफिट बुक करने के बारे में सोचिए।
ठीक है, आगे बढ़ते हैं नेक्स्ट क्वेश्चन की तरफ। और ये सवाल हमारे पास आया है एक और हमारे दर्शक का जिनका नाम है विकी, और ये लिखते हैं ओलेक्ट्रा ग्रीन टेक आपको कैसा लगता है प्रदीप सर? 1530 पर मैंने लिया है ये, इस पर मीडियम टू शॉर्ट टर्म का व्यू क्या है आपका?
अब देखिए 1311 के आसपास का प्राइस अभी है और मुझे लग रहा है कि एज ए बिजनेस फंडामेंटली मुझे अच्छा लगता है, प्रॉब्लम नहीं लगता। एक बार तो ये स्टॉक 1250 भी रिविजिट करने का पॉसिबिलिटीज है अगर मार्केट थोड़ा ऐसे ही खराब रहता है तो। लेकिन यहाँ पे मुझे लगता है कि बेस बनने का पॉसिबिलिटीज है। अगर स्टॉक 1384 एंड अबव क्लोजिंग मिलता है तब जाके फिर से आपको 1514, उसके बाद आपको ऑलमोस्ट 1689 तक मूव आते हुए दिखाई देंगे। सो ओवरऑल व्यू इज पॉजिटिव, फंडामेंटल ऑल्सो पॉजिटिव। शॉर्ट टाइम में एक हेल्दी करेक्शन आ रहा है, होल्ड करने का ही सलाह रहेगा। ऐसा ज्यादा कुछ प्रॉब्लम नहीं लग रहा है मुझे।
ठीक है, नेक्स्ट क्वेश्चन लेते हैं। ये सवाल हमारे पास आया है गोविंद का। ये लिखते हैं, हाय साक्षी, प्लीज हेल्प मी गेट अ व्यू ऑन एसबीआई कार्ड्स शेयर्स फॉर 2 मंथ्स। एसबीआई कार्ड्स 2 महीने के लिए ही व्यू जानना चाहते हैं ट्रेडिंग पर्सपेक्टिव से।
अब देखिए एसबीआई का अभी 61920 के लेवल के आसपास है और अभी भी जो है कंसोलिडेशन रेंज से बाहर नहीं निकला है। ओवरऑल एक डाउन ट्रेंड सिंस 975 से चालू हुआ था। डेट रहेगा 12 सितंबर 2025। तो उसके बाद कभी भी स्टॉक ने एक अच्छा खासा मूव नहीं दिखाया। आप देखिए ओवरऑल वीकली चार्ट में जाएंगे तो देखेंगे डेली पे थोड़ा थोड़ा मूव आता है, लेकिन वीकली बेसिस पे 2-3 महीने का चार्ट देखेंगे तो समझ में आ जाएगा कि स्टॉक ओवरऑल परफॉर्म नहीं कर रहा है। बिकॉज ऑफ दैट रीजन मैं ही बोलूंगा एक बार एक उछाल में एग्जिट होने का व्यू बनाइए। अभी तो स्टॉक में रैली नहीं आ रहा है। 695 एंड अबव क्लोजिंग के बाद आपको एक 778 और 800 तक शॉर्ट टाइम में मूव आते हुए दिखाई देंगे।
ठीक है, नेक्स्ट सवाल ले लेते हैं। कल्पेश कचरिया का सवाल है, ये मुंबई से है और एक शॉर्ट पोजीशन लिया हुआ है इन्होंने अगस्त एक्सपायरी के लिए एचडीएफसी बैंक में 800 के लेवल्स पर। जानना चाहते हैं क्या 650 तक के लेवल्स भी अगस्त एक्सपायरी तक इनको देखने को मिल सकते हैं? अब देखे जाए तो एचडीएफसी बैंक के नतीजे अच्छे नहीं आए थे। लगातार ये शेयर पिछले कई साल से अंडर परफॉर्म ही कर रहा है, कोई यहाँ पर पॉजिटिव मूव्स नहीं आए हैं। बहुत सारे रीजंस रहे हैं जिसकी वजह से इस शेयर में लगातार कोई ना कोई अड़चनें बनी हुई हैं। हाल फिलहाल में इसमें जो टॉप मैनेजमेंट एग्जिट हुए थे उन्होंने काफ़ी ज़्यादा यहाँ पर रीजंस बताए थे उनके एग्जिट होने के लिए। उनका मानना था कि गवर्नेंस को लेकर काफ़ी इश्यूज हैं। इससे पहले भी जब हमने देखा था HDFC AMC के साथ जब ये डीमर्जर हुआ था, तब से लेकर अब तक अगर हम देखें तो लगातार इस बैंक में प्रेशर देखने को मिला है। इनफैक्ट इस स्टॉक ने काफ़ी ज़्यादा इन्वेस्टर्स की पेशेंस टेस्ट की है। बावजूद इसके प्रदीप जी की ऑलमोस्ट हर रिटेल इन्वेस्टर के पास ये स्टॉक होगा, ऑलमोस्ट हर म्यूचुअल फंड में HDFC बैंक का इन्वेस्टमेंट होगा। अगर हम पिछले 1 साल 2 साल 3 साल तक के भी लगातार चार्ट्स को देखेंगे तो यहाँ पर आपको लगातार अंडर परफॉर्मेंस दिखेगी। प्रदीप जी, आप कैसी राय देंगे, क्या यहाँ से और फर्दर करेक्शन हो सकता है?
देखिए, आई डोंट थिंक ये 650 आने वाला है, मुझे नहीं लग रहा है। और मुझे लगता है कि शॉर्ट पोजीशन अगर आपका है, मैक्स टू मैक्स स्टॉक्स आपको 715 to 20 तक आते हुए दिखाई देंगे। बिकॉज ऑफ, देखिए, रिसेंटली हम लोगों ने 40 करोड़ का एक स्कैम भी सामने देखा, उसके बाद मैनेजमेंट चेंजेस, अलग अलग चीजें। जब जैसे ही स्टॉक 750 के आसपास आ रहा है, लोगों को लग रहा है कि ये और नीचे आएगा। जैसे 800 के ऊपर आया, मैं तो देखा 4-5 रिपोर्ट आ गया कि ये फिर से 900 होने वाला है। फिर से जैसे 800 के नीचे आया, बिकॉज मार्केट भी नीचे आया, फिर से लग रहा है 650 आ जाएगा। ऐसा नहीं हो सकता है, HDFC बैंक है। तो हो सकता है कि शॉर्ट टर्म टेम्पोररी एक नेगेटिव सेंटीमेंट देखने को मिल रहा है। ऑब्वियसली इसमें मोमेंटम 800 एंड वो भी पॉसिबल है, उससे पहले तो नहीं लग रहा है। लेकिन शॉर्ट अभी भी है, वीकली चार्ट पे अभी भी वीकनेस है। मुझे लग रहा है कि मैक्सिमम 700 इज एनफ, उससे ज्यादा तो नीचे मैं नहीं देख पा रहा हूँ। तो आप देखिए आपका शॉर्ट कहाँ पे आप कट करेंगे। सो कहीं ना कहीं 715-25 के आसपास आपको कर देना चाहिए। 741 चल रहा है। मैं यहाँ से एक स्टैगर मैनर पे बाई पोजीशन इनिशिएट करने का प्लानिंग हम लोग कर रहे हैं। और HDFC बैंक है, तो एटलीस्ट अगर आप बैंक पे इन्वेस्ट कर रहे हैं 1.5-2 साल का, तो हॉराइजन आपको रखना चाहिए जी।
एब्सोल्युटली। आगे बढ़ते हैं नेक्स्ट क्वेश्चन की तरफ। सवाल हमारे पास एक और हमारे दर्शक का है यूट्यूब पर, और सवाल है खास तौर पर अरविंद का ऑलरेडी हमने सवाल लिया है। यहाँ पर जो सवाल नेक्स्ट हमारे को मिला है ये ग्लैंड फार्मा को लेकर है। ग्लैंड फार्मा में करंट आउटलुक क्या है, क्या फार्मा स्पेस में से ये शेयर आउट परफॉर्म कर सकता है या नहीं, ये सवाल आपके लिए आया है।
देखिए, ग्लैंड फार्मा अगर हम मैम देखेंगे, ओवरऑल स्ट्रक्चर अच्छा ही लग रहा है। और अभी भी मुझे लगता है कि शॉर्ट टर्म में करेक्शंस पॉसिबल है यहाँ पे, ऑलमोस्ट 2292 के रेंज के आसपास, लेकिन बने रहना चाहिए, कोई ज्यादा प्रॉब्लम नहीं लग रहा है। एक बार रैली आपको 3250 तक मुझे लग रहा है कि पॉसिबल है। थोड़ा 3 क्वार्टर का टाइम फ्रेम यहाँ पे आपको मेंटेन करना चाहिए।
ठीक है, नेक्स्ट तपन का सवाल लेते हैं। ये कोलकाता से हैं, लिखते हैं नमस्कार साक्षी मैम। नमस्कार आपको भी। तपन, कैसे हैं आप? ट्रांसफॉर्मर्स एंड रेक्टिफायर्स, यहाँ पर इनका क्वेश्चन है। अपने पोर्टफोलियो में 301 के लेवल पर खरीदा हुआ है। एक रिव्यू आपसे जानना चाहते हैं, एवरेज करना चाहिए या नहीं, ये भी आपसे समझना चाहते हैं।
अभी तो स्ट्रक्चर वाइज एक क्रैक डाउन हो चुका है मंथली बेसिस पे। सो यहाँ पे तो मुझे नहीं लग रहा है कि आपको फिर से एवरेज करने का सलाह मैं नहीं दूंगा। अगर कभी भी 255 एंड 260 के लेवल के आसपास आता है, वो आपके लिए एक फिक्स्ड एंड फाइनल स्टॉप लॉस है। देखिए, ये स्ट्रैटेजी सही नहीं है कि हर कोई स्टॉक नीचे आ रहा है और वहां पे हम एवरेज करेंगे। कुछ चीजें ऐसा होता है कि महंगा खरीदेंगे तो महंगा बेच भी पाएंगे। सो ये स्टॉक ऑलरेडी 570 से लगातार नीचे आ रहा है। सो मुझे लगता है कि एक बार आपको अवॉइड ही करके चलना चाहिए।
ओके, नेक्स्ट सौरभ का सवाल लेते हैं। NBCC, यहाँ पर इनका सवाल है कि क्या करना चाहिए शेयर में। 108 की बाइंग है, इनकी आउटलुक क्या है आपका?
मैम देखिए, इनको ना ऑर्डर मिलते रहते हैं हर 2-3 महीने में, आपने भी देखा होगा, बहुत ऑर्डर मिलते हैं, बाकी स्टॉक नहीं चल रहा है। एंड मैं ही बोलूंगा, स्टॉक जब तक नहीं चल रहा है तब तक मेरे तरफ से बाई कॉल नहीं आएगा। और 108 के आसपास अगर है, एक फाइनल स्टॉप लॉस आप 84 के आसपास मेंटेन कीजिए, बने रहिए। फ्रेश किसी को बाई नहीं करना। अगर कभी भी घूम फिर के स्टॉक आप 128 एंड अबव सस्टेन होता है, तब जाके यहाँ पे एक बाई कॉल इनिशिएटिव हम करेंगे, लेकिन उससे पहले नहीं।
ठीक है, नेक्स्ट क्वेश्चन लेते हैं। और ये सवाल हमारे पास आया है एक और हमारी दर्शक का, मोमिता है, ये कोलकाता से, और लिखते हैं प्रदीप जी, इट्स ऑलवेज सो गुड टू सी यू। और लिखती हैं सर आदित्य बिरला कैपिटल के बारे में बताइए, 274 पर मैंने लिया है और दूसरा शेयर मैंने एयू स्मॉल फाइनेंस बैंक का लिया है 683 पर. दीज टू स्टॉक्स आर नॉट एबल टू ब्रेक द टॉप रेजिस्टेंस. व्हाट शुड आई डू इन बोथ स्टॉक्स? ओके मोमिता, विल हेल्प यू आउट. आदित्य बिरला कैपिटल bought at 274 and AU Small Finance Bank at 683. Although AU Small Finance Bank, she is holding in good profits. The stock is now at 978, but she constantly feels that there is a resistance at play in both these stocks. AB Capital currently at 390. Here also she is holding on to profits.
जी देखिए, मुझे लगता है कि बिजनेस टुडे पे दिस इज माय फर्स्ट स्टॉक. जो स्टॉक मैंने रिकमेंड किया था आदित्य बिरला कैपिटल, एबी कैपिटल, इसमें अप एंड हैंडल फॉर्मेशन पैटर्न बना था वीकली चार्ट पे और उसके बाद लगातार हायर हाई फॉर्मेशन कंटिन्यू है. मुझे लगता है कि स्टॉक बने चाहिए. रिसेंटली हम लोगों ने रिजल्ट भी देखा था. आपको 650 700 तक मुझे लगता है कि मूव पॉसिबल है. 1.5-2 साल का व्यू रखिए मोमिता मैम आप, एंड बने रहना चाहिए आपको. एयू स्मॉल फाइनेंस बैंक शॉर्ट टाइम में एक सपोर्ट ऑलमोस्ट आपका 878 के लेवल पे है, तो यहाँ पे आप मेंटेन करके होल्ड कीजिए फिलहाल अभी. लेकिन अगर आप थोड़ा बहुत यहाँ पे 3 से 4 क्वार्टर का टाइम देते तो स्टॉक भी आपको 1250 से 1300 का भाव आते हुए दिखाई देंगे. मेक श्योर ये ज्यादा स्पीड के साथ नहीं भागता हुआ नजर आएंगे क्योंकि बैंकिंग स्टॉक है, उतना तेजी में अभी इमीडिएट लेवल पे नहीं देख रहा हूँ. लेकिन आदित्य बिरला कैपिटल, एवी कैपिटल वन ऑफ माई फेवरेट स्टॉक है, बने रहना चाहिए.
ठीक है, उम्मीद करते हैं यहाँ पर भी आपको पूरी तरीके से अंडरस्टैंडिंग हो गई हो कि कैसे आपको बढ़ना है आगे. नेक्स्ट सवाल की तरफ आगे बढ़ते हैं. और भी हमारे साथ दर्शक लगातार जुड़ रहे हैं. श्री हरि कृष्णा हैदराबाद से लिखते हैं, प्रदीप सर, आई एम होल्डिंग बंधन बैंक एट 215. Also, I am holding rights shares at 225. Can you please tell me about these stocks? Should I exit or hold? And what would your overall view be? अब देखा जाए तो बंधन बैंक के अभी पिछले हफ्ते ही नतीजे आए और लगातार इस शेयर में काफ़ी गिरावट हमने देखी. और राइट्स तो रेलवे स्पेस में से बिल्कुल ओवरऑल स्पेस ही अंडर परफॉर्म कर रही है. 225 पर इन्होंने खरीदा हुआ है. बंधन बैंक 215 से खरीद कर रखा हुआ है इन्होंने, अभी 164 पर आ चुका है. प्रदीप जी, क्या यहाँ पर बने रहना चाहिए या फिर कोई उम्मीद नहीं है, क्योंकि अर्निंग्स भी काफ़ी खराब आए हैं?
मुझे तो कोई उम्मीद नहीं है बिकॉज ऑफ वन रीजन. मतलब जिंदगी में मैंने एक बार ही ट्रस्ट किया था बंधन बैंक के ऊपर और कॉल भी दिया था और वो चला नहीं. 199 या 198 के आसपास का एक स्टॉप लॉस भी ट्रिगर हुआ है. अब इसमें क्या हुआ है अब देखेंगे. एक चीज मैं थोड़ा इसमें 1 मिनट भी लेना चाहूंगा क्योंकि लास्ट 7% भी रिटर्न नहीं दिया. अब देखें 2018 के बाद जब लिस्टिंग हुआ था उसके बाद से स्टॉक चला ही नहीं. बैंक निफ्टी 100% से ज्यादा रिटर्न दे दिया, निफ्टी बैंक इटसेल्फ. बाकी बंधन बैंक 7% भी नहीं चला. उसके बाद चंद्रशेखर घोष जी जो बंधन बैंक के एमडी एंड फाउंडर भी थे, उन्होंने ट्राई किया अलग अलग मैनेजमेंट को लेके अलग अलग काम करने का. जब उनका रिटायरमेंट अनाउंसमेंट हुआ आरबीआई के बाद, उसके बाद बैंक पे चेंजेस हुआ हमने देखा. पार्थ प्रतिम सेनगुप्ता जी 2024 में बैंक पे एज ए लीडिंग मैनेजर वो एज ए एमडी वो ज्वाइन किए. उसके बाद उम्मीद थोड़ा था कि बैंक यहाँ से चलेगा और एनपीए भी उस टाइम पे कम हुआ था जो नॉन परफॉर्मिंग एसेट है. 134 135 से लगातार एक हायर हाई परफॉर्मेंस बनाया. 200 के ऊपर भी सस्टेन किया था लगभग 1 महीने के आसपास. लेकिन जिस तरीके से अभी फिर से रिजल्ट वगैरह आए, गाइडेंस आए, मार्केट को पसंद नहीं आया, फिर से नीचे आया. तो मेरा सवाल उन सारे रिटेलर इन्वेस्टर से है, क्या आप ऐसा कोई बैंक में पैसा इन्वेस्ट करना पसंद जो बैंक 7 साल में 7% भी नहीं चला, जहां पे निफ्टी बैंक 100% से ज्यादा चल गया है. सो बिकॉज ऑफ दैट रीजन आई एम आउट. एंड मुझे लग रहा है कि यहाँ पे कुछ भी उछाल मिलता है किसी को रहना नहीं चाहिए, एक बार एग्जिट ही करना चाहिए.
ओके, बिल्कुल. चलिए आगे बढ़ते हैं नेक्स्ट क्वेश्चन की तरफ. और सवाल हमारे पास आया है श्रीकांत का. ये मैसूर से हमारा शो देख रहे हैं. वेलकम श्रीकांत. ही सेज, आई वांट टू नो अबाउट सीमेंस फॉर शॉर्ट टर्म. शुड आई लुक एट दिस कंपनी? सीमेंस देखा जाए तो काफ़ी बड़ी इंजीनियरिंग कंपनी है और देखा जाए तो काफ़ी लंबी हिस्ट्री है. एक इंडियन कंपनी लेकिन कुछ जर्मन रूट्स हैं कंपनी के. और अगर हम देखें तो मेट्रो सिटीज़ में मेट्रो रेल में जब भी आप ट्रैवल करते हैं तो उसका काफ़ी ज़्यादा इसमें इनका कंट्रीब्यूशन है. और इंफ्रास्ट्रक्चर स्पेस में काफ़ी एनर्जी प्रोवाइड करते हैं कंपनी. और अब कंपनी का काफ़ी ज़्यादा कामकाज एआई में है और बहुत सारे इंडस्ट्रीज़ को इंडस्ट्रियल एआई में कामकाज कंपनी काफ़ी करती है. सीमेंस अभी आपको कैसा लग रहा है? 3687 पर चल रहा है शॉर्ट टर्म के लिए, लेकिन व्यू हो तो क्या सलाह देंगे?
बहुत बढ़िया लग रहा है स्टॉक के साथ, मुझे लगता है कि बने रहना चाहिए। आप एक टारगेट शॉर्ट टाइम में 3850 तक आते हुए दिखाई देंगे। अगर 3880 एंड अबव क्लोजिंग होता है, फिर से आपको 4200 4400 तक मूव आते हुए दिखाई देंगे, बने रहना चाहिए। और एक स्टॉक आपने पूछा था लेकिन मैं भूल गया था, वो है राइट्स। राइट्स पे लगातार एक तरफा हम लोगों ने सेलिंग देखा है, और कहीं ना कहीं मुझे लगता है कि कुछ भी उछाल मिलता है, अगर कभी भी कुछ ऑर्डर मिलने का न्यूज आता है, तो उस दिन कहीं ना कहीं हम लोगों ने पास्ट में भी देखा है कि उछाल देखने को मिलता है। उछाल में एक बार सेल ऑन राइज व्यू इसमें होगा। अल्टीमेटली सिंस मार्च 2024 से स्टॉक एंड इंटर सेक्टर नहीं चल रहा है, तो जो अभी 2 साल हो रहा है नहीं चल रहा है, अभी भी मुझे लगता है कि 6-8 महीना पॉसिबल है, नहीं चलेगा। तो एक बार कोई भी उछाल मिलता है, एग्जिट होने का ही व्यू बनाइए।
ओके, लेट्स टेक द नेक्स्ट क्वेरी। दिस वन इज फ्रॉम कमलेश नरखेड़े। ये पूछते हैं, प्रदीप सर, अपार इंडस्ट्रीज आपको कैसा लगता है? और 11,700 पर मैंने लिया है, कितने पर एवरेज करना चाहिए? इसके रिजल्ट्स भी आने वाले हैं, क्या एक्सपेक्टेशन है अपार इंडस्ट्रीज को लेकर? पहले तो चार्ट्स पर ही बात कर लेते हैं अपार इंडस्ट्रीज की। खरीदा हुआ है इन्होंने 11,700 पर, प्रॉफिट में है, 13,380 पर चल रहा है अभी ये शेयर। और अगर हम लगातार देखें कंपनी के शेयर पर प्राइस परफॉर्मेंस को, तो पिछले 6 महीने में 85% तक की रैली ऑलरेडी देखने को मिल चुकी है। क्या एक्सपेक्टेशंस है इस शेयर पर प्राइस परफॉर्मेंस को आगे कंटिन्यू होते हुए देख रहे हैं आप?
मुझे लग रहा है कि बहुत बढ़िया एक वैल्यू जोन में है, क्योंकि ऑलरेडी स्टॉक चला हुआ है। तो इसके बाद अब टॉप से देखेंगे, ऑलमोस्ट मोर देन 20% से ज्यादा करेक्शन रिसेंट टाइम पे हो चुका है। सो ज्यादा से ज्यादा मैक्सिमम, और मैं यहाँ पे 5 to 8% का करेक्शन एक्सपेक्ट कर रहा हूँ, इससे ज्यादा नहीं है। वैल्यू जोन में है, बाय करके चलना चाहिए। अगेन स्टॉक आपको ऑल टाइम हाई आपको आते हुए दिखाई देंगे, जो कि ऑलमोस्ट 16,300 एंड अबव है, ये भी लेवल आपको मिलेंगे। सो अगर हम यहाँ पे बाय करते 12,700 से लेके 13,250, इस लेवल पे स्टैगर मैनर पे बाय करने का सलाह रहेगा। स्टॉप लॉस आपको 11,450 के लेवल पे मेंटेन करना है। पहला टारगेट आपको यहाँ पे ऑलमोस्ट 15,500, उसके बाद आपको 16,800 एंड अबव आते हुए दिखाई देंगे।
ठीक है, लेट्स टेक द नेक्स्ट क्वेरी। दिस वन इज फ्रॉम अथर्व। ही सेज, प्रदीप सर, गोल्डियम इंटरनेशनल पर बताइए, 358 की परचेज है, क्या करना चाहिए गोल्डियम पर?
गोल्डियम इंटरनेशनल,
जी, 358 की इनका परचेज है।
358 का परचेस है और 349 चल रहा है। यहाँ
बिल्कुल।
पे 308 के लेवल पे एक स्टॉप लॉस मेंटेन कीजिए, एंड 370 तक मैं देख पा रहा हूँ, लेकिन कहीं ना कहीं रेसिस्टेंस है यहाँ पे। तो एक बार उछाल में ज्यादा एग्रेसिव व्यू यहाँ पे अप साइड में मैं नहीं देख पा रहा हूँ। बीच बीच में आपको सेलिंग भी मिलेंगे, तो ऐसे काउंटर है ये। तो उस हिसाब से देखा जाए तो एक बार जैसे ही आपका बाइंग कॉस्ट टू कॉस्ट आए, एक बार एग्जिट होने का व्यू रहेगा।
ठीक है, नेक्स्ट क्वेरी लेते हैं। ये सवाल हमारे पास आया है स्वाति का। ये लिखते हैं, अंबुजा सीमेंट्स पर बताइए प्रदीप सर, कैसे देखते हैं आप इस शेयर को, और क्या यहाँ पर और इन्वेस्ट करना चाहिए या नहीं?
मुझे लगता है कि सीमेंट सेक्टर को लेके मार्केट पे अभी उतना डिस्कशन नहीं है। एंड सीमेंट सेक्टर में देखा जाए तो अगर हम देखेंगे, धीरे धीरे इनफ्लो आ रहा है। अब बिकॉज ऑफ मार्केट अवेयरनेस उतना ज़्यादा अभी नहीं है, लोग डिस्कशन भी नहीं कर रहा है, तो दिस इज द राइट टाइम फॉर एंट्री। क्योंकि जब सारे जगह पे डिस्कशन होता रहेगा तो होंगे, तो उस टाइम पे ऑलरेडी स्टॉक चला हुआ होगा, और अच्छा खासा एक बेस के आसपास है, 426 के लेवल के आसपास है। बाय करके चलना चाहिए। यहाँ से मैं एक स्टॉप लॉस यहाँ पे 385 के लेवल पे मेंटेन करना पसंद करूंगा। टारगेट यहाँ पे 485, उसके बाद आपको 570, उसके बाद 650 तक मूव आपको आते हुए दिखाई देंगे। एक साल का व्यू रखेंगे तो बहुत प्रॉफिटेबल होने का पॉसिबिलिटीज यहाँ पे है।
ठीक है, नेक्स्ट क्वेरी हमारे पास है, और ये सवाल हमारे पास सौरभ का है। ये लिखते हैं, सर, सूजलॉन में क्या करना चाहिए? 62 की बाइंग है अभी, आप ये शेयर में कुछ रिकवरी देख रहे हैं या नहीं?
सुजलॉन अभी नहीं चलेगा, क्योंकि एक थीम हम लोगों ने देखा है, जो भी स्टॉक्स, जो भी थीम सिंस 2021, 22, 23 एंड 24 जून जुलाई तक चला है, उसके बाद नहीं चल रहा है। इसका रियल एग्जांपल कुछ डिफेंस काउंटर है, इसका रियल एग्जांपल कुछ रेलवे है, इसका रियल एग्जांपल इट्सेल्फ सुजलॉन भी है। आप देखेंगे 21, 22, 23 चला है। अब जो टॉप बना था एग्जैक्टली वो बना था ऑलमोस्ट अगस्त 2024 के आसपास, उसके बाद स्टॉक चला नहीं। और अभी भी मुझे लगता है कि स्टॉक उतना तेजी एक तरफा अप ट्रेंड आपको नहीं मिलेंगे, लेकिन एक स्टॉप लॉस आप 47 के आसपास मेंटेन कीजिए। टारगेट यहाँ पे 64, 71 तक मैं देख पा रहा हूँ। 2-3 क्वार्टर का व्यू रहेगा यहाँ पे।
ठीक है, नेक्स्ट क्वेश्चन है सत्यन का, ये भी सीधा रेन्यूएबल एनर्जी और विंड स्पेस से ही है। आइनॉक्स विंड पर पूछ रहे हैं आपसे, इज इट शोइंग एनी काइंड ऑफ बाइंग एक्टिविटी, प्लीज सजेस्ट फॉर शॉर्ट टर्म सर।
देखिए 2024 में जब 242 के आसपास का प्राइस था, उसके बाद अभी 76 के आसपास प्राइस है, और थोड़ा आप 6 महीना वेट करेंगे तो 55 भी ऑन द वे। तो 55 ऑन द वे। बिकॉज ऑफ दैट रीजन मैं इससे एक बार आउट होना पसंद करूंगा, और मैं जिन्होंने क्वेश्चन किया है मैं उनको भी यही एडवाइस करूंगा कि ये होप मत रखिए कि यहाँ से स्टॉक आपको बाई करना है, एवरेजिंग करना है, क्योंकि आई आई कैन ऑल्सो अंडरस्टैंड द पेन। बिकॉज अगर कोई स्टॉक हमारे पोर्टफोलियो में रहता है, सो इट्स ए इमोशनल अटैचमेंट विथ मनी, एंड इट्स ए साइकोलॉजी ऑफ स्टॉक मार्केट कि हम स्टॉक को बेचना नहीं चाहते, थोड़ा नीचे आने पे एवरेज करना चाहते। तो देखिए 250 से नीचे आते 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 76 आ चुका है, और 6 महीना तो और नीचे मिलेंगे। जब तक यहाँ पे स्ट्रेंथ नहीं आया था, वो स्ट्रेंथ आपको 104 एंड एबो भी पॉसिबल होगा। तो थोड़ा महंगा खरीदेंगे तो महंगा बेच भी पाएंगे। जब तक वो नहीं हो रहा है, नहीं आना चाहिए। उछाल में एग्जिट होने का व्यू आपको मेंटेन करके चलना पड़ेगा।
ठीक है प्रदीप जी, तो दोनों ही सुजलॉन और आइनॉक्स विंड रेन्यूएबल एनर्जी के स्टॉक्स में अभी कहीं मूव नहीं आ रहा है, तो फिलहाल दोनों से ही आप दूर रहें, ये सलाह आपको दी जा रही है। नेक्स्ट क्वेश्चन लेते हैं। सवाल हमारे पास आया है मनोज गुप्ता का, ये न्यू दिल्ली में है, और लिखते हैं कि आई वांट टू मेक अ फ्रेश इन्वेस्टमेंट इन वाटेक वाबाग फॉर 1 to 2 year टाइम होराइजन। Considering the stock is currently around 2080, can you please advise ideal entry price or any dips in which I should take an entry into this stock for a medium term view? What is your understanding on Vatik Wabag, sir?
बने रहना चाहिए। स्ट्रक्चर वाइज बहुत बढ़िया स्टॉक है। रिसेंटली एक ब्रेकआउट भी वीकली ट्रेंड पे देखने को मिला था, उसके बाद अभी कंसोलिडेशन रेंज में है। तो बिल्कुल होल्ड कीजिए। मुझे लगता है कि इट विल टेक एटलीस्ट 1 quarter टू रीच 2650, आपको आते हुए दिखाई देंगे। एक स्टॉप लॉस मैं यहाँ पे 1850 के लेवल पे मेंटेन करना पसंद करूंगा। बिल्कुल बने रहिए, अप ट्रेंड में है स्टॉक।
ओके, अप ट्रेंड में स्टॉक है, बने रहिए, ये आपके लिए सलाह है मनोज जी। आगे बढ़ते हैं, धर्मेंद्र जी का सवाल लेते हैं। ये पूछना चाहते हैं आपसे, खास तौर पर एक सवाल है इनका, इनोविजन। मैं पहले शेयर निकाल लेती हूँ जो इन्होंने ख़रीदा है। ये कहते हैं कि इन्होंने 519 रुपये पर ये शेयर लिया हुआ है, और आई थिंक देखा जाए तो शायद मार्च में ही ये आईपीओ आया था, और उसके बाद अभी ये पूछना चाहते हैं कि इसमें क्या करना चाहिए। आई थिंक इनके पास 27 शेयर्स हैं, 519 पर लिए हैं। इनोविजन आप ट्रैक करते हैं इसे क्या?
नो 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 नो, मैं ट्रैक नहीं करता।
Okay, unfortunately we will not be able to advise you on this, Dharmendra ji. Please let us know in case there is any other question there. आके पूछते हैं हम मोहित लुधियाना से। ये लिखते हैं ICICI प्रूडेंशियल लाइफ इंश्योरेंस के बारे में। ये शेयर अगले 2 साल के लिए आपको कैसा लगता है, और इसमें क्या आप सलाह दे सकते हैं?
देखिए ओवरऑल लाइफ इंश्योरेंस स्पेस लॉन्ग टर्म के लिए बढ़िया है, और उतना बढ़िया चला नहीं है। अभी भी 501 के लेवल पे है, वैल्यू जोन में है। मुझे लग रहा है कि आपको एक बार 549 550 तक मूव आते हुए दिखाई देंगे। सो बिल्कुल होल्ड कीजिए, बने रहिए। 630 तक भी मूव आपको मिलेंगे, वैल्यू जोन के आसपास है। इसीलिए मैं अभी यहाँ पे शॉर्ट नहीं करना पसंद करूंगा। मुझे लगता है कि यहाँ से बाइंग आपको फंड, यहाँ पे जो रैली होगा ना, ये फंडामेंटल ड्रिवन रैली होगा, ये टेक्निकल ड्रिवन रैली नहीं होता है ऐसे काउंटर में। तो इट विल जनरली सम टाइम 1.5 ईयर्स का व्यू रहेगा। बने रहिए स्टॉक के साथ।
ऑलराइट, नेक्स्ट आगे बढ़ते हैं, और सवाल हमारे पास आया है संजय का, और ये आपसे AIIGL के बारे में जानना चाह रहे हैं। IGL तो नहीं है आपका शेयर, मेरे ख्याल से IGL ही पूछा होगा आपने। IGL इन्होंने ख़रीदा हुआ है, नहीं, आई थिंक IGL का भी प्राइस 149 है, इन्होंने 350 के ऊपर लिया हुआ है। एक बार देखते हैं, क्या आप ट्रैक कर सकते हैं एक बारी प्रदीप जी? AIIGL के नाम से आपको कोई शेयर मिल रहा हो तो?
AIIGL
ऑथम इन्वेस्टमेंट तो नहीं है कुछ? ऑथम इन्वेस्टमेंट एंड इंफ्रास्ट्रक्चर
AIIL है शॉर्ट फॉर्म इसका। ये है तो 534 के आसपास का प्राइस चल रहा है। यहाँ पे बने रहना चाहिए, क्योंकि इससे पहले भी स्टॉक का अप ट्रेंड था, बीच में प्रॉफिट बुकिंग देखा। अभी जो बाइंग आ रहा है वॉल्यूम बेस्ड बाइंग हो रहा है, और 504 के लेवल के आसपास का एक स्टॉप लॉस होगा। टारगेट आपको यहाँ पे 617, जो कि 27 जून 2026 का एक टॉप था, यहाँ पे नेक्स्ट टारगेट आपको बनते हुए दिखाई देंगे। सो होल्ड करने का सलाह रहेगा, बने रहिए, ऐसा कुछ प्रॉब्लम नहीं लग रहा है।
All right, okay, let's take another question. Sudhir Lakhar का सवाल लेते हैं, लिखते हैं, I have a question regarding my investment plans. I'm considering buying Exide Industries and also Bank of Maharashtra. I'm 64 years old. Would you recommend investing in these stocks for long term? And would a short term investment be better suitable considering my age at this point in time? So we'll definitely help you out understanding this, Sudhir ji. First of all, you need to identify when you are investing in these stocks, are they to fulfill your own financial goals, or are you building wealth for your future generation? If that is the case, then you should identify long-term view. If you are only building wealth for yourself, for your retirement, then probably shorter-term view is better for you. Let's try and understand. Exide Industries battery space से, Bank of Maharashtra PSU banking space से, दोनों में शॉर्ट टर्म या लॉन्ग टर्म कहाँ पर बेहतर इनको मुनाफा मिल सकता है, या दोनों शेयर्स आपको कैसे लगते हैं?
देखिए उनके एज के हिसाब से मुझे लगता है कि सर आपको बैंक ऑफ महाराष्ट्र को अभी अवॉइड करना चाहिए। इसके पीछे रीजन भी है। आप देखेंगे 2007-8 का एक टॉप था, ये आपको 3 महीने का चार्ट देखना पड़ेगा और एकदम लॉन्ग पे जाके बैंक ऑफ महाराष्ट्र को देखेंगे तभी आपको देखने को मिलेगा। 95-96 के आसपास का एक टॉप बना था। आई थिंक वो बहुत सारे लोगों का वो डेटा भी नहीं आएगा जब तक वो 94-95 का जो जोन है वो क्रॉस नहीं होता है। यहाँ पे आपको बाई नहीं करना चाहिए। एंड सेकंड, अगर आपको बैंकिंग में रहना है, मुझे लगता है कि बहुत सारे सेफ थिंग भी है, वहां पे आपको थोड़ा फोकस करना चाहिए। एक्साइड इंडस्ट्री का चार्ट मुझे थोड़ा एक्साइटमेंट लग रहा है एंड मुझे लग रहा है कि यहाँ से 550 एक शॉर्ट टर्म, उसके बाद ऑल टाइम एक हाई भी पर्टिकुलर स्टॉक्स में आपको आते हुए दिखाई देंगे। तो फंडामेंटल एक्साइड इंडस्ट्री का बहुत बढ़िया है, यहाँ पे कुछ प्रॉब्लम नहीं है, लेकिन बैंक ऑफ महाराष्ट्र आपको अवॉइड करने का सलाह रहेगा। और फॉर यू मुझे लग रहा है कि क्योंकि आपका एज थोड़ा आप सीनियर भी हो एंड आपको रिटर्न ही चाहिए मार्केट से, सो अभी निपॉन इंडिया ETF का गोल्ड बीज जिसका प्राइस अभी 117 के आसपास का प्राइस चल रहा है, मुझे लगता है कि थोड़ा सेफ भी रहेगा। और अगर आप 1.5-2 साल टाइम देंगे ना, फिर से आपको गोल्ड ऑल टाइम हाइस पे आते हुए दिखाई देंगे। और ये रिकमेंडेशन हम कब दे रहे, जब गोल्ड अपने ऑल टाइम हाई से अच्छा खासा करेक्शन है। तो अगर आप देख रहे हैं कि गोल्ड एक बहुत ही बढ़िया एसेट क्लास माना जाता है इंडियन मार्केट में, एंड जिस तरीके से ऑलरेडी अच्छा खासा एक करेक्शन हम लोगों ने देखा है, ये वार वगैरह जैसे ही थोड़ा बहुत ये सब नॉर्मल होगा ना, आपको यहाँ से शार्प रैली गोल्ड में आते हुए दिखाई देंगे। एंड मुझे लगता है कि नेक्स्ट मैक्स टू मैक्स 1 से 1.5 साल लग सकता है। ऑल टाइम हाई ऑन द वे, गोल्ड पे फिर से आपको ऑल टाइम हाई आते हुए दिखाई देंगे। इस केस में जो अभी गोल्ड निपॉन इंडिया ETF जो गोल्ड वीज है 117 के आसपास चल रहा है, ऐसे शार्प मैं 50-60% का एक अपसाइड देख पा रहा हूँ नेक्स्ट 1.5 साल के अंदर अंदर। सो आपका एज को ध्यान में रखते हुए मुझे लगता है कि गोल्ड वीज आप लेके चलिए। ऐसे छोटे छोटे स्टॉक बैंक ऑफ महाराष्ट्र, एक्साइड इंडस्ट्री में आप जाएंगे तो अल्टीमेटली आपका नुकसान होने का चांसेस रहेगा।
ओके, गॉट दैट। तो ये तो आपने सीनियर सिटीजन्स के लिए बताया, साथ ही में जो हमारे यंग इन्वेस्टर्स हैं उनके लिए कुछ की स्टॉक आइडियाज प्रदीप जी आज के लिए?
जी, आज के लिए जो रहेगा वो है वेदांता। वेदांता का चार्ट मुझे अच्छा लग रहा है एंड रिसेंटली हम लोगों ने देखा कि एंटायर वेदांता ग्रुप में जब डिमर्जर हुआ उसके बाद से इटसेल्फ वेदांता नॉन स्टॉप 350 से नीचे आ रहा था। नीचे आने के बाद अभी जो हुआ है लास्ट 2-3 दिन का जो सेलिंग हुआ है मार्केट में पार्टिसिपेट नहीं किया है एंड मुझे लग रहा है कि यहाँ पे एक बेस बन रहा है एंड अच्छा खासा सेलिंग यहाँ पे आ चुका है। जो टारगेट यहाँ से होना चाहिए वो होगा आपका पहला टारगेट 278, सेकंड टारगेट 294, थर्ड टारगेट आएगा 330। स्टॉप लॉस मैं यहाँ पे 239 के लेवल पे मेंटेन करना पसंद करूंगा। तो जो मेरा रिस्क रिवॉर्ड बनेगा वो रहेगा 10% नीचे एंड 20% अपसाइड पे। तो 20% का टारगेट मैं मिनिमम देख पा रहा हूँ। रिस्क लेने में मैक्सिमम 10% का रिस्क, और ऐसे टाइम में जहां पे 3-4 दिन मार्केट नीचे आ रहा है लेकिन वेदांता का कोई रिएक्शन नहीं, क्योंकि इससे पहले ऑलरेडी करेक्शन हो चुका है। अभी ब्रेकआउट जोन को मैं चेज नहीं कर रहा हूं। इस वजह पे बेस ऐसा कौन सा स्टॉक्स में बना है इसको मैं ढूंढ रहा हूं। उसमें से एक स्टॉक वेदांता है। करेंट जोन से 20% का अपसाइड 2 महीने का टाइम फ्रेम रहेगा।
ऑल राइट, ओके, चलिए उम्मीद करते हैं यहाँ पर भी आपको पूरी तरीके से सेटिस्फैक्शन हुआ होगा। व्यूअर्स, जो आप ढूंढ रहे थे स्पेसिफिक आइडियाज़ प्रदीप जी की तरफ से वो आपको मिल गए हैं। प्रदीप जी, इसी के साथ आज के शो को यही समेटेंगे। थैंक यू सो मच फॉर बीइंग विद अस ऑन द प्रोग्राम एंड एडवाइजिंग सो मेनी ऑफ आवर व्यूअर्स ऑन ऑल देयर क्वेरीज एंड होप यू हैव अ फैंटास्टिक वीकेंड अहेड। Viewers, we'll wrap it up on that note on daily calls, but stay tuned as up next we also have earnings conversations coming in since this is the busiest time of the earnings season season. We have a lot of companies coming on our channel and exclusively talking about what their plans are as far as their company is concerned. How are they looking at the quarterly results that have come out? So in case you are interested in finding out what some of these companies are talking about, then do stay tuned. Up next will be Sona Comstar's management talking to us about their earnings. From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
Hello and a warm welcome on Business Today, ladies and gentlemen. We continue with our coverage of quality earnings in the first quarter and are now joined by the management of Sagility Limited, which is in the business of providing process management services to the healthcare and insurance industries in the US, Jamaica, Colombia, as also India. It offers claim and cost containment management services, enrollment benefits plannings to top US insurers, and has provided a stunning set of numbers. Sales has risen year on year by 28% in the quarter gone by to 1,963 crore rupees, and net profit has surged 53% year on year to 217 crore rupees. However, these numbers are down over the fourth quarter, but that's a seasonal trend that we've always seen in the business of Sagility. To discuss the first quarter earnings and the way forward, we are joined by Mr. Srinivas Mattapalli, Executive Vice President and Group CFO at Sagility. Namaste and a very warm welcome to you, Mr. Srinivas. Very strong performance year on year. What drove both sales and profit higher to this extent?
First of all, thanks for having me on the show, Mr. Metkar. Glad to join here. I think we had an extremely strong quarter. Across the spectrum of our clients, we have seen high volume requirements, and combined with our operating efficiency, combined with our focus on ensuring cost optimization, I think we have delivered a very good top line and a bottom line in this particular quarter.
Okay, would you care to explain why top line surged 58% and sales rose 27%?
Yeah. Obviously, our revenue in constant currency grew about 15.2%, and organic was about 15% in constant currency. In INR terms, we grew 27%, and I think it's basic on the background of some extremely strong client-related volume growth, where the demand for our services has remained quite strong over the last 1 year, right? Year-on-year growth has continued to... Sorry, Did you ask something? Sorry, I missed that.
Hello?
Can you hear me clearly?
No, please continue. Yes, Mr. Srinivas, you're loud and clear. Please continue.
Yeah. One of the things I do want to clarify from a quarter-on-quarter perspective is, as you said, our seasonal revenues typically are much stronger in the second half of the year. So if I remove the seasonal impact, we continue to grow about 5 odd percent even quarter on quarter on an organic basis. And as I said earlier, it's continued good volume, demand from our top customers that is continue to drive our top line here.
Okay. Now let's get into the earnings as such. You've purchased a company called CareSeed and added clients. I think 27 new clients from the insurance space have been added. So this is obviously a higher top line. Would you be able to share with us how much you paid for CareSeed and what is the revenue stream that you hope to get from CareSeed?
Yeah, so CareSeed is a company founded about in 2012, headquartered in Kansas City, and it's basically in the analytics, healthcare analytics kind of a space. I think what we are looking for is combining their technology with our healthcare operations and our services. I think we'll be able to deliver a end-to-end the analytics kind of a continuum for our clients. We have the total consideration as we have disclosed in our numbers is about 30 million, up to 30 million, combining about 18 odd million upfront and another 12.5 million contingent payment based on the way the revenues grow. Their revenues in calendar year 25 was approximately
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition where we are going to be focusing on Sona Comstar's Q1 FY27 earnings. Of course, we've seen the key highlights as the net profit grows about 46.5% at 178.5 odd crores for the company. We're also seeing that this has beaten the street estimates there. Revenue for the company has come in 52% higher at 1301 crores. We've also seen the EBITDA and the EBITDA coming at 293 crores. That's also up by almost 42.6 odd percent. The margins, however, we have seen shrinking to 22.5% vis-a-vis 24.1%. So let's get speaking with the top management to help us understand and to decode the quarterly earnings and give us a vision for FY27 going forward as well. Let's welcome Vivek Vikram Singh. He's the MD and Group CEO for Sona Comstar. Warm welcome to you, Vivek. Good to have you with us. And of course, record quarter for you. It's the highest ever quarterly revenue that you've reported, with both revenue and the profits also beating street estimates there. Give us an understanding of what were the biggest drivers behind this performance?
Sure. Thank you, Sakshi, for having me on your show. And I think you read out the standalone numbers. The console numbers are slightly higher. So 54% growth on revenue, 49 on EBITDA, and 45 on net profit. And net profit is about 181 crores. But yeah, I mean, no quibbling. If it's above 40 and 50, it's all good numbers. Growth drivers have been actually uniformly spread. Almost all our business lines have done well. But I'd like to highlight the EV growth was the strongest driver this quarter. I think year-on-year basis, it grew by 107%, which are obviously astounding numbers. A bit of it has to do with the elevated gasoline and petrol prices all over the world, which is picking up electrification in Europe, in US, as well as in India. And our fastest growth market for this quarter was China, where from 5% last year, we went to 9% this quarter. So yeah, growth across the board.
Fantastic. Since you talk about the EV space and the BEV space, that's the battery electric vehicle revenue, has also seen doubling on a year-on-year basis. In fact, your BEV also accounts now for 44% of your automotive revenue as well. Give us this understanding that, again, like you talked about, is it because of the large EV adoption globally that you are saying, or is it higher content per vehicle? Or is it the market share gains, or all of the above? How are you looking at the contributions coming in for BEV expansion?
Yeah, so we've been a early mover in the EV space. So even in 2017, we had EV revenue. When we listed in FY21, we had about 14% of our revenue come from EV. Today, it's 44. So it's growing on the back of EV penetration going. It is growing on the back of content is higher for us in EV powertrains. So both, all of the above is always a good answer.
Okay. And I also wanted to say, since you just pointed out also that people are witnessing this increased price of crude oil leading to higher prices of petrol and diesel, that could be one reason globally as well that people are shifting to EV. I also wanted to understand, have you also seen a shift more recently also because of the kind of back home in the domestic market too, more worries or concerns around ethanol blending also shifting people's preference to more EV?
Not necessarily. So that would be a blip. See, this is a long-term structural trend. We had forecast in 2015 that by 2040, which is a 25-year journey of conversion, 80% plus of all vehicles will be electrified all over the world. So when you know the end outcome, 1 year is a little slower in EV penetration, 1 year is a little faster. It won't matter if you have a long-term view. There are some inflection points. COVID was one. Post-COVID, suddenly EV acceleration jumped, and it has jumped again because of gas prices. But the real underlying cause is that as battery costs become cheaper, EVs will become more and more affordable. And on a TCO basis, when you look at what it takes to own through the entire life cycle, a petrol vehicle versus an electric vehicle, electric vehicles are emerging as far stronger choices across the board. Two-wheeler, four-wheeler, commercial vehicles especially, and three-wheelers and buses, I think the adoption will be even quicker.
But of late, we've also seen a lot of concerns across the auto sector, be it the tariff-related policies, be it the geopolitical tensions, and of course, mixed demand environment because of that. Are things largely settling down, or, how would you really look at the rest of FY27 in terms of global demand?
So, Sakshi, I became CEO in 2019. I have not known even a single 6 month period in which there was no uncertainty or volatility. I think this is the normal now. World is volatile, world is uncertain. When I became CEO, I think our quarterly revenue is 1300 crore. When I became CEO, our revenue for the year, annual revenue before that was 700 crores. So we've seen tremendous growth through this. And I think the job of a good management is to manage despite the volatility. A good captain is one who can sail choppy seas, right? In a calm sea, when the wind is behind you, you don't need a good captain. Any captain can sail the ship. I think it's the normal. What we have to do is put our head down, do the work, make new products, do value accretive acquisitions, increase your share of wallet with existing customers, and gain new customers, and keep repeating it. It's a relentless execution coupled with new product innovation. That's it. It's simple, but yes, it requires discipline and fortitude to continue doing quarter after quarter for decades.
You've also unveiled this time around Sona Comstar 2.0 strategy with an ambitious goal of growing the revenue tenfold again by FY35. Give us an understanding of what are the biggest levers that will help you achieve this target, and how much of this growth will come organically versus the acquisitions that you just hinted at.
So we don't define it in the split. The policy for acquisitions is clear. If we think we can build it ourselves and build it fast enough, we always build it ourselves. That's our preferred route. If we think someone else has built excellent capabilities that we could acquire at a fair price, that is a way to go too. So we will do both. Our first 10-year journey, when I started working here in 2015 to 2025, we've grown 10x. From there, we have to grow 10x again, so to about 35,000 plus crores. Some of that heavy lifting we've already done. So in the first year, this is year 2. So maintaining our CAGR, we've always maintained 25% plus CAGR. So hoping to maintain that. But again, the same building blocks that I said, keep building new products organically. And wherever there is a capability that we think makes us better, acquire and let us not be constrained and defined by which industry we operate in. World that is coming, and that is probably what is the essential part of Sona Comstar 2.0 is the automotive is not a boundary that holds us. The boundaries that we set for ourselves are defined by ourselves. We will look at the entire spectrum of mobility. Cars, buses, two-wheelers, tractors, robotics, railways, aerospace, any sector in which precision engineering matters, and we can add value through our strengths. That's the goal.
Okay. Since you also talked about how, one of the surprises that came in was your foray in robotics and physical AI as well. So, what strategic gap does this foray address for you? And how do you see this business complementing your existing portfolio? And can this also eventually become a meaningful revenue contributor in the long term?
Of course. So first, let's start with the last part. I think the physical AI industry, or even the subset, which is just the intelligent robot industry, will be a far bigger industry than automotive is today in just 15 years. It is going to be one of the largest industries known. And even a small fraction of that is good enough for our ambitions. Now, why does Sona Comstar think it can play and it can win? And good, we announced it after winning a few orders already. Because if you look at what we do, even for automotive, we do gearboxes and reducers, we do motors, we do sensors and software in perception. And these are essentially the building block of any robotic device. A robot has a body, it has gears and motors that allow it to move. It has a perception stack, which has cameras and radars, which allows it to sense its environment. And then finally, software to process that information and take decisions. This is essentially what we do for automotive anyway. And I think the convergence of automotive and robotics is going to happen in the very near future. If you look at Hyundai just bought Boston Dynamics, Tesla has Optimus, Xiaomi does its own robots, BYD is doing robots. Everyone who makes cars is actually in the best place to build advanced robotics. And hence that auto supply chain is actually the most capable to get into that supply chain. So it's a adjacency. We are finding applications for the capabilities we already have.
Let's also try and understand about your partnership with Denso that marks an entry into the high voltage electric and hybrid powertrain systems. What are the new opportunities that this opens up for you also in terms of both customers, products, markets maybe? And could you also help us understand if this will significantly increase your, again, content per vehicle in the ecosystem or maybe also assists the margins?
So, Sakshi, great question. The Denso partnership opens up an entirely new vista for us because if you look at a motor controller portfolio, we've done exceedingly well in two-wheeler, three-wheelers. We are India's market leader. We'll have anywhere between 20 to 25% market share. But we did not have a high voltage offering, so we could not enter the car, the bus, the truck, the larger segment where ASPs are, about 8 to 10 times higher given the size of the vehicles, and in the case of buses, much, much higher. And we were missing the larger market. So according to our estimates, by 2030, the electric and hybrid powertrain market is about 24 to 28,000 crores. How much market share Denso and us together can get in that, obviously remains to be seen. But I mean, if alone Denso is the market leader of the world in that space and alone we are the market leader of India in that space, I think together also we will be market leaders. I mean, we should be. So it is a much larger market than we have. If I would take our two-wheeler, three-wheeler market, what we do today, plus the new JV, I think it would be just a traction motor and controller business has the potential to be higher than all of Sona Comstar is today, just by 2030. And after that is when real growth comes, when the EV penetration and the hybrid penetration increases in India. 2030 is very, just 4 years away. And penetration rates are still very low. So the room to go from there is immense. And now we're not talking like percentages, how many times will be the question. And it's a multi-billion dollar market. So addressable market is not the challenge. It's just how much market share can we get on with both of us working together.
Okay. Give us an understanding that now we are looking at the top line growing exceptionally for you, but at the same time, the margins have moderated to 20%. Is this due to these integrations, acquisitions, or investments into future growth? And could you help us understand, as scale improves, should investors expect the margins to move back to historically levels?
So we've always maintained that our margin range is 23 to 25% ever since we did our railway acquisition. We will remain in that range right now. Actually, it's got nothing to do with scale or integration or new acquisition. It is actually much more of a market factor. We are in the highest inflationary environment that at least I have seen in my short 11-year career. All commodities are very, very high. Steel, copper, aluminum, carbide tools, energy costs, labor costs, everything is exceptionally high. And this is not sustainable. Commodity costs have cycles. This has happened before. This will come down again. Margins will start improving. So this is more a cyclical nature of the business, and it's more arithmetic impact on percentages. So hopefully we'll start improving from here on. April was pretty bad. May was uglier. June was much better. So it started improving again. And we will remain within the range for sure.
We'll remain within the range. And for top line, you again stick with 25% CAGR growth for FY27?
No, CAGR is for the 10-year period. Some years will be 20, some years will be 25, some years will be 30. Even in the last 10 years, it's not like we had a consistently 25. I believe there was only 1 year in the last 10 years which was 25. But average was 25. So we'll have some stupendous years, some above average years, and some good years. We don't do below average. So that at least we can take out.
Okay, fantastic. Thank you so much, Vivek, for being with us on the program and for giving us all those insights. I wish you all the best for the upcoming quarters, and looking forward to getting in touch with you again, to understand how the partnership with Denso is panning out, and all of these forays that you've done. These are exciting times for you. Looking forward to the next decade.
Thank you. Thank you, Sakshi, for having me. Thank you.
Thank you. All right, viewers, we'll wrap it up on that note. Exclusive chat with Sona Comstar. I hope that this has given you enough an understanding of what the company is looking at, because Sona Comstar 2.0 strategy that they're talking about, and of course the foray as far as the AI space is concerned, the robotic space is concerned, the Denso partnership that they're looking at creating again, massive opportunities for them. So a lot to look forward to as far as Sona Comstar is concerned. Thank you so much for taking the time out to watch this. Do stay tuned on to Business Today Television. Much more on the market coverage on the other side.
Hello and welcome. You're watching Business Today with me, Aishwarya Patil, and joining us on the show is a very special guest, a big moment for Skyroot Aerospace. The co-founder, Naga Bharatdaka of Skyroot Aerospace is joining us here. Thank you very much, first off, for making a time for us, Bharat, here on Business Today.
Thank you, Aishwarya. Nice to be here.
Just first few thoughts, you've just begun to settle down after that magnificent Vikram 1 test flight, and until it takes flight, there is always this sense of anxiety whether this will be a successful test or not. Talk to us about the feeling between the two co-founders of Skyroot Aerospace.
Indeed. So we were mentally prepared for any outcome, even the worst of the worst outcome. Indeed, we made a scenario-based scenario. Even from launch pad, something happens. Also, we were mentally prepared. But even we any first launch, the key thing we expect from the first launch is the data we get in the atmospheric ascent. So the mission objective also we framed simply as successfully clearing the launch tower and giving us as much data as possible throughout the ascent of the vehicle is the mission objective we stated for this mission. And of course, to all our euphoria, it crossed every single milestone throughout the planned ascent and went till orbit. But we were always ready for any outcome, and we're just hoping for the maximum possible best situation we can get out of so that we can work on the next launch even if we face any glitch. But yeah, we didn't, and we got it first time right.
But just for a few minutes there with that planned halt in the beginning, what exactly was the hold up there, if you can explain, because a lot of people were wondering before the flight what kept them waiting for those couple of minutes in the beginning when Vikram 1 was taking flight. So if you could just talk to us a little about the technicalities of it.
Sure, I'll be able to. So there's something called, for every launch, prior to launch, there's something called automated launch sequence. Automated launch sequence is essentially designed to hold the launch if it sees any, even of the minor, tiniest information that is not right, that is out of the norm. Any sensor information, any software value, any software parameter, or anything in the launch vehicle that is out of the norm. Thousands of parameters will be checked in the timeline, so that because it's not easy for a human to do it well. So totally automated check on full health of the launch vehicle is done in the automated launch sequence. And because of a very minor glitch of a parameter not getting updated on time, there was a hold was raised, and we immediately understood that it's not a major issue, and we reinitiated the automated launch sequence, and the rest was history, as you could.
So from the journey of a test flight to a commercial viable space business, there is a lot riding on it. If you can talk to us a little bit about how crucial it is for a test flight to be successful of this scale for a company like yours, especially with the opportunity that this comes with for private players like yours.
So indeed, so the first launch being successful gives us immense confidence and immense data about the full duration of the vehicle. So the one confidence is every system, the entire system design is very robust, and other opportunities we get actual flight data of every subsystem from beginning to the end. So both the system design is proven, and any other marginalities that we need to improve, we get the full data in the first flight. So first flight being successful means a ton for a launch vehicle company, because generally companies take 3 to 4 attempts to actually get to this point, and getting it in the first attempt saved us multiple launch attempts to get to this point. And once we get to prove it again, a repeat success, if we end up getting in the next launch, the robustness and the reliability of the launch vehicle itself will be proven just within the 2 launches. That's one of we are positioned well to actually achieve something at a lower cost or a lower number of launch attempts than what typically any launch startup around the world would need to go through. So
right.
Yeah, that's
the success of it, as you mentioned. Gathering all the data is very important and crucial as well. Now that the test flight has gone through very successfully, what kind of data is crucial and important for you to implement for your next flight or next project per se? I do not want to reduce your big moment by comparing all companies or all space private companies in India to SpaceX, but there is a little bit of a benchmark that SpaceX has set for space companies like yours as well, or at least in the innovation or technology space as far as that is concerned. So could you talk to us a little bit about what more can be innovated going forward from here?
So always with respect to the launch vehicle performance, of course. So any launch vehicle, though it performs well, there's some learnings. Like in flight, we might expect one sensor value, the temperature levels to be something, the load levels, the rocket experience, we expect something, but it might be something more than what we expect. So what is the actual environment and the actual system, the actual system is experiencing through the flight, we will know through the data. And a lot of improvements we can do. We can improve the payload performance of the vehicle, because for first flight we'll be very careful and put additional margins with respect to how we design stuff, and we can actually optimize the rocket much better to improve its capability over the next launches. That's the use of getting data in the first launch, just to give you an idea of what kind of improvements we can do with the data we get.
What will be Skyroot's next big project to your mind, and have you been speaking to Pawan about what next for Skyroot Aerospace from here?
So we at Skyroot, like for any launch company, reaching orbit is the biggest, toughest milestone, and we're fortunate enough to achieve it in the first launch. The next thing we'll be focusing on as a company would be to be able to repeatedly and reliably achieve the same capability to demonstrate repeated reliable launches to space will be the next big challenge that we need to crack, and that's what over the next 1 year we'll be focusing on.
Is reusable rockets something that you will be looking at? Is that under development?
Yeah, as a company, of course, it is under our roadmap to develop a reusable launch vehicle. We will be working on that roadmap as well. But Vikram series of launch vehicles are one-time use, small dedicated launch vehicle segments, and reusable launch vehicle is something certainly is in our roadmap, as you rightly said.
So beyond patriotism, of course, this was a national moment of pride for all of us. But as a company, as a corporate, investments are something that are really, really important. So if you could talk a little bit about any kind of interest that you've seen increasingly after the launch, who have you heard from globally as well? So if you could talk a little bit about the well-wishers and investment fraternity, if they've reached out to you, more interest in investing in Skyroot Aerospace. We believe you did reach out to Anand Mahindra at some point in the past. So are you also looking at some international global names to invest in the company going forward?
So as you might have seen, like we just before the launch, we raised capital. We at a 1.1 billion valuation, we raised $60 million just a few months before the launch. So we are currently well funded for the execution of the next plan over the next 2 years. And of course, any further interest that comes in to plan our next big roadmap is something we will be open to explore. But as of now, we are just well funded for the next 2 years roadmap that we already had planned for.
No. And finally, I really want to talk a little bit about the telecom sector, because space technology and satellite communication is something that India has been looking at for a very long time. Players like Starlink also entering this space, OneWeb, etc. In the whole scheme of things, the larger scheme of things, telecom is just one sector. There's agriculture. There's also weather and other sectors as well that satellite launch really facilitates and caters to. But from a telecom point of view and a satellite communication point of view, what's your take there? And would you also look at catering to a certain percentage of your business towards satellite communication? If you can break that down for us now that you will be going commercial going forward from here, what kind of clients would you like to cater to?
Sure. So a launch vehicle per se is agnostic to the application of the satellite. And of course, as you told, most of the significant number of satellite operator customers who would be using launch vehicle will end up being communication players, space-based communication, be it broadband, be it narrowband communications. But launch vehicle as such is agnostic to the payload that it's carrying. Our customers span across the Earth observation domain, who observe the Earth from the visible spectrum, radar imagery, and also the communication spectrum domain, like where we can launch communication payloads, also multi constellations. Also, as it is planned by as multiple nations, as you can read in the news that. Multiple nations are actually planning their own sovereign communication constellations, and that's a huge opportunity for the launch sector to be able to cater to these opportunities.
Of course, there are many parts to satellite launches and, space for a space company as well. Right now you're focusing on rockets, but will you also look at foraying into, say, space debris or space tourism? Across the globe, a lot of these space companies are looking at, Blue Origin. is one of them. So any sort of, sprouting out into other space ventures for yourself also, is that something that is in your vision or on the cards, something that is being thought about in the future?
So indeed, in the larger roadmap, as you see, the space axis is one of the key difficult technologies that will end up enabling many other downstream capability, like be it space tourism, any other in-space technologies, be it space infrastructure, in-space experiments, everything.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition where we're going to be focusing on Fractal Analytics as the company that's kicked off FY27 on a strong note with its Q1 numbers, the growth accelerating across key metrics, profit surging by nearly 92% year on year to over 72 crores. We've seen the revenue rising by 20% to over 912 crores, and the company's also delivered healthy operating leverage along with EBITDA margins expanding to 16%. Also, the growth was led by BFSI retail businesses for the company. We've also seen geographical presence has been strong for the company, although we've seen the TMT vertical continuing to see some pressure. So what's driving the growth currently and what's the outlook for FY27? That's something that we will decode for you with our top management of Fractal Analytics joining in on the program. Let's welcome Srikanth Velamakani. He's the co-founder and the group CEO for Fractal. Welcome to you, Srikanth. Good to have you with us. We'll kickstart by understanding from you what has been the key driving factor for the outperformance that you've seen. It's been a standout quarter, profit almost doubling. So what were the biggest drivers behind this strong improvement in profitability per se?
Great. When we went public last year, earlier this year, one of the most frequently asked questions was, why do you not make money all the time? Like, why are your margins inconsistent? So I think we have built the muscle to consistently improve our profitability. Over the last 3 quarters, we have shown that we can make very steady margins. We were always very good at gross margins, but bringing that to EBITDA margins and net profit, I think we have built the discipline to improve our profitability consistently over the last few months. So that's number one. So it's disciplined execution that's resulted in that. From a growth standpoint, we've had a 20% growth quarter vis-a-vis last year. And excluding TMT, that growth would have been 35%. I would have been much happier with the 35% if that was the overall growth. But today we have to settle for 20%. We expect that we would like to be growing faster because the overall expansion in the total addressable market and the kind of demand expansion and explosion we are seeing in AI is incredible. And really, if you're growing at 20%, it's because our execution is lacking. We need to improve our execution to increase our growth rate overall.
Okay, and since you talk about the 20% overall top line growth, given the AI adoption cycle globally, what could be a sustainable growth revenue trajectory for Fractal for FY27?
See, overall, I can't specifically comment on FY27, but we would like to build this company in such a way that we can deliver a much higher level of growth for a continuous period of time, for the sustained period of time over the next 3 to 5 years. Now, FY27 is a change. This is just, we've just gone public. AI is changing the shape of demand in a very significant way, and therefore we have to factor that in the way we think of growth. We've also reorganized Fractal in a way that really addresses the massive demand that is coming through. And we've called these 3 vectors as AI-led transformation or AIT, AI foundations, AIF, and AI for work and workforce reimagination, AIW. Now, what are those? AIT is essentially about the biggest opportunity in companies is to reimagine every business workflow, whether it's my operations workflow, my supply chain workflow, finance workflow, it's my customer understanding. All of these can be reimagined with AI. You can dramatically improve your decision making and not just automate a dumb process, but to reimagine the process in an AI native, AI smart way. So that's AIT. AI foundation is about building the foundations that can create that. which is about building the knowledge layer, the ontological layer, or the context layer as it's being called, the harness layer, so that AI can get better. And three is, in a AI first world, I have to reimagine my talent. I have to reskill them, upskill them, and make them work alongside with agents. So I have to think of an organization differently. So how do we help that? So these are the biggest drivers of demand. And as we execute against these, we will see tremendous sort of growth for Fractal in the coming few quarters and years.
Your EBITDA margins have expanded to 16% from 12.5% earlier. So how much of a room is there for the margin expansion from the current levels, and what is the margin band that investors can expect you to sustainably deliver?
Yes. So our adjusted EBITDA margin is at roughly 17%, up from 15% same quarter last year. We would like our adjusted EBITDA margin to hit something like a 20% for Fractal overall, and 22% for the Fractal.ai business. So that is the goal. That's where we want to go, and we should get there sooner than later, right? That's really the kind of trajectory we want to be in. This is completely feasible given our current gross margins of between 46 and 50%. It automatically lends to a higher EBITDA margin as well. It's just that we have some of those things to play out, and there is also a seasonality effect. First quarter is usually the lowest margin quarter for us, and by fourth quarter our margins expand. So you will see that quarter on quarter our margins will expand till the fourth quarter to get us to as close to that number as possible.
Yeah, because you rightly pointed out, we are also seeing a negative reaction on the stock price today. It's down by 6%. Probably it's reacting to the quarter-on-quarter fall in the profit that we've seen rather than the year-on-year growth. So is this a blip? What would you want to tell the viewers at this point in time who are looking at the quarter-on-quarter blip there?
Yeah, I think that's a misconception, because every single year, first quarter profitability is lower than the fourth quarter profitability, because in the first quarter we'll have to adjust for the fact that we have salary increases, we have a significant bunch of people joining us from campus hiring and so on, which creates the first quarter related profitability pressures. But steadily margin expands over the next 2-3 quarters. And this has been something that's happened with Fractal for many, many years. So it's something that we understand quite well. So the best way to look at it is year over year. And you rightly pointed out that our year over year profitability numbers are pretty impressive.
Let's talk about your TMT vertical, which has seen again a decline of about 22% year on year, even as the rest of the businesses remain pretty robust. So exactly, could you help us understand what's constantly driving the pressure and weakness in this space? Is it linked to some of the clients, and do you expect this pressure to continue for the rest of FY27?
Yeah. Firstly, I would blame our execution more than blaming the market or the world or something else, because eventually it is our execution. Overall, AI demand is exploding very nicely, so we should have executed better. Now, having said that, if you want to look at structural reasons that could be happening, it is that some of the very big tech companies, all of the very big tech companies, many of them are our clients, and they are moving from AI OPEX to AI CAPEX. They're significantly expanding data center capacities, buying chips, and making significant AI CAPEX commitments. And in the process, there is pressure on AI OPEX. And really, that's something that you are seeing in how they are thinking of working with people like us. And therefore, there is some short-term pressure there. But we expect the TMT vertical to work itself out even as early as next quarter. So sequentially, TMT will start to show some growth as early as Q2.
Okay. You just did say that excluding TMT, your business has actually grown 35% year on year. And if we were to see an improvement from here on, like you're pointing out, which are the sectors that will see the strongest AI spending today, and which are the enterprises moving faster from pilot to projects to large-scale deployments for you, and what will drive the growth for you from here?
Yeah, AI is across industries. It's really, there's no one industry that's using AI more than the others. But if you were to really choose, it would be the banking and financial services and insurance industries, because they are significantly cognitive and repetitive in nature. That's where there is enormous opportunity for AI to turbocharge their businesses. So therefore, we are seeing maximum adoption there. Healthcare and life sciences also If you look at healthcare segment, there you'll see process complexity, and AI can really augment and automate and really improve the patient experience. It can improve your SG&A. So there are multiple levers of a healthcare business that AI can dramatically influence. There also we are seeing significant impact. And if you look at CPG retail, these are extremely competitive industries. So there also, if one company uses AI to get better, all others also follow suit. So you're seeing different dynamics play out, but across every industry, there is significant growth opportunities. But if I were to pick one, it is really banking and financial service industry where AI adoption is maybe accelerating the fastest.
Okay. You now also have pointed out that 58 of your clients now are contributing over $1 million in annual revenue for you. This is up from 54 last year. Give us a sense that how much of your current growth is coming from deeper engagement with the existing clients vis-a-vis the new client additions that you're looking at, newer AI platform deployments.
Yes. We look at a metric called the NRR, or net revenue retention, which essentially shows same clients last year versus same clients this year. And that number is 117%, which means that there's a 17% increase from the same clients last year to this year. So a vast majority of our revenue growth comes from existing clients increasing their spends with us. So that's the 17 out of the 20% of growth that is there. The remaining 3% comes from new client addition that is happening in this quarter. So it's 17 and 3. So roughly at any point of time, a more sort of a neutral estimate of that is 80% of the growth comes from existing clients expanding their business with us, and 20% of the growth comes from new clients that are getting added. That's really the dynamic that plays out over a period of time.
Right. Last quarter, you also talked about how you are looking forward to increasing your R&D investments to around 10% of the overall revenue. Where are we at currently, if you could help us understand, and how is the spending standing today, and which are the areas that you're looking to deploy that money going forward also?
We are inching at about 7% right now. We're just shy of 7%, so round out to 7%. And the goal is to take it all the way to 10. But we have been very clear that the R&D spends will go up as margin expands. As our gross margin expands, part of that expanded gross margin we'll put into R&D spends. So over time, we will go from 7 to 10 as we get increased revenues from Cogentic and increase gross margin in other ways. We'll plow back some of that increased gross margins into higher R&D, which creates a virtuous cycle, because the higher R&D will help us build better products, and that will help us accelerate revenue further and accelerate margins further.
Okay, all right. Well, we'll leave you with that. Thank you so much, Srikanth, for being with us and for highlighting all these insights for all our viewers. Always a pleasure to speak with you. So thanks a lot for sharing all these insights, and all the best for the upcoming quarterly results as well.
Thank you, Sakshi.
All right, viewers, we'll wrap it up on that note for the earnings special conversation with the Fractal that we've just had. We'll, of course, keep getting you such earnings conversations through this season. So stay tuned as up next, market coverage continues on the other side. And, of course, I'll be back for the closing edition at 3 p.m. Stay tuned for that too.
Hello and a warm welcome on Business Today Television, ladies and gentlemen. We continue with our coverage of quality earnings coming out of corporate India for the quarter gone by. We are now joined by Mr. Dinesh Agarwal, founder and CEO of B2B online market space, IndiaMark India Mesh. We'll just show you the earnings right there in front of you. An 11% uptick in sales at 414 crore rupees, and net profit rose 12% to 172 crore rupees. The stock, however, is available at its lowest level since September 2020. Lots of interesting things have happened within IndiaMart Intermesh. Let's get Mr. Agarwal's view in on many of these. A warm welcome, Mr. Agarwal. Would you explain to our viewers how come sales and profit rose by a similar amount, 11 and 12% respectively? What were the drivers?
See, in our business model, the collections are the front line and collection is a combination of number of customers and average collection per customer. Since the number of customers have not grown or have declined a little bit, it's most of the growth has come from average revenue per customer. And all of this flows into the deferred revenue. And from the deferred revenue on a daily basis, it is being recognized as the revenue over the period of the subscription, because many of the customers pay us for 1 year subscription or for 3 year subscription.
So it's more or less a steady quarter in which margin has expanded. You've also seen rising annual revenue per paying subscriber. Let's get 2 or 3 basic things first. Why was this subscriber churn happening in the first place? Paid suppliers have gone down by 2,000 quarter per quarter to 2,18,000. Why did this happen? Is this a trend or is this a one-off?
No, I mean, last almost 4 or 5 quarters, we have not been able to create a growth in this paying subscribers. Few quarters it has been 2,000 up, few quarters it has been 2,000 down, and last 2 quarters it has been down by 2,000 each. So our business has 3-tier subscription, entry level subscription at silver, and then TrustSeal subscription at gold, and then premium listings at platinum. Almost 50% of our current subscriber base are gold and platinum, which account for about 75% of the total revenue. However, over the last couple of quarters, we have not been able to retain the silver subscribers who come and join us on the platform, while the ones who get retained, they are upgrading to gold and platinum, and that's where the most of the growth is coming from. So to improve the bottom of the funnel, we need to improve the churn, and we are working on that using multiple initiatives. Let's see which one works out.
Yes. Mr. Agarwal, just a very quick word on how has the average annual revenue per user for the top 10% of your clientele moved?
Yeah, I mean, so out of the 2,20,000 customers, the top 10% means 22,000 customers. So 22,000 customers account for almost 50% of the revenue. And their annual revenue per customer is about 3 lakh rupees something, I can tell you.
The number that we have is 69,000?
The 69,000 is the total annual revenue per customer. The top 10% would be about 3 lakh rupees.
Okay, fair point. Has this number moved appreciably in the quarter gone by versus Q4 as also the year ago number?
Yes, so over the last many years as well as the last many quarters, this number has gone up by 8-9% every quarter. So last 4 or 5 quarters, it has been going up by 8-9%.
So fair point. So your highest paying customers are paying you more, and that's a very welcome development. Mr. Agarwal, would you want to comment on the competitive intensity of the Indian online B2B market space? There has been heavy investment coming in from global majors, local names, all of which are very familiar to online shoppers. But your views on this one would be of material significance.
Yeah, so SME and B2B are a very wide subject, and everybody, addresses some part of the business. So, for example, you can go to Google and search for any particular business as a search engine, and Google business model is that it displays you certain ads on a pay-per-click basis. On India Mart, the advantage is that we have the seller behavior as well as the seller trust profile. So we actually categorize them into proper category and proper with the seller verification tier, like a TrustSeal tier. Then there are transactional marketplaces like Moglix or Udan or off business. Those are more like transactional marketplaces. So trading plus lending blended into it. While the Google and India Mart and Just Dial and Facebook, they are mostly advertising-led marketplaces. So this is more or less is the spectrum of the B2B and SME businesses in India.
Okay, fair point, sir. When you look at the new plans you have in the pipeline, a finance company which will probably reduce the time that the customer takes from choosing a product to finally paying for it. You also have about 3,000 crore rupees of cash on your balance sheet. What is the game plan for the next 1 year, 18 months for this finance unit?
So this finance unit is to, as you rightly pointed, is to ensure strengthen little bit of the marketplace proposition. So we will try and see how to increase the stickiness of the buyer and seller on the marketplace for short-term transaction financing. I do not think we should look at the balance sheet and the finance business together. Balance sheet has a very different nature and very different purpose. The financing is going to be mostly either partner-led or at best maybe some very, very short-term pay later kind of things. So we have just applied for a company name, and then as the as the business model unfolds, we will know what works and what doesn't.
This cash on the balance sheet, somewhere like 3,500 crore rupees, contributed about 102, 103 rupees to the total profit via the other income component, which is about 60%. Is this getting a bit too higher on the percentage size? I mean, it's also hurting shareholder returns. Either maybe there should be a shareholder dividend or maybe a buyback. Is there a better utilization for this cash?
Yeah, so see, there are about 2,000 crore rupees is the customers' advances, and they need to be kept because the customer has to be serviced over the next 20 months period. Now that leaves us with about 1,000 crore rupees of cash, and every year we generate about 500 crores of profit or 600-700 crores of cash flow from operation. And we have been returning cash to the shareholders by way of buyback as well as dividend. The recent one we had returned 360 crores. So in the last 5-6 years alone, we have returned some 1,600 crores to the shareholders. So I think we are taking a balanced approach there. Most of the cash is the customer advances, which need to be serviced over the next 18-20 months period.
Fair point. When you talk about stagnant buyer numbers, or at least in the silver segment facing a lot of churn, are there any AI-led enhancements that you're working on to either reduce those churn or even maybe turn them around for the better?
Yeah, so earlier many things that we were doing manually had its own human limitations. Now with the newer technology, many things are possible and many things are being tried currently. So for example, voice listening and voice generation is a completely new era that is there. We are now able to serve almost 1 lakh buyers per day using our AI-based call agent. Secondly, I think the categories are in the B2B are enormous. If you see our investor presentation, you will find a variety of the categories from chemical to electrical to machinery to different kinds. And it is almost impossible for a human being to be able to be aware of all the categories and aware of all the products. So whereas AI helps there, and it can do a better product aggregation, product classification, and detect anomalies in the content. So that is one area. So in the auditing and aggregation also, it is going to be helping. And given that technology has moved very, very fast in the last 2 years, I I think it will take years for the actual companies to adopt that much of the technology and keep improving their products and their offerings.
Mr. Agarwal, is there something that you could have done better in the 3 months gone by? Something that your competitors caught you off guard with? Something that could have improved this top line of 414 crores?
Yeah, of course, if we could have added net customer addition, I think that would have definitely helped. In terms of renewals and in terms of upsell, that's not always a good way to look at it. But that's what is our day-to-day operation, and that's what we have been doing for 30 years. So every day you could have done better, and we will try to do better every day.
Is there a competitor that you admire?
Is there a competitor? Unfortunately, in our case, there is no competition, direct competition that you face on. There are some smaller size companies like Trade India, Export India. There are some tangential people like Amazon or Google or Meta or Just Dial. But there is no like-to-like 1:1 direct competitor as you will see in Swiggy versus Zomato or in Blinkit versus Zepto. That kind of competition is not there, and good and bad both for us.
Well, let's look at some good parts of your business. The return on capital as well as the return on equity is very, very strong, 29% and 22.5% respectively. Anything that you can do to improve this further, or is this the peak?
No, I mean, we don't look at it from the return on capital employed because most of our business is the zero capital business. It is a negative working capital business. So effectively, if you see, there are no fixed assets and there is a negative working capital. So, if you take out all the cash, because the cash has to be there for servicing the customer, if you take out all the cash, the return on capital is infinite. So we can't look at it that way. We have to look at it, how do we grow the buyers and sellers, and how do we make it easier for them to discover each other and do business with each other. And in that whole process, they are willing to give you some referral fee. And that piece has very little cost, direct cost to it. If you look at our investor presentation, you will see that almost 75% gross margin business.
Ji. And my final question, Mr. Agarwal, is on this. Any plans to raise funds as such, or you're fully happy with what you have as of now?
No, I don't think we are requiring any funds to raise at this point. Last we raised was in 2020-21. That is the time we raised, and we deployed that capital in accounting business. We acquired Busy Infotech and we acquired Livekeeping, as well as we invested in Vyapar and Real Books. And that segment of our business is also started to do well, is now almost 15% of our revenues.
Mr. Agarwal, my final question is that your PE has less than halved to 22, actually more than halved to 22, and your price to book has also come down substantially. What is the market missing?
See, I am not a share trader and I don't understand most of these terms. I do not hold any direct shares other than IndiaMart, maybe one company long time back. But otherwise, I'm a normal SIP mutual fund investor. So I didn't understand when the PE went to 100 and I don't understand when the PE goes down to 20. So I can't comment on that.
Fair point. We'll leave it at that, Mr. Agarwal, and we hope to meet you every quarter. And let's hope that the churn in the silver segment stops and that customers in the gold and the platinum segment continue to pay more and more per year to India Mart Intermesh. Thank you for your time, sir.
Thank you so much.
That, ladies and gentlemen, was Mr. Dinesh Chandra Agarwal, the MD and CEO of India Mart Intermesh. Thank you for watching. Please be with us on BTTV. Warm welcome on Business Today Television, ladies and gentlemen. The markets are now in fine shape. 24,200 is what the bears have very, very strongly defended despite a weakening rupee as also strengthening oil prices. The first half of calendar 2026 went by in pain, and in the second half, thanks to strong Q1, there seems to be a build-up of good sentiment as also strong quality stock picking taking root in the market. What are the game plans for professional fund managers? Where are they pouring in money? What kind of investments they are making? To answer this and a lot more, we are joined by Mr. Ashish Chatramotha, Managing Director for the PMS business at JM Financial Limited. Namaste Ashish ji, as always, such a warm welcome. It's always good to host you. Your sentimental view of the market at this point of time, how are you seeing changes on Dalal Street?
Thank you, Shelji, for inviting me on this show. So as far as broader markets are concerned, we have been making it a point that in our markets at this point of time, small and mid cap, because of the kind of earning growth, delta which these companies are showing, we are seeing a very, very strong traction for this space. But if you look at the large cap space, some of the very, very strong theme, even let's say for example, a lot of large private banks, despite trading at a very, very reasonable valuation, maybe a decadal low valuation for some of the banks like HDFC Bank, we are not witnessing very strong traction, because if you look at the concerns related to deposits and kind of CD ratio these banks are facing, this is getting reflected into their recent quarterly performances, and some of markets are also not rewarding them well despite trading at a very reasonable valuation. So maybe from a long-term investor perspective, a lot of these private banks, they look very promising. But as far as markets are concerned, at least from a technical perspective, markets are rewarding small and mid cap because of the kind of strong earning delta which is being witnessed there.
Right. Yes, I think the earnings of 8 banks by and large were disappointing except for ICICI Bank. But then what can a single bank do when many others from its stable are not pulling up their weight? So what does that mean for the broader Nifty, Ashish? Because the other engine of the market, which is IT, has showed no signs of a consistent breakout. Financial services are not doing well. That pretty much means that about 50-55% of Nifty lies dormant, if not negative.
So as far as financials are concerned, I think as you rightly mentioned, ICICI Bank was an outlier and markets are rewarding the outlier. So clearly ICICI Bank is trading almost near its all-time high. Same is the case with some of the large NBFC companies, say for example Shriram Finance, which we have been mentioning as our topic in the entire NBFC space, because of the kind of MUFG acquisition which has happened. The cost of borrowing has come down significantly and very strong growth coming in the CV segment. So all these three catalysts are resulting into a very strong re-rating of Shriram Finance, and also the discount with its peers is also resulting into a good re-rating happening into the stock. Even Bajaj Finance, for that matter, after a very, very long time, we have seen some good buying interest coming into that space. So maybe selectively some of the NBFC companies are looking quite promising. Now coming to IT, So IT has been a laggard for almost a year, but if you look at last 10, 12 trading sessions, we have seen some recovery. Is this recovery more fundamental in nature or more to do with what is happening to Bloomberg? We track one index called as Bloomberg AI Value Chain Index, which is a combination of many semiconductor, data center, and AI companies in the world, and that index has seen a very sharp correction. So now a lot of market participants are believing that AI anti trade is playing out, and that's how the IT companies have seen some pullback. But we believe it's more of a pullback rally or maybe a throwback rally which has happened rather than a structural structural trend. So definitely one can't rely on AI on IT companies for the market to rally. So that's the reason our belief is that a broader Nifty index is going to is kind in a kind of a sideways trend, and the only savior could be banks and NBFC companies. But since banks have also not performed well, so maybe some consolidation. But our sense is the one who is going to take lead is going to be the large private bank at some point of time, and then only the index is going to cross this 24,500 resistance zone.
Okay. Now, what does that mean for professional fund managers such as you? How has your construction of portfolio changed over the last 3 months or so?
So, Shalji, what we have been quite positive on the entire, I would say, CDMO opportunity, and we still have a very constructive view and a good weight of CDMO or pharma as an opportunity. And now, as we all know, that there is a patent cliff which is around us, and which means that a lot of these patented drugs are going to go off patent, and this will open a very big opportunity for Indian pharmaceutical players who are on the generic side. And so I think the overall play on the pharma is going to be very, very positive. And then the tailwind of rupee weakness has also played out very well. The only concern was the raw material volatility, and a lot of these crude related derivatives like benzene is going to impact the margin. But since the larger opportunity is very, very strong, we believe that pharma is one space which is going to do well. Within that, the sub segment CDMO is going to be more resilient, because if you look at a lot of global innovators increasing their business with Indian players, and with China plus one is also be a very big I think thing which is trying to bring business to India. So I think players like Naveen, Divi's Lab, SciLife, Laurus, they are going to be a key beneficiary of this mega trend which is emerging on the CDMO side. A second big trend which is happening on the financialization of savings is a theme. One thing, obviously, the exchanges have seen a cool off in the last 1 month's time frame. So both BSE and MCX has seen sharp profit booking. But if you look at the AMC companies or the wealth management outfits, they have seen a very strong resilience. In fact, the kind of numbers we have witnessed in the operational numbers which are coming for a lot of these wealth management and AMC companies, it looks like this theme is going to do extremely well. And there we believe HDFC AMC, Aditya Birla AMC, ICICI AMC, or stocks like Nuvama or 361 are going to do very well, and they could be good compounding stories.
Okay, let me just speak a bit on this CDMO opportunity. Ashish ji, as a part of the overall PMS, how much is pharma as a percentage?
So we have close to, I think, pharma healthcare put together is close to 10 to 11% of our overall allocation into this basket. And this includes some of the.
How much?
So we have not included a stock like Naveen Fluorine, which is a part of a CDMO opportunity, plus it's a specialty chemical play. So if you add, then I think the allocation will be much higher. But definitely we have bought Naveen Fluorine from a perspective that its CDMO business is growing extremely well, and that's where the delta in the earning is coming in this stock as well.
I'm sorry, I missed the percentage.
10 to 11%.
10 to 11%. Which is the largest sectoral holding at PMS?
So obviously, because of index heavyweight positioning, private banks will continue to remain as the largest weight. But if you look at from an index weight perspective, then we are underweight. But definitely from a portfolio construct perspective, banking is one of the highest weight in our portfolio.
Fair point. And how much is financialization as a theme reflecting as a percentage of total PMS?
So now it's close to 6 to 7%. Obviously, we have trimmed down our position into some of the exchanges, so that has resulted into overall drop. But at one point of time, we are holding both the exchanges almost 6 to 7% of the allocation, and then some of the AMC and wealth management companies. But since last few days, we have trimmed down our position into AMC into the exchanges.
Okay, fair point. What's the level of cash as of now? Is it as a percentage more than what it was 3 months ago?
No, we generally don't keep too much of cash. Maybe some here and there 2-4% kind of cash which gets created due to some selling, and then we look for the opportunity. But generally, we don't maintain too much of cash. At this point of time, we don't have any cash.
Perfect. So you're fully invested and you're betting on CDMO as also financialization. Banking doesn't seem to have worked for the moment. Ashishji, when you look at Q1 earnings that are coming in, are they by and large better than Q4?
So the large cap has clearly disappointed, because of the kind of margin pressure which has been witnessed. We have not seen very strong even top line growth. So overall, the profitability or the PAT growth is very muted. Now, obviously, from the small and mid cap perspective, a lot of these companies which we are holding, and obviously numbers are still coming. At least we are positively surprised, or it's in line with lot of expectation. For example, one of our jewelry company, Bluestone, we have been holding, and it's posted a very strong set of numbers. So I would say it is in line with our estimation. So we think that the kind of growth it is showing, the kind of same store sales growth which is being witnessed, the kind of number of store addition which is happening, it is all in line with our expectation, and the markets are also keeping a track on it, and that's how it is. Stock is showing very strong resilience. One space which is also very, very positive, and it's the entire aerospace industry. We have discussed it earlier also. We believe that the way a lot of these auto ancillary companies are transitioning from pure auto ancillary to some of the aerospace or precision manufacturing side of the story, I think that's where a lot of delta of earning will come, and that's where the margin expansion will take place. So companies like Sansera is a clear example where we have seen a very good margin expansion, and almost 30-35% of their incremental business is coming from the aerospace industry. And that's where our belief is that those kind of auto ancillary or maybe manufacturing companies which are gaining good traction from aerospace, they are going to be a very, very big beneficiary, because that's a space which is going to do extremely well for next 4 to 5 years time frame.
What are the other aerospace options at PMS?
So Azad Engineering is one stock which we have been holding for a while, and we believe that with the kind of very strong order book to bill which this company currently has, almost we see that the current top line is close to 600 crore, but if you look at the order book to bill, it is almost 10-11 times. So it gives a very, very strong revenue visibility, and the kind of technological edge which these companies bringing on table. We believe that the size of opportunity or the overall wallet share from these global OEMs in terms of engines, in terms of aircraft manufacturers, is going to increase meaningfully, and that's where we believe company like Azad Engineering, Unimac, and Sansera could be a very big beneficiary, and these are the three names which we are which we are holding in our portfolios as well.
Unimac, you said?
Yeah.
Unimac Aerospace and Manufacturing. The 1255 one.
Yes.
Okay, perfect. So Azad, of course, is a very well discovered name. Sansera has been doing well, and Unimec is recently listed somewhere in December of 2024. We still have to see that all-time high being crossed. Fair point. Now, what are the semiconductor plays that you have in the PMS, Ashish ji? And as a percentage, how much is aerospace slash auto ancillaries plus semiconductor of the overall portfolio?
So put together, if you rather than saying this as a semiconductor or aerospace, we call it as aerospace, defense, semiconductor as one opportunity, and kind of, if you look at this three put together would be somewhere around 12%, 12 to 13% of our portfolio. So for example, company like CG Power, which is into transmission, plus there is an optionality to play the entire semiconductor OSAT, which has become operational. So I think CG Power could be a very good proxy to play both the transformer side of the story, which is on the grid, and the kind of electricity shortage which is happening. So I think that's one. And then there is a semiconductor which is in the form of OSAT. Second, we like Siemens Energy. Again, the stock which is going to be a big beneficiary on the HVDC segment. There's an acute shortage, and that's where we believe that the company's order book is going to is full till 2029 2030. So very strong revenue visibility, which is being seen for company like Siemens Energy. If you look at as I mentioned, aerospace space we have already discussed, and in defense there are certain anti-drone companies plus companies like Solar Industries, which is into a very strong capex mode, and we believe that the earning growth is going to be very strong for next 3 years. So companies like this, we believe has a very strong tailwind.
Okay, fair point. What is the overall number of stocks in the portfolios these days?
No, so generally we have because see, when we buy a lot of small cap or a mid particularly if you look at buy companies in the market cap between 5 to 10,000 crore, we don't take very aggressive bet. It's a small in positioning. So that's the reason we always try to have we typically have a 42 kind of names in our portfolio, because of the list of a lot of these small cap companies where we don't take aggressive bet, but we try to take exposure because of the tailwind in the space. Like for example, when optic fiber as a theme was doing extremely well, but if you look at, this was not a very great companies for last 12-13 years. If someone would have bought into these names, would have got severely disappointed, either because the return ratios were very disappointing or the demand supply dynamics was not so great. But in the last 4 months things changed. So in that scenario, we are not really betting on a very strong management, but we are betting on a very strong demand supply shortage which is being created, and there is a tailwind which is happening due to the data center story. So we took a bet and it played out well, but we don't want to be very aggressive in taking very heavy allocation into such names.
Fair point. I mean, caution is a byword, and as you mentioned, many of these stocks weren't doing very well for the last 10-12 years. So one really doesn't know whether it's a flash on a pan or a sustained performance. Rightly mentioned. I think you are referring to the rally that happened in Sterlite Technologies and Himachal Futuristic. Both names have been disappointments till about 8 months ago, and of course they've done phenomenally well in the past year or so. Ashish ji, a view on the rupee?
Yeah. So, Shalji, we have seen a very sharp, depreciation in rupee, almost 7-8% kind of depreciation in a year's time. Typically, what we had seen in the history is typically every year we tend to depreciate 2 to 3%. If it doesn't happen for 3 years, fourth year it will automatically depreciate and will cover for the last 3-4 years kind of thing. But this time it was one of the sharpest, correction which has happened. Because of that, government has taken some very strong initiatives, or RBI has taken a very strong initiative in the form of FCNRB. plus there are certain changes in the bond market also. All put together, we believe it is going to garner close to 50 to 80 billion dollar kind of inflows coming into these schemes. And if that happens, then we believe there will be a lot of stability which will come to rupee. So what we believe is that at least in the shorter term, this 98 99 levels is completely ruled out, and there is a possibility because of this FCNRB deposit coming into play, we are going to see a very range bound move between somewhere between 90 93 kind of trajectory. And if that happens, that itself will be a very good trigger for a lot of FIs to start looking into Indian markets.
Fair point. Oil is back above 90. Is that a cause for concern, or has the market sidestepped it?
So honestly speaking, somehow markets are not reacting on a daily basis with the kind of volatility you are witnessing on crude. In fact, if you look at Shelji, from 31st March, that is from 1st of April till date, our small or mid cap has seen very strong rally. Broader markets have also seen a good recovery, but that time also crude was seeing huge amount of volatility on a day-to-day basis. One day it was up significantly, one day it was down. So sometimes market don't overreact to the same thing again and again, and that's the reason till the time crude is somewhere between 80 90 95 odd dollars, markets are not going to become extremely jittery. Yes, definitely if crude crosses 100 odd dollars and remains there, then definitely markets are going to see some correction, but at this point of time we think it's a low probability event.
By and large, Ashishji, given the tone and tenor of Q1, are you more hopeful on the markets than you were about 3 months ago?
So honestly, what we believe in the last 1 year, it has become a very, very stock specific, very, very theme specific market rather than a broader market rally. So one need to really identify where the earning growth is going to seriously surprise us, or where there are companies who are gaining continuous market share from the other players. Take case of example, a company like Ether. So Ether has taken a very strong market share from a company like Ola Electric, and that's where market has rewarded it. But if you look at in general auto companies, they have not done so well. So whether it's Maruti, Mahindra, TVS, Eicher, they are broadly in the range. But Ether Energy has given a very, very strong set of very strong returns because of a very strong set of data in the form of increasing market share. So I think it's more stock specific, theme specific, rather than a broad based market rally which is being visible.
What are you avoiding?
So even till now we have not ended up buying into IT, FMCG, or even for that matter some of the some even metal stocks at this point of time, except Lloyd Metal, which is one very which is a stock which we have been holding in our portfolio. We are avoiding at this juncture because we believe with the dollar index continuously sustaining above 100 101 level, we have seen how gold has seen a correction, silver has seen a correction, even despite copper being into huge demand cycle, and there's a acute shortage, but the prices are not going up because dollar index is in a very strong trajectory. So we have avoided at this point of time. IT we have avoided till now. FMCG, because the volume growth is not picking up, margin pressure was there because of the kind of raw material volatility which was being witnessed. So I think we have avoided this space completely at this point of time.
Okay. Broadly, Ashishji, what is the PMS peer group saying in terms of the cash that they hold on their balance sheet? We don't get PMS data regularly, but has it reduced as a percentage of total OUM?
So broadly, people have started deploying, at least in the last 2-3 months, whatever discussion we had with a lot of fund managers. At least I can say that there is a deployment happening, but a lot of these opportunities which people are trying to identify is coming from a lot of these high growth segments into small and mid basket. A lot of people are still avoiding IT in general, and even large cap for that matter is not. We have not seen very strong interest coming into that space as well.
By and large, you haven't talked about any large cap at all.
No, so we have mentioned Shriram Finance. We have mentioned about ICICI Bank as our top holding in the large private bank. One theme which is also looking interesting is the new age stories. Here we have we have started slowly building, but we need more confirmation because there is a very strong competitive intensity which is in the space. Blinkit has turned positive, so this is one company which where at least the from an operational parameter perspective, this company is showing very strong NOV, very strong average order value. Then there is a margin positive. So all put together, it has seen very good traction. But now the new competitive intensity coming from Amazon, Flipkart, Jio, all we need to track. But definitely, if this becomes like a 3 to 4 player market, then Zomato or Eternal could be a very big beneficiary because the TAM is really large. What we need to see how the competitive intensity plays out.
Okay, fair point. Now, sir, what are the number of internet stocks that you have in the portfolio?
So as we mentioned, we have started slowly looking into the space. So companies, we have almost 3 to 4 names which are there in the portfolio across on the logistics side, on the food, on the quick commerce side, and even something on the consumer side of the story. So companies like Honasa also started looking very attractive at current levels.
So, of course, one of them is Eternal, and these are no recommendations, but representations in the portfolio. The other is Honasa. What are the other two?
So as I mentioned, logistics companies like delivery is also looking quite promising because now it has become like a 2-player market. Obviously, delivery is more focused on it's not into a like 10 to 15-minute delivery kind of thing, whereas Shadowfax is focusing a lot on that segment. But the operational parameter of both these companies are very promising. We believe that obviously from a growth perspective, Shadowfax looks more promising, but from a continuity perspective, from a stability perspective, delivery looks quite interesting.
Fair point. Ashishji, we'll call it time, and thank you for this opportunity, and we look forward to interacting again. As always, there's so many signposts that you mentioned in terms of valuations and stock picks are deeply appreciated. That, ladies and gentlemen, was Mr. Ashish Chaturmota, Managing Director at JM Financial PMS. Thank you for watching.
Hello and welcome to Business Today Television. I'm Sakshi Batra. This is our personal finance show Money Today, and today's topic is insurance. Then this is the edition that focuses on your insurance masterclass. Everything that you need to know about insurance, every doubt that you have will be answered on this program. So you can obviously write into us on our live programming that you're watching on the show on our Business Today YouTube platform, and we'll be happy to take up some of those questions. But insurance, to begin with, is one of those financial products that often you buy only after you realize that something has gone wrong. But the right insurance can actually protect your family's finances from the life's biggest risks, be it a medical emergency, an untimely death, a road accident, a damage to your home, or even an unexpected crisis while traveling. So today on the show, we're going to be cutting through all the jargons and talking about top 5 insurance policies that almost everyone should consider. And we're going to be discussing all of that on the show to find out how much cover is enough, who needs it, what are the common mistakes people make while buying insurance. All of those things will be discussed as well on the program. We are joined by Amit Chhabra, the CBO of Policy Bazaar, to decode the insurance masterclass for all our viewers today. Welcome to you, Amit. Good to have you with us. We'll start off by trying and understanding why insurance in the first place is still something that is underpenetrated in a country which is the most populated country in the world, and to try and help all our viewers understand that usually we think of insurance only once something wrong has happened, and then we come to know that in case we had the insurance, we would have saved ourselves some financial trouble. So give us an understanding of why insurance in today's day and age is an absolute imperative to have.
Well, yes. See, if you look at the macro factors, right? One, India is a large country. There are large diversities of income. There are people who don't have a lot of means in case something goes wrong. And the sad reality is somewhere the social security is also not there.
Correct.
So, or it's getting there, I would say. If I say it positively, I think it's getting there where we are slowly moving towards a world where there is universal healthcare in the country. We are slowly moving towards a world where over time things will become easier. People will have free education in case something goes wrong to the earning member of the family. There will be jobs maybe at some point for in case the earning member of the family passes away. But the reality is that is not there right now. So think of it like this: if there is a family which earns about 50,000 rupees a month, which is, I would say, still quite high by Indian averages, and the earning member of the family passes away. Now what happens? Who takes care of the family? Who pays for the rent, for the groceries coming in every week? Who pays for the school fees? There is, people don't have an answer to that question. The only answer that is logical and should be is insurance, right? In case something happens to the earning member of the family, the person passes away, the person has a health condition because of which lakhs and lakhs of rupees are spent on their health care. Or the person has an accident and because of it there is disability. Now these are things which are not unreal. It's not a once in a lifetime. These things happen to everybody, unfortunately, and that is the reality. But people somewhere in India are not yet prepared fully for a contingency of that kind. And that is where insurance comes in and saves the day. So insurance is basically saving you from death, disease and disability, so that at least your finances, your family's lifestyle or basic income needs are met, so that your child's education, your family, your rent, your family's expenses are taken care of. That is what insurance is all about. The sad reality is that, a lot of India is still not prepared for it.
एब्सोल्युटली, आपने बिल्कुल ठीक कहा अमित, और बहुत सारे दर्शक हमारे जो हैं इससे आइडेंटिफाई भी करेंगे कि एक तो पहले जान लीजिए कि इंडिया में कोई ऐसा सोशल सिक्योरिटी प्लान नहीं है जो अमित ने बताया, जो कई कंट्रीज़ में, डेवलप कंट्रीज़ में होता है कि अगर आपके साथ कुछ अनटोवर्ड इंसिडेंट हो जाता है, आपकी जॉब लॉस हो जाती है, अनटाइमली डेथ हो जाती है, तो आपके फैमिली को कोई सपोर्ट नहीं है और इस तरीके का कोई सोशल सिक्योरिटी प्लान नहीं है कंट्री में जो कि आपको प्रोटेक्ट करता है इस तरीके की इवेंचुअलिटीज़ में। और इसीलिए ज़रूरी है कि इंडिया जैसी कंट्री में आपके पास इंश्योरेंस इसलिए होना चाहिए कि मुसीबत जो है वो कभी बताकर नहीं आएगी, और अगर वो आएगी तो उसके बाद आपके परिवार वालों को उसका जो बर्डन है वो ना फेस करना पड़े। इसके लिए आपको इंश्योरेंस लेना बहुत ज़रूरी है। अब इंश्योरेंस कौन सी लेनी चाहिए, किस किस तरह की इंश्योरेंस अवेलेबल हैं, कौन सी इंश्योरेंस आपके लिए बहुत ज़रूरी है, इन सब के ऊपर भी हम बात करेंगे। विल स्टार्ट ऑफ विद लाइफ इंश्योरेंस और टर्म इंश्योरेंस फर्स्ट। अमित, जैसा कि आपने बताया कि जो अर्निंग मेंबर होता है, अभी भी आपने बताया कि इंडिया में बहुत सारी ऐसे फैमिलीज हैं जहां पर केवल एक ही सोल ब्रेड विनर है फैमिली का, जिसके ऊपर पूरे फैमिली का बर्डन है, अपने स्पाउस का, बच्चों का, ओल्ड एज पेरेंट्स का, उन सब का बर्डन एक ही पर्सन के ऊपर है। और अगर वो सोल ब्रेड विनर की लाइफ को कुछ भी होता है, अगर अनटाइमली डेथ हो जाती है, परमानेंट डिसेबिलिटी हो जाती है, ऐसा एक्सीडेंट हो जाता है जिससे कि जॉब्स चली जाए, तो आप उस सिनेरियो में क्या करते हैं? और इसलिए लाइफ इंश्योरेंस का महत्व बढ़ता चला जा रहा है। आज भी अगर हम देखें तो इंडिया में बहुत कम परसेंटेज ऐसे हैं जो लोग लाइफ इंश्योरेंस या टर्म इंश्योरेंस लेते हैं। तो सबसे पहले तो ये बताइए कि लाइफ इंश्योरेंस लेना क्यों ज़रूरी है, किस तरीके की लाइफ इंश्योरेंस अवेलेबल है मार्केट में, और क्या ध्यान में रखना चाहिए, किस किस को लेना चाहिए लाइफ इंश्योरेंस?
बिल्कुल, देखिए लाइफ इंश्योरेंस के दो पार्ट्स हैं। पहला और आई वुड से द मोस्ट कॉमन रिक्वायरमेंट इज हैविंग अ टर्म लाइफ इंश्योरेंस।
ठीक है,
बहुत सिंपल प्रोडक्ट है। इसका मतलब ये है कि अगर जो पॉलिसी होल्डर है उनकी डेथ हो जाती है किसी भी कारण, नेचुरल, एक्सीडेंटल, किसी डिजीज की वजह से किसी भी कारण उनकी डेथ अगर हो जाती है, तो उनके जो डिपेंडेंट्स हैं, जो उनके नॉमिनी है, जो जनरली पेरेंट्स, बच्चे या फिर स्पाउस होते हैं, उनको एक लमसम अमाउंट मिल जाता है। इट इज एज सिंपल एज दैट। बहुत बहुत सरल प्रोडक्ट है। अगर पॉलिसी होल्डर की डेथ होती है तो उनके नॉमिनी को एक लमसम अमाउंट मिल जाता है। इसकी जरूरत क्या है? जैसे कि हमने बात करी, देखिए पहला डर किसी भी आज एक मिडिल क्लास फैमिली के लिए होता है डेथ ऑफ द अर्निंग मेंबर ऑफ द फैमिली। उस केस में टर्म इंश्योरेंस आपके काम आता है। तो बहुत बहुत एक आपको ये डिसाइड करना जरूरी है कि आपको कितना सम एश्योर्ड लेना है, कि आप 50, 1 करोड़, 2 करोड़, 5 करोड़, कितना सम एश्योर्ड लेना चाहते हैं। इसका मतलब यह है कि अगर अर्निंग मेंबर की डेथ होती है तो आपको उतना अमाउंट मिलेगा, नॉमिनी को उतना अमाउंट मिलेगा। वो अमाउंट आपको डिसाइड करना होता है। और आपको दूसरी चीज ये डिसाइड करनी होती है कि टिल व्हाट एज डू यू वांट दिस टर्म इंश्योरेंस फॉर। लाइक क्या आप अपनी अर्निंग एज तक चाहते हैं, विच मीन्स लेट्स से 60 इयर्स तक चाहते हैं, या आप और आगे तक की कवरेज चाहते हैं, जिसका मतलब है कि यू वांट टू गेट कवर टिल लेट्स से 70 और 80 इयर्स ऑफ एज।
ओके,
These are the two things which you have to decide when you're buying your term insurance policy. It is a very simple online process. You can buy online. You can buy on EMIs so that you pay every month. So it is easier on your pocket as well.
Okay.
The most logical way of looking at what sum insured to buy is you understand your current household expenses. आपका आज कितना खर्चा है आपकी फैमिली का।
ठीक है।
अगर आप करते हैं तो कितने पैसे उन्हें चाहिए होंगे कि उनका खर्चा चलता रहे। इसको आप एक रूल ऑफ थंब मान के अपना कैलकुलेशन कर सकते हैं। एक आसान रूल ऑफ थंब ये माना जाता है कि 10 to 20 टाइम्स योर एनुअल इनकम इज हाउ यू शुड लुक एट योर टर्म इंश्योरेंस सम एश्योर्ड। सो मान लीजिए अगर आपका 10 लाख रुपए का आपका एनुअल इनकम है तो आपको 1 करोड़ 2 करोड़ के बीच में सम इंश्योर्ड लेना चाहिए।
अच्छा, ठीक है। तो सम इंश्योर्ड का मतलब हो गया कि कितने की आप पॉलिसी लेंगे, उसके हिसाब से आपका प्रीमियम ऑफ कोर्स डिसाइड होता है। लेकिन अगर आपके सालाना खर्चा या सालाना इनकम आपकी 10 लाख रुपए की है तो उस हिसाब से, रेशियो के हिसाब से आपको 1 से 2 करोड़ का टर्म इंश्योरेंस लेना चाहिए, क्योंकि आगे जाते हुए ये जो आपके जो कवरेज है, जो आपकी मंथली एक्सपेंसेस है उसे कवर करेगा, कोई भी फाइनेंशियल डेट है उसे कवर करने में हेल्प करेगा, कोई भी फीस जानी है उसको कवर करेगा। तो डेफिनेटली आपको उस हिसाब से अपना सम एश्योर्ड लेना है। कई लोग कम ले लेते हैं तो उसका बेनिफिट नहीं होता है। प्रीमियम में ज्यादा फर्क नहीं आता है, थोड़ा बहुत 400-500 रुपए का फर्क आ जाएगा, लेकिन आपको लॉन्ग टर्म के हिसाब से एक अच्छा बढ़िया सम एश्योर्ड लेना है जब आप लाइफ इंश्योरेंस लेते हैं। लेकिन अक्सर जो लोग कंफ्यूज हो जाते हैं ना, आजकल बहुत सारी कंपनीज इस तरीके से भी प्लान्स बेचते हैं कि आप टर्म इंश्योरेंस ले लीजिए, एक टाइम के बाद आपको कुछ पैसा वापस भी मिल जाएगा। कुछ एंडाउमेंट प्लान्स, यूलिप प्लान्स अक्सर चलते हैं। तो यहाँ पर फर्क बताइए कि लोगों को डिसाइड कैसे करना है, क्योंकि अक्सर जो माइंडसेट है इंडियन इन्वेस्टर्स का, वो ये सोचते हैं कि मैं खाली पैसे वेस्ट करने के लिए नहीं देना चाहता, मुझे कुछ रिटर्न में भी चाहिए। तो वो जो मानसिकता है उसको कैसे टैकल करें, क्योंकि इंश्योरेंस लेते समय अक्सर वो ये पूछते हैं कि इतना प्रीमियम मैं दे रहा हूं, मुझे वापस कितना मिलेगा। तो वो ये समझ नहीं पाते हैं कि आप जो पैसा दे रहे हैं अपनी लाइफ को और अपनी फैमिली की लाइफ को प्रोटेक्ट करने के लिए दे रहे हैं, इसमें से रिटर्न शायद लेना जरूरी नहीं होना चाहिए।
बिल्कुल बिल्कुल सही बोला आपने। आज मार्केट में प्लान्स हर तरीके के हैं। ऐसे प्लान्स हैं जो लाइफ लॉन्ग भी चलते हैं, कि आप मान लीजिए अगर पॉलिसी होल्डर 100 साल तक जिए तो 100 साल के बाद भी उन्हें पैसे मिलते हैं। एक टॉप प्लान भी आता है, टर्म रिटर्न ऑफ प्रीमियम, जिसका मतलब ये होता है कि अगर जहां लेट्स से पॉलिसी होल्डर ने 60 साल की उम्र तक का प्लान लिया है, तो 60 तक अगर उनकी डेथ नहीं होती है तो उन्होंने जितना भी प्रीमियम दिया है उतना वापस भी मिल जाता है। ऐसे प्लान आते हैं। लेकिन द राइट एडवाइस इन दिस केस इज कि आप प्रोटेक्शन और इन्वेस्टमेंट को अलग रखिए।
ठीक है।
टर्म इंश्योरेंस, बेसिक टर्म इंश्योरेंस का एक ही ऑब्जेक्टिव है, एक ही मुद्दा है कि कैसे अगर अनटाइमली डेथ हो जाती है पॉलिसी होल्डर की तो उनकी फैमिली को पैसे मिल जाए। तो आपको टर्म इंश्योरेंस को अलग रखना चाहिए। इन्वेस्टमेंट के लिए मैं आपको ये रेकमेंड करूंगा, जो कि अब हम आते हैं दूसरी तरह की लाइफ इंश्योरेंस, जिसको हम गोल बेस्ड सेविंग्स प्लान बोलते हैं। तो मान लीजिए आपका अभी यंग बच्चा है, जैसे 2-3 साल का आपका बच्चा है, अभी पैदा हुआ है, और आप उनकी पढ़ाई के लिए पैसे इकट्ठे करना चाहते हैं। मान लीजिए आप 18-20 साल बाद बच्चा बाहर अगर पढ़ने जाएगा तो उसके लिए आप लेट्स से 50 लाख या 1 करोड़ रुपए आप इकट्ठे करना चाहते हैं, तो उसको गोल बेस्ड सेविंग्स प्लान बोलते हैं, जिसमें कि आप हर महीने या हर साल आप पैसे डालते हैं और वो पैसे एज द स्टॉक मार्केट्स ग्रो या जिस भी तरह का आपने प्लान लिया है, एज दैट एसेट वैल्यू इंक्रीजेस वो वैल्यू भी बढ़ती जाती है। तो ये एक डिसिप्लिन्ड सेविंग्स प्लान होता है। इसी की तरह रिटायरमेंट प्लान्स भी आते हैं। इसका मतलब है कि मान लीजिए आज मैं 40 साल का हूं और मैं लेट्स से अगले 20 साल काम करने वाला हूं, तो मैं एक रिटायरमेंट प्लान आज लेता हूं जिसमें कि मैं हर महीने पैसे इन्वेस्ट करता हूं और 20 साल बाद या 30 साल बाद जब मैं रिटायर होऊंगा, एट दैट पॉइंट मेरे को एक एन्युटी मिलेगी। मतलब इसका मतलब है कि हर महीने या हर साल मेरे को एक इनकम मिलेगी उसी
पेंशन की तरह। हाँ,
पेंशन की तरह, बिल्कुल। तो ऐसे प्लान्स भी आते हैं। इसके अलावा अगर आप मार्केट्स में इन्वेस्ट करना चाहते हैं तो यूनिट लिंक प्लान जैसे आपने बोला वो भी आते हैं, जो बहुत ही लो कॉस्ट होते हैं, उसमें कोई लोडिंग नहीं होती है ज्यादा, और वो स्टॉक मार्केट्स में भी इन्वेस्ट करते हैं। सो तरह तरह के ऑप्शन है। मैं यही बोलूंगा कि इंश्योरेंस और प्रोटेक्शन और सेविंग्स को अलग अलग रखना चाहिए।
ठीक है।
प्रोटेक्शन है टर्म इंश्योरेंस जो कि डेथ बेनिफिट प्रोवाइड करता है, उसको आपको अलग से देखना चाहिए। और ये आई वुड से कि इज अ वेरी वेरी इंपॉर्टेंट और बेसिक नीड फॉर एनीबडी जिन पे एक डिपेंडेंट परिवार है। इन्वेस्टमेंट आपको गोल बेस्ड करना चाहिए। इसका एक बहुत बड़ा बेनिफिट ये होता है, जो गोल बेस्ड लाइफ इंश्योरेंस सेविंग्स प्लान होते हैं, वो ये है कि अगर मान लीजिए, क्योंकि काफी लोग इसको म्यूचुअल फंड से कंपेयर करते हैं कि भाई
हाँ, बिल्कुल
कर सकता हूं और मैं एक रिटायरमेंट प्लान में भी इन्वेस्ट कर सकता हूं। इनका जो एक बहुत बड़ा डिफरेंस होता है वो ये होता है कि मान लीजिए आप हर महीने 1000 रुपए या 2000 रुपए म्यूचुअल फंड में डालते हैं, वैसे ही आप एक रिटायरमेंट या चाइल्ड प्लान में भी अगर डालते हैं, अगर अर्निंग मेंबर की डेथ हो जाती है मिडवे ड्यूरिंग द प्रीमियम पेमेंट, तो म्यूचुअल फंड तो वहीं पे रुक जाता है, बिकॉज म्यूचुअल फंड तो उतना ही पैसे डालेगा मार्केट में जितने कि आप डाल रहे हैं। सेविंग्स प्लान में एक वेवर ऑफ प्रीमियम का कॉन्सेप्ट होता है। इसका मतलब यह है कि अगर अर्निंग मेंबर की डेथ हो जाती है तो आगे का प्रीमियम वेव ऑफ हो जाता है। तो ये बहुत बड़ा बेनिफिट है जो कि मिलता है एक सेविंग्स प्लान में, जो गोल बेस्ड सेविंग्स प्लान होते हैं, कि अगर अर्निंग मेंबर की डेथ हो गई तो वो प्लान चालू रहता है, कंटिन्यू रहता है, इंश्योरेंस कंपनी आपके बिहाफ पे इन्वेस्ट करती रहती है।
ये भी एक बहुत अच्छी बात आपने बताई है। एक तो टर्म इंश्योरेंस हो गई जहां पर डेथ का बेनिफिट फैमिली को मिलता है, एक लमसम अमाउंट आपके फैमिली को प्रोटेक्शन के तौर पर जितने की भी आपने पॉलिसी सम एश्योर्ड लिया है उतना मिल जाता है। लेकिन दूसरा है लाइफ इंश्योरेंस में जो सेविंग प्लान्स है, मान लीजिए अगर आप अपने परिवार के लिए कुछ लगातार इन्वेस्ट कर रहे हैं और गोल बेस्ड इन्वेस्टिंग करना चाहते हैं कि एक सालान 20 साल के बाद पढ़ाई के लिए या 25 साल के बाद उनकी शादी के लिए एक लमसम अमाउंट इकट्ठा हो जाए, तब आप इन लाइफ सेविंग ऑप्शंस के लिए जा सकते हैं जहां पर प्रीमियम वेव ऑफ हो जाएगा, लेकिन आपके बच्चे के लिए जो भी आपने गोल तय किया था उसका जो भरपाई है वो आपकी तरफ से जो ये इंश्योरेंस कंपनी है वो करती है, और लगातार आपका वो जो सम है वो आपको आगे जाते हुए मिल जाता है। तो ये दो तरीके के प्लान हैं जिनके बारे में आपको डेफिनेटली पता करना चाहिए। अब करते हैं हेल्थ इंश्योरेंस की बात। हेल्थ इंश्योरेंस हम लगातार देख रहे हैं कि मेडिकल इन्फ्लेशन बहुत ही तेजी से बढ़ रहा है। एक बार अगर आपको हॉस्पिटलाइज होना पड़ जाए तो लाखों रुपए का खर्चा हो जाता है और इमीडिएटली फाइनेंशियल बर्डन आ जाता है। इसलिए हम चाहते हैं कि हेल्थ इंश्योरेंस तो सबके लिए बहुत ही जरूरी है, जो ऑलमोस्ट हर एक को लेना ही चाहिए। इसमें कोई टू वेज होना ही नहीं चाहिए, क्योंकि आपको नहीं पता हेल्थ क्राइसिस कब आ जाए। तो ऐसे में सबसे पहले तो ये बताइए कि हेल्थ इंश्योरेंस कितनी लेनी चाहिए, उसमें क्या बातों का ध्यान रखना चाहिए, ये बताइए।
बिल्कुल, देखिए हेल्थ इंश्योरेंस सबसे बेसिक और पहला प्रोटेक्शन प्रोडक्ट है जो कि हर इंडियन को लेना चाहिए। इंडिया में अगेन मोस्टली हम लोग प्राइवेट हेल्थ केयर पे ही डिपेंड करते हैं, सरकारी अस्पताल नहीं जाना चाहते हैं हम लोग, वहाँ बेड्स नहीं मिलते हैं, क्वालिटी ऑफ ट्रीटमेंट उतना नहीं है। तो ऐसे में अपना खुद का हेल्थ इंश्योरेंस होना बहुत ज़रूरी है। इनफैक्ट जैसा कि आपने सबसे पहले बोला था कि किसी भी आप इन्वेस्टमेंट प्लानर के पास भी अगर जाते हैं तो पहला प्रोडक्ट जो हर कोई रेकमेंड करता
वो
है
हेल्थ इंश्योरेंस है। बिल्कुल,
इन्वेस्टमेंट से पहले हेल्थ इंश्योरेंस, बिकॉज हेल्थ इंश्योरेंस होगा तभी आप अपनी इन्वेस्टमेंट को प्रोटेक्ट कर पाएंगे।
बिल्कुल,
क्योंकि देखिए बीमारियां, हॉस्पिटलाइजेशन इज वेरी कॉमन एंड अनफॉर्चुनेट रियलिटी इसकी और बढ़ता जा रहा है आजकल। इनफैक्ट काफी यंग लोगों में बहुत हेल्थ कंडीशंस आ रहे हैं, कैंसर, हार्ट प्रॉब्लम बहुत कॉमन हो गया है। तो एक हेल्थ इंश्योरेंस पॉलिसी होना बहुत ही इंपॉर्टेंट है। अब कौन सी हेल्थ इंश्योरेंस पॉलिसी होनी चाहिए सबसे इंपॉर्टेंट, तो पहली चीज है सम इंश्योर्ड। इसमें भी सम इंश्योर्ड बहुत इंपॉर्टेंट है कि कितना कवर आपको लेना चाहिए
जी।
ये दो चीजों पे डिपेंड करता है। पहली चीज ये कि आप किस शहर में हैं और किस तरह के अस्पताल में ट्रीटमेंट कराना चाहेंगे। मान लीजिए आप किसी बड़े शहर, दिल्ली, गुड़गांव, मुंबई, बैंगलोर, हैदराबाद, चेन्नई, ऐसे किसी बड़े शहर में रहते हैं और आप चाहते हैं कि आपका ट्रीटमेंट अच्छे से अच्छे प्राइवेट हॉस्पिटल में, प्राइवेट वार्ड, प्राइवेट रूम में हो, तो ऐसे में आपको एक कॉम्प्रिहेंसिव हेल्थ इंश्योरेंस प्लान लेना चाहिए जिसमें कोई लिमिटेशंस ना हो। दूसरा, आपको कम से कम 20 लाख रुपए का सम इंश्योर्ड लेना चाहिए। अगर मेंबर ज्यादा है तो और ज्यादा, लेकिन कम से कम आपको 20 लाख का सम इंश्योर्ड तो लेना ही चाहिए।
ठीक है।
आपको बताता हूं क्यों। आज से 5 साल पहले 5 लाख 10 लाख सम इंश्योर्ड काफी होता था,
लेकिन इन्फ्लेशन बढ़ गई है।
बिल्कुल, मेडिकल इन्फ्लेशन काफी बढ़ गया है, महंगाई काफी बढ़ गई है। एक 10 दिन की हॉस्पिटलाइजेशन का खर्चा आराम से आजकल 10-12 लाख रुपए आ जाता है। तो ऐसे में आप ये नहीं चाहेंगे कि आप हॉस्पिटल में हैं और आपका सम इंश्योर्ड खत्म हो गया, ये काफी प्रॉब्लमेटिक सिनेरियो बन जाता है। और एक्स्ट्रा कॉस्ट ऑफ बाइंग, लेट्स से 10 की जगह 20 लाख अगर आप सम इंश्योर्ड खरीदते हैं तो थोड़े ही एक्स्ट्रा पैसे देने पड़ते हैं, लेकिन आपका कवरेज डबल हो जाता है।
ठीक है।
तो किसी बड़े शहर में रहते हैं तो आपको 20 लाख रुपए सम इंश्योर्ड लेना चाहिए। दूसरा, अगर मान लीजिए आप किसी बड़े शहर में रहते हैं लेकिन आपका इनकम उतना ज्यादा नहीं है, आप उतना खर्चा नहीं करना चाहते हेल्थ इंश्योरेंस पे, तो आपके पास कुछ और ऑप्शंस आ जाते हैं। पहली चीज, आप एक ऐसा प्लान ले सकते हैं जो कि लिमिटेड नेटवर्क है। इसका मतलब यह है कि मान लीजिए अगर आप दिल्ली गुड़गांव में रहते हैं तो आप मेदांता, फोर्टिस मैक्स, जो सबसे बड़े हॉस्पिटल्स हैं, आप उनमें नहीं जा सकते, लेकिन उनके अलावा काफी सारे मीडियम साइज के हॉस्पिटल्स, छोटे हॉस्पिटल्स हैं, वहां पे आप जा सकते हैं। इससे कॉस्ट ऑफ हेल्थ इंश्योरेंस काफी कम हो जाता है।
अच्छा, ठीक है।
दूसरा तरीका, आप ये बोले कि मैं सिंगल रूम में जाने की मेरे को जरूरत नहीं है, मैं तो एक वार्ड में भी अपना ट्रीटमेंट करा लूंगा। वार्ड बुरा नहीं होता, उसमें बस एक बड़ा रूम होता है और उसमें कुछ 6 बेड लगे होते हैं।
ठीक
है।
तो
अगर और खर्चा बचाना चाहते हैं तो आप ये बोल सकते हैं कि मेरे को ऐसा प्लान चाहिए जिसमें कि वार्ड में ट्रीटमेंट हो जाता है।
ठीक है।
अगर मान लीजिए आपके पास कॉर्पोरेट पॉलिसी है और उस कॉर्पोरेट पॉलिसी में 2 या 3 लाख या 5 लाख का सम इंश्योर्ड आपके पास ऑलरेडी है, तो आप ये सकते हैं कि मैं एक डिडक्टेबल ले लूंगा। डिडक्टेबल का मतलब है कि फर्स्ट, लेट्स से मान लीजिए आपने 1 लाख का डिडक्टेबल लिया अगर अपनी पॉलिसी में, तो पहला 1 लाख रुपए आपको खुद देना है। उसके बाद का सारा अमाउंट आपकी हेल्थ इंश्योरेंस पॉलिसी देगी। जैसे कि गाड़ी के क्लेम में, क्योंकि ये काफी कॉमन चीज है कि पहले 1000 या 2000 रुपए आपको देने होते हैं, उसके बाद का सारा पैसा इंश्योरेंस कंपनी देती है। वैसे ही जो भी आप डिडक्टेबल अमाउंट चूज करते हैं, आप 10,000, 20,000, 50,000, 1 लाख, जो भी आप डिडक्टेबल अमाउंट चूज करते हैं वो आपको देना है। वो आप अपनी किसी और पॉलिसी से भी दे सकते हैं। तो पहले 1 लाख रुपए आपने,
ये बहुत अच्छी बात है,
उसके बाद का सारा अमाउंट आपकी खुद की पॉलिसी दे देगी। ये सब करते करते आप अपना प्रीमियम को 50 से 60% डिस्काउंट कर सकते हैं।
क्या बात।
तो इसमें अफोर्डेबिलिटी बढ़ जाती है, और अगर आपके पास बहुत ज्यादा पैसे नहीं है फिर भी आप एक अच्छा हेल्थ इंश्योरेंस प्लान खरीद सकते हैं। अब मैं आगे बढ़ता हूं। अगर मान लीजिए आप किसी टियर 2, टियर 3 शहर में रहते हैं, अपार्ट फ्रॉम दिल्ली, बॉम्बे, बैंगलोर टाइप शहर, तो वहां पे भी कम से कम आपको 10 लाख रुपए का सम इंश्योर्ड तो लेना ही चाहिए। बट लेकिन सबको मैं यही रेकमेंड करूंगा कि देखिए, सम इंश्योर्ड जो है वो 10 लाख से 20 लाख से 50 लाख करने में बहुत एक्स्ट्रा पैसे नहीं लगते हैं। इनफैक्ट आजकल प्लान है जो अनलिमिटेड सम इंश्योर्ड देते हैं, जिसमें की कोई लिमिट ही नहीं है। तो हेल्थ इंश्योरेंस एक ऐसी चीज है जिसमें मैं कहूंगा कि हमें कंजूसी नहीं करनी चाहिए। सम इंश्योर्ड अपना ज्यादा से ज्यादा लेना चाहिए, ताकि कल को अगर कोई भी दिक्कत हो, परेशानी हो, तो एटलीस्ट फाइनेंशियली आप सिक्योर हैं।
बिल्कुल। तो चलिए, अब हेल्थ इंश्योरेंस को भी कवर कर लिया, अब आ जाते हैं तीसरे इंश्योरेंस पे, और वो है होम इंश्योरेंस। और ये शायद सबसे ज्यादा इग्नोर्ड है एज अ प्रोडक्ट। बहुत लोग इसको, 90% लोग शायद अपने होम्स को कवर नहीं करते होंगे, लेकिन क्यों ये जरूरी है और कितने छोटे प्रीमियम से ये शुरू हो जाता है, इसलिए क्यों जरूरी है, ये बताइए अमित जी।
बिल्कुल, देखिए, होम इंश्योरेंस में थोड़ा आपको ग्लोबल बैकग्राउंड दूंगा इसमें। होम इंश्योरेंस पूरी दुनिया में जितने भी डेवलप्ड देश हैं, वहां पे हेल्थ इंश्योरेंस के बाद सबसे कॉमन कैटेगरी ऑफ इंश्योरेंस है जो कि लोग खरीदते हैं। इनफैक्ट कुछ देशों में यह भी है कि अगर आपके पास होम इंश्योरेंस नहीं है तो आपका क्रेडिट स्कोर गिरा देते हैं, बिकॉज आपका रिस्क बढ़ जाता है काफी। इंडिया में अवेयरनेस काफी कम है होम इंश्योरेंस की, जो कि हमने देखा है, जिसकी वजह से जनरली होम इंश्योरेंस नहीं खरीदा जाता। अब मैं आपको समझाता हूँ होम इंश्योरेंस में क्या कवर होता है। 2 चीजें कवर होती हैं लार्जली, एक है स्ट्रक्चर और एक है कंटेंट। तो स्ट्रक्चर का मतलब है कि जो आपका घर खड़ा है, उसकी जो बिल्डिंग है और जो पूरा एक स्ट्रक्चर है कंक्रीट का, उसका कवरेज। कल को अगर अर्थक्वेक आ गया, फायर हो गई, एक्सीडेंट हो गया, तो जो स्ट्रक्चर ऑफ द हाउस है वो प्रोटेक्ट करता है, ये पार्ट ऑफ होम इंश्योरेंस। अब अगर तो आप किसी बड़ी सोसाइटी, कॉन्डोमिनियम, अपार्टमेंट में रहते हैं तो वहां पे स्ट्रक्चर इंश्योरेंस आपका बिल्डर ऑलरेडी लेता है, तो वो आपको लेने की जरूरत नहीं है। लेकिन मेजॉरिटी ऑफ द इंडिया रहती है इंडिपेंडेंट हाउसेस में,
इंडिपेंडेंट हाउसेस में।
जैसे कि हम कोई या फिर अपना घर जिसे बोलते हैं वो बना के लोग जिसमें रहते हैं, वहां पे, या अगर आप फ्लैट्स में रहते हैं, जैसे गवर्नमेंट फ्लैट्स, डीडीए फ्लैट्स ऐसे रहते हैं, वहां पे स्ट्रक्चर इंश्योरेंस आपको खुद लेना होता है, बिकॉज वहां पे आपके लिए किसी और ने लिया नहीं हुआ है स्ट्रक्चर इंश्योरेंस। तो ये पहला पॉइंट है। दूसरा है कंटेंट इंश्योरेंस। कंटेंट का मतलब ये है कि आपके घर के अंदर जितना भी सामान है, विच विल इंक्लूड, आप आजकल लोग काफी खर्चा करते हैं इंटीरियर डेकोरेशन पे, घर को सजाते हैं, महंगे कर्टन्स होते हैं, वॉल पैनल्स होते हैं,
बिल्कुल बिल्कुल।
घर में इलेक्ट्रॉनिक आइटम्स, टीवी, फ्रिज, वॉशिंग मशीन, एयर कंडीशनर्स। इसके अलावा आपके जो वैल्यूएबल्स हैं इंक्लूडिंग गोल्ड, ज्वेलरी, ये सब भी जो आपके घर में होता है, ये सब का इंश्योरेंस करता है कंटेंट। सो आपको एक अगर कॉम्प्रिहेंसिव होम इंश्योरेंस पॉलिसी लेनी है, आपको ये दोनों चीजें लेनी होती है,
ठीक है,
स्ट्रक्चर इंश्योरेंस और कंटेंट इंश्योरेंस। ये दोनों अगर आप लेते हैं तो आप पीस ऑफ माइंड पे हैं कि कल को अगर मान लीजिए, एक बहुत ही स्केरी सिनेरियो है, बट आजकल अनफॉर्चुनेटली समर में काफी देखने मिल रहा है कि घर में आग लग जाती है,
आग लग रही है बहुत ज्यादा जी,
घर पूरा जल के राख अगर हो जाता है, तो घर में आपका जितना सामान था और आपके घर का स्ट्रक्चर, वो आप दोबारा आपको बनाना पड़ेगा। ऐसे में इंश्योरेंस इज अ वेरी इंपॉर्टेंट एस्पेक्ट। अब मैं आपको समझाता हूँ इसको खरीदना कैसे, बिकॉज एक बहुत कॉमन सवाल ये आता है सब कस्टमर्स के दिमाग में कि मैं डिक्लेयर कैसे करूं कि मेरे पास क्या है, उनकी वैल्यू कितनी है। तो बहुत सिंपल प्रोसेस है। देखिए, जितने भी आपके इलेक्ट्रॉनिक आइटम्स हैं उनका आपके पास एक बिल होता है, आप वैसे भी वारंटी के लिए संभाल के रखते हैं, तो जो भी उस बिल पे डिक्लेयर्ड आइटम है आपको वो डिक्लेयर करना होता है। जितना भी आपके पास गोल्ड, ज्वेलरी, वैल्यूएबल्स हैं, वो सब आपको डिक्लेयर करना होता है। और घर की एक नॉमिनल वैल्यू, जो मार्केट वैल्यू है जो चल रही है, वो आपको डिक्लेयर करनी होती है स्ट्रक्चर इंश्योरेंस के लिए। ये एक ऑनलाइन प्रोसेस है, बहुत सिंपल प्रोसेस है, इसके लिए कोई इंस्पेक्शन नहीं होती, कुछ नहीं होता। तो एक सिंपल प्रोसेस है जो आप फॉलो करके अपने लिए होम इंश्योरेंस खरीद सकते हैं। ये कुछ हजार रुपए, 7-8 हजार रुपए साल से स्टार्ट होके, डिपेंडिंग ऑन द हाउस एंड वैल्यू ऑफ द कंटेंट्स, ये बढ़ती है। लेकिन मैं दोबारा बोलूंगा, ये एक ऐसी चीज है जो सिर्फ एक हमारे ही देश में नहीं है कॉमन। इंडिया के अलावा हर देश में होम इंश्योरेंस सेकंड मोस्ट इंपॉर्टेंट कैटेगरी है इंश्योरेंस की, आफ्टर हेल्थ इंश्योरेंस।
गॉट इट। तो चलिए, होम इंश्योरेंस अगर नहीं है तो कंटेंट और स्ट्रक्चर दोनों के साथ आपको इसे देखना चाहिए। कम प्रीमियम है लेकिन कवरेज बहुत ज़्यादा आपको मिल जाता है इवेंचुअलिटीज़ में। मोटर इंश्योरेंस की अब बात करते हैं। मोटर इंश्योरेंस इंडिया में ज़्यादातर देखा जाता है, जो मैंडेटरी होता है ना, थर्ड पार्टी, वही लोग ले लेते हैं, लेकिन इससे आगे नहीं बढ़ते हैं क्योंकि उनको लगता है कि थर्ड पार्टी काफ़ी हो जाता है। लेकिन क्या ये काफ़ी होता है और क्यों नहीं होता है, इसको समझाइए।
बिल्कुल, देखिए, मोटर इंश्योरेंस आपने सही बोला, थर्ड पार्टी इंश्योरेंस एक मैंडेटरी प्रोडक्ट है जिसके बिना चालान हो जाता है, तो वो सब लेते ही हैं। इसके अलावा लेकिन एक ये कॉमन मिसकंसेप्शन है, मैं बोलूंगा, कि लोगों को लगता है कि इसमें मेरी गाड़ी भी कवर्ड होती है। थर्ड पार्टी इंश्योरेंस एज इट सेज है, अगर आपकी गाड़ी का एक्सीडेंट हो गया और उसकी वजह से किसी और को नुकसान हुआ, किसी की डेथ हो गई, किसी को इंजरी हो गई, तो थर्ड पार्टी इंश्योरेंस उसके लिए होती है। अगर आपकी गाड़ी डैमेज होती है, आपको चोट लगती है, तो थर्ड पार्टी इंश्योरेंस कवर नहीं करती है वो। ऐसे में जो एक बेसिक प्रोडक्ट है पहला, वो होता है ओन डैमेज इंश्योरेंस, विच मीन्स कि अगर आपकी गाड़ी का एक्सीडेंट हुआ या आपको कोई चोट लग गई ड्यूरिंग एन एक्सीडेंट, तो वो कवरेज मिलती है ओन डैमेज इंश्योरेंस से। अब इसमें इसमें एक बहुत बेसिक जो कवरेज है उसे, वो तो एक आपका बेसिक कॉम्प्रिहेंसिव कवर हो गया। इसके अलावा बहुत इंपॉर्टेंट है जीरो डेप्रिसिएशन कवर लेना अपनी मोटर इंश्योरेंस के साथ। तो अगर आपकी गाड़ी मान लीजिए 3 साल पुरानी है और आपकी गाड़ी का एक्सीडेंट हो जाता है, तो जितने भी प्लास्टिक पार्ट्स हैं, मान लीजिए बम्पर होता है या गाड़ी के और फेंडर वगैरह होते हैं, ये मामूली तौर पे इनमें डेप्रिसिएशन लगता है। तो मान लीजिए 50% डेप्रिसिएशन अगर हो जाता है, तो ऐसे में आपको क्लेम के टाइम पे सिर्फ 50% ऑफ द वैल्यू ही मिलेगा, उससे ज्यादा नहीं मिलता। लेकिन अगर आप जीरो डेप्रिसिएशन कवर लेते हैं साथ में, तो आपको 100% ऑफ द क्लेम अमाउंट मिलेगा, पूरा बेनिफिट मिलता है। तो ये एक एग्जांपल है। ये सेम चीज अप्लाई करती है हर पार्ट पे, ग्लास पे अलग अप्लाई करती है, हेडलाइट्स पे अलग अप्लाई करती है, हर चीज पे ये चीज अप्लाई करती है। तो वेरी वेरी इंपॉर्टेंट टू अंडरस्टैंड कि आप अपनी मोटर इंश्योरेंस पॉलिसी के साथ जीरो डेप्रिसिएशन कवर जरूर लीजिए, ताकि आपको जेब से खर्चा ना करना पड़े और आपकी इंश्योरेंस कंपनी ही क्लेम करे। दूसरी चीज मैं बोलूंगा आजकल बहुत इंपॉर्टेंट है, इज इंजन प्रोटेक्टर। मानसून का सीजन चल रहा है पूरे देश में, अभी बारिश हो रही है,
बिल्कुल,
कि गाड़ी कहीं पानी में अटक जाती है और उसकी वजह से आपका इंजन डैमेज हो जाता है गाड़ी का, तो वो इंश्योरेंस में कवर नहीं होता है जब तक कि आपके पास इंजन प्रोटेक्टर कवर हो। अगर आपके पास वो है, अगर वाटर इनग्रेस हो जाता है गाड़ी में, मान लीजिए आप कहीं बाढ़ में फंस गए, या कहीं बहुत बारी घर के बाहर ही आजकल पानी इकट्ठा हो जाता है और जिसकी वजह से गाड़ी खराब हो जाती है, तो इंजन प्रोटेक्टर कवर इसमें काम आता है। ये 2 मोस्ट कॉमन एड-ऑन्स है जो आपको लेने चाहिए आपकी गाड़ी की इंश्योरेंस के साथ।
All right, we just have 1 more minute left before we wind up the show, Amit. Last में ट्रैवल इंश्योरेंस के बारे में बहुत क्विकली बता दीजिए कि ये क्यों ज़रूरी होता है?
देखिए, ट्रैवल इंश्योरेंस ज़रूरी इसलिए है बिकॉज जब आप बाहर किसी देश में हैं, तब अगर एक छोटी सी भी मेडिकल इमरजेंसी हो गई, और बहुत छोटी, आपको डेंटिस्ट के पास जाना पड़ गया जो कि एक बहुत मामूली सी चीज़ है, तो भी वो खर्चा लाखों में चला जाता है। बिकॉज बाहर एक आउट पेशेंट डेंटल ट्रीटमेंट कराना का वैल्यू ही हज़ारों डॉलर्स में चली जाती है। और ये आपको बहुत बेसिक चीज बोली, अगर कोई मेजर कोई एक्सीडेंट हो गया, कोई दिक्कत हो गई, कोई किसी को हार्ट प्रॉब्लम हो गई, तो ये खर्चा एक्चुअली हजारों लाखों में, और मतलब बहुत बड़ा बड़ा अमाउंट बन सकता है। द कॉस्ट ऑफ हेल्थ इंश्योरेंस एक्चुअली हंड्रेड्स में होती है, हंड्रेड्स या थाउजेंड्स में होती है, तो कॉस्ट बहुत कम है, रेयरली क्लेम करना पड़ता है। लेकिन अगर कोई मेजर मेडिकल इमरजेंसी आ जाती है, या मैं तो मेजर क्यों, मैं बोलूंगा कि आपको डेंटिस्ट के पास ही अगर जाना पड़ जाता है, वो एक ऐसा पेन है जो बिल्कुल सहा नहीं जाता, तो ऐसे में आपका खर्चा काफी ज्यादा हो सकता है। ऐसे में आपके काम आता है ट्रैवल इंश्योरेंस पॉलिसी। तो बहुत ही नॉमिनल अमाउंट में यू गेट कवरेज इन केस आप जब ट्रैवल कर रहे हैं उस टाइम पे कोई परेशानी हो तो।
Fantastic. Thank you so much, Amit, for being with us on the program and explaining to all our viewers today top 5 must insurance policies. In case you do not have any of these policies, please ensure that you go ahead, find out more. You have any questions, send us your questions. We'll be happy to get Amit back to answer all your questions on the same as well. With that, we wrap up this special edition right here, but stay tuned. Market coverage continues on the other side. Hello and welcome. You're watching Business Today Television. I am Sakshi Batra and this is our special focused edition on mutual funds. अब आपने हमेशा सुना है, लोग कहते हैं म्यूचुअल फंड सही है, but what exactly is a mutual fund? Do mutual funds only invest in stock markets? And is there a lot of money needed to start off your investments in mutual funds? Or can you start off with as little as 500 rupees as well? And with so many options from equity, debt, hybrid, index, ELSS, which mutual fund option is actually right for you? If those are the questions that you always had in your mind, then this is the show that will help you understand everything that you need to know about kickstarting your mutual fund journey. Who always wanted to invest, did not know which mutual fund should you be choosing, we will also help you understand the strategies of identifying the right kind of mutual fund schemes for yourself as well in a simple possible way. We will also decode for you what are the different types of mutual funds available, where should you be really looking at getting the best options with the cheapest expense ratio. All of those things will be discussed on this special edition, Mutual Fund Ka Funda. So we'll start off by inviting our guest on board. We have Ankit Tikmani, the CIO for PMS Jainam, all joining in on the program with us. Hi Ankit, warm welcome. Good morning. First up, for all our viewers who are just joining in afresh, we have started this new series on our personal finance coverage every day at 10:30. Today's topic is mutual funds and the basics of mutual funds. First up, give our viewers a basic understanding of why mutual funds are seen as the best way of growing wealth.
Yeah. So basically, mutual funds have, last couple of years have not given that kind of returns. But historically, if you have seen, it has delivered, a multi-cap fund, a flexi-cap fund has delivered a return of 12 to 14% kind of return. So hence, I think mutual funds is a good, instrument to invest because, as a individual retail investor, it becomes very difficult to track stocks and build the portfolio. So rather, it's best to give it to a perfectionist and give the money to them. So that's why we feel that MF is a good instrument. Yeah.
So, Ankit, also help our viewers understand, when one starts off their journey in mutual funds, what is it that they should be really looking at? Many people still have a lot of confusion. They believe the companies that, have a lot of mutual fund schemes to offer are the places where they invest in. So people look at more brand names, whether I'm going for an ICICI mutual fund or an SBI or an HDFC Axis. They do not understand that much that you are actually not investing in the company, but those companies are providing you a lot of schemes that you can invest in. So first up, break that myth for all our viewers. How should one be really looking at, a mutual fund to start off with? Is it important to look at the brand name, or is it important to look at the scheme?
So basically, the type of mutual fund an investor should choose totally depends on the three primary factors. Its financial goals. What is the financial goal of that investor? What is the investment horizon? And what is the risk appetite? What is the drawdown, that investor can take? So there is no single best mutual fund for everyone nor any scheme. So I'll just elaborate. Example, large caps equity schemes would be suitable for conservative equity investors seeking relatively stable long-term growth. Flexi cap would be appropriate for investors who wants to have a diversified portfolio with the fund manager having the flexibility to invest across market capitalizations. Mid cap and small cap is better suited for investors with higher risk appetite and a long investment horizon, typically 7 to 8 years, as these funds can be very volatile. I'll give you an example. Last couple of years, index have gone nowhere, but we have seen a lot of small caps and mid cap companies have corrected. So it so happens that if you take it from peak to through, I mean, it is a like 3 to 4 year cycle. So even if someone has invested at the top of the cycle at one of the schemes managing small cap and mid cap fund, so they need time to exit. So that is why unless India's growing economy, small cap, mid cap companies are doing well, but then the horizon has to be 7 to 8 years because they are very volatile in nature. Similarly, index funds and ETFs are ideal for investors seeking low-cost passive exposure to the broader market without relying on active fund management. Hybrid funds is suitable for investors looking for a balance between equity and debt with lower volatility than pure equity funds. Now, hybrid funds, I'll explain this with an analogy, with a cricket analogy. In an innings, in a cricket batting innings, Dravid gives stability to the innings, and Sehwag takes care of the the scorecard, basically hitting the runs and everything. So similarly, a person, an investor who is more who is like who wants to take the benefit of both. For them, hybrid instruments are essential. For debt mutual funds, they are appropriate for capital preservation, regular income, or short to medium term goals. So investors should understand interest rate and credit risk.
Ankit, the question that I want to ask you is that simply first help our viewers understand. Usually people think that mutual funds is equal to stocks. First, help us understand whether this is a big myth there, and investors usually believe that mutual funds are risky. Are there also options where one can minimize the risk and yet take the benefit of mutual funds offering better set of returns than some of the very common schemes that investors invest in, like PPF or an NPS, or they go for some government schemes? Why does this option of mutual fund always equates to a lot of risk that people have to take? And how would you advise investors what to think about this?
So rather, I'll say that mutual fund is one of the less riskier asset compared to equities, because as a equity, you as a mutual fund manager, they have got a team, investment team, they have got sell-side analysts to assist them. So they can have 20, 30, 40 companies in their coverage. It becomes very difficult for a retail investor to have that kind of diversified portfolio. At max, they can invest in 3 or 4 companies, and also entry and exit is very important. For them, to take a call on which instrument in equity to buy and when to enter, when to exit becomes a very tough task. So that is why we prefer mutual fund scores over direct equities in that sense. Now, depending upon depending upon the purpose of the investment, whether it is retirement, buying a house, children's education, emergency corporate, etc. The investor can invest in that kind of scheme. For example, now I'll again explain this with an example. Now, Diwali is around the corner. Now, let's assume there is a trader, not stock trader, but a trader, and a businessman, who will be requiring some working capital needs to stock before the Diwali, let's assume. So he should not invest, he or she should not invest in equity because he'll be reading the funds 2 months down the line. So for them, that will come to a play. So it totally depends upon where that person is thinking, what state of life he is. But otherwise, mutual funds are much more simpler and it's efficient compared to direct equities. That is what our sense is.
Okay. Let me also try and understand from you, Ankit, when people start out first, somebody who has never invested in mutual funds before, what are the categories you advise them to invest in?
So, see, it is not about first investment or second investment or third. Let's assume he is or she is at 20 to 22 years old, and he has that kind of money flow. He having that kind of money flow, so he can take that risk of equity. For another person who is sitting at 55 and 60, he's already retired and he wants an ideal steady state inflows. Then for them, the debt funds is play a role. So at what stage of the life you are, whether you are a trader, let's assume one more example I'd like to give to explain the viewers. Let's assume I am into stock market. Let's assume, okay, I'm getting my bread and butter to the stock market now, and let's assume the market, God forbid it doesn't happen, but let's assume that Nifty falls by 30%, 40%, and I have already invested say in equities comes. So that way, it is not diversifying. Rather, it is like consolidating my risk. So for me, it makes sense to invest in debt funds. So it totally depends, upon what age he is, what is his income. One more example I like to give. Let's assume I'm a jeweler. I'm already having 50 kgs or 30 kgs, 50 kgs kind of gold in my inventory because that is how the business functions. Right? Whether it is B2B or B2C. Now I'll typically not invest in a commodity and mutual fund scheme that has got exposure to commodity because God forbid again if the gold prices comes down, I'll take a inventory hit as well as take a hit on the MF scheme that is having more exposure to the gold thing. So it is totally dependent upon that particular person. What is his risk profile? That way. Yeah.
Okay. Let's also try and understand a lot of people usually think about ELSS as the best way to invest in mutual funds because it offers investment and tax saving opportunities as well. But how would you really look at the ELSS option at a time when 90% or more people have already shifted to the new tax regime? Does it really make sense to look at the ELSS options?
So again, it depends upon what bracket you fall in, whether you fall in the 30% bracket. What is your so this question has got more to do with the taxation part, again individualistic thing. Let's assume I'm sitting at 20 lakhs package, then it doesn't make sense for me to go through that ELSS route because anyways the government has increased the tax bill. Now let's assume I'm sitting at 50 lakhs and at a higher package. Then at that point of time, maybe I would look for an old regime and I'll take ELSS into that consideration. So that again is very individualistic. There are a lot of portals on the website. They assist you. Investor can take guidance from their CA. There are a lot of personal finance programs like what we are conducting. So maybe that should be helpful for them to take a call on that part.
Okay, let me also try and understand when it comes to a lot of themes. People usually get attracted with when they say a particular thematic or a theme is working well in the stock markets. People usually go for those. Say, for instance, defense, infrastructure, power space. Whenever we see a strong run up in a particular theme in the stock markets, there are a lot of new fund offers that are announced by a lot of mutual fund companies, and therefore people think that those are the right times to invest in those themes. When should a thematic fund become a part of your portfolio?
See, historically, more often than not, so it's not a rule, but it's a guideline that, and what we have seen being associated with the equity markets last 20-25 years. Whenever a new sectoral scheme comes, most often we have seen in the 2000 cycles, we have seen that there were a lot of IT schemes launched, and we had seen post 2001, 2002, this NAVs coming at 10 rupees becoming 2 rupees, 3 rupees. So it so happens that it is a human psychology. It's got more to do with behavioral finance. As the scheme, as the theme is more on the limelight, it becomes very easy for the investors to put money. It becomes very easy for the mutual funds to launch schemes in that particular schemes. So we should be very selective in that sense. If something is in limelight, that doesn't guarantee that it will generate a return from there itself. Rather, we should think from a pinch of salt. So that has been my experience. So for the viewers, I would like to say that we should not blindly invest in a sectoral scheme, especially when the sector has been very hot for last 4-5 years. Because what we have seen is that after every 4-5 years or 6 years, there is sectoral rotation that happens, and God forbid if someone gets stuck, then there is a problem. So that's my opinion to the viewers.
Okay. Also trying to understand from you, what is the right mix between market cap based funds, say large caps, mid cap, small cap funds? What should be the ratio there? Then there are these multi-cap funds, that we look at as well. So how should one be deciding what is the right way of approaching or having the best diversification in market cap based funds in the portfolios?
So best and the simplest way is to invest through flexi cap schemes. Like the flexi cap schemes, more than 65% has to be invested in the equity schemes, and it is a good blend or mix of small cap, mid cap, and large cap companies. If the investor doesn't have to take a call on the which part of the segment that market will move. Let's assume it so happens that every 1.5-2 years, sometimes large cap outperforms the mid cap, small cap companies. Sometimes mid cap, small cap companies outperform the large cap. So if the investor is able to read that cycle well, then he can do a direct investment in mid cap and small cap companies. And if he doesn't want to take a risk, then he can invest in flexi cap. And the third thing is that let's assume that he doesn't want to take he or she is of the opinion that Nifty will give, let's assume 12, 13, 14 kind of CAGR kind of return, and he doesn't want to take a bet on the fund manager's active calls. Then there are ETFs also, where index-based funds also where the investors can invest. So it totally depends actually.
Okay. Also trying to understand, when it comes to selecting the mutual funds or selecting the mutual fund, companies or houses as well. What are the top 2 or 3 things that you advise clients to look at when they go for a fund? And, if you could also explain, there is always a confusion between whether you should go for direct or for regular. If you could help us understand, how should one be looking at those options?
So when deciding, in which mutual fund to investors should evaluate, a combination of quantitative and qualitative factors rather than focusing only on the past returns. Because every fund manager, every scheme have their own style of investment. Some are value focused, some are growth focused. So it sometimes so happens that 2-3 years the value stock will outperform, 2-3 years, 4 years the growth stock will outperform. So immediate history should not be immediate 1 year or 3 year history return should not be construed as the future performance. So then what? Then the next question comes: if not this, then what? So we should ensure that the fund's objective aligns with the financial goals. Whether the investor is opting for wealth creation, income, tax saving, etc. Then for fund category, I have already explained. Flexi cap, large cap, when to invest. Hybrid also we have already discussed, giving the Dravid and Sehwag analogy. Then we should also look at risk-adjusted returns. SEBI has started this thing, which is wonderful. Every fund house should give their risk metrics like Sharpe ratio, standard deviation. So these are some of the factors that needs to be taken care of. So ultimately the best mutual fund is not necessarily the one that has given highest recent returns, but the one that has consistently aligns with investor goals, risk tolerance, and time horizon. Some mutual funds have got this risk-taking ability, so they deliver good returns, say from 5 to 7 years perspective. But in we have seen some mutual funds. I'll not quote, but we have some mutual funds have given good returns 5 to 7 years perspective. But last 2-3 years they have not performed because in that case, if the risk appetite of the mutual fund investor is less, then maybe they should look for another. So it totally depends upon the time horizon, risk tolerance, ability, everything. The broader risk.
Okay. Time up, and we'll have to thank you, Ankit, right here. Thanks for being with us on the program and giving us all your insights there. Viewers, we'll wrap it up on that note, but we'll continue to get you market coverage on the other side of this break.
Thank you so much.
Hello and welcome. You're watching Business Today. I'm Neetu Chandra Sharma. Last quarter, Jupiter Lifeline Hospitals Limited announced major expansion plans that will significantly increase its bed capacity over the next few years. With the company set to announce its quarterly results later this month, it's a good time to take stock of its expansion plans, funding strategy, and long-term growth outlook. To discuss all of that, I have with me on the show Dr. Ankit Thakkar, Managing Director and CEO of Jupiter Lifeline Hospitals Limited. Dr. Ankit, warm welcome and thanks for taking the time out. So let me start off by asking you about your expansion plans. So what is the total capital investments that you are committing over the next 3 to 5 years? And if you can also tell us that what is the timeline for these projects?
So ever since we got listed, we have announced 4 new hospital projects, one of which we have just delivered last quarter. That is in Dombivli, we started our 500-bed hospital. Besides this, we have 3 more projects in the pipeline. We are doing one hospital in south of Pune, where we are building 500 beds. We are doing one in Meera Road in the north-western Mumbai metropolitan region, where we are doing around 300 beds. And then we are doing BKC, about 400 beds. So this entire cycle of CapEx, which is adding around 1,700 beds in capacity, is likely to cost us about 1.5 crores per bed.
So also let us know that how do you plan to fund this expansion, and how much will come through debt and how much through the internal accruals or equity? Also tell us that at what level of leverage do you begin to get cautious after about this further expansion?
So currently we are holding around 500 crores in cash, and last year we had a EBITDA of 350 crores. So, if you extra
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation. Catch India's magnificent rally and make it a part of your booming portfolio. Look out for the next set of multi-baggers at BTTV.
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation. Catch India's magnificent rally and make it a part of your booming portfolio. Look out for the next set of multi-baggers at BTTV.
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation. Catch India's magnificent rally and make it a part of your booming portfolio. Look out for the next set of multi-baggers at BTTV.
This investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight. SEBI and NSE advise, consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange. ICFI University, building tomorrow's leaders today.
Good afternoon, dear viewers. You're watching the Business Today show. I'm Sakshi Batra. This is where I get you all the closing action on Dalal Street in the last 19 minutes of trade, and you're looking at some recovery from the day's lowest point on the Nifty. But first up, let's take a look at what's hot in the corporate and the financial world. Markets extend losses for the fifth straight session. The Sensex trades 350 points lower, near 76,000 mark, while the Nifty has slipped 100 points, now in trades to trade about 23,750. Auto stocks have led the decline today. HCL Tech announces a major AI infrastructure project. The company will be setting up an AI data center in Bhubaneswar with Sarvam and the Odisha government. The planned capital outlay for the project now stands at 14,000 crore rupees. HDFC Bank faces fresh scrutiny in the US as 3 law firms investigate possible securities law violations. The investigations relate to allegations that 45 crore rupees in payments to Maharashtra's MSRDC were booked as marketing expenses. The lender has denied any wrongdoing. Sun Pharma inches closer to the biggest ever acquisition after Organon shareholders have approved the proposed merger. The $9.4 billion deal will now move towards completion of subject to regulatory approvals as well as other customary closing conditions. India's private sector activity slips to more than 4-year low. Amid the Iran-related risks, HSBC's flash composite PMI has declined to 54.3 in July from 57.1 in the month of June, as services growth has lost the momentum despite resilient manufacturing. Straight away look at how the markets are trading at this point in time. Viewers, we still have auto, realty, metal stocks, all of them down in the session, which is keeping the markets lower at about 0.5%, but definitely we've improved from today's low point. Look at the Nifty Bank. That's where some green is being seen now. Flat with the positive bias for the Nifty Bank. It's the PSU banks that have led the recovery in the banking names. IT stocks have also pulled up with HCL Tech news coming in as far as the AI infrastructure investment is concerned. We are looking at these 2 pockets that are supporting the sentiment. But let's welcome our guest on board. We have Gaurang Shah, Senior Vice President, Geojit Investments, joining in. Well, welcome to you, Gaurang. Good to have you with us. Well, how are you looking at these crude pressures yet again shocking the investors? $100 a barrel has come in just about in 3 to 4 days. Gaurang, we were looking at what, $85 a barrel just 3 to 4 sessions ago, and we've swiftly moved up, and that's the key worry.
Thank you, Sakshi, for having me on your show. Good afternoon to all your viewers, and to you, a small disclosure, all recommendations that I'll be sharing with you this afternoon on your show, Sakshi, they are part of our fundamental research team recommendation from a long-term point of view. Our company, Geojit, or myself, we don't have any kind of personal investments, no financial interest or conflict of interest, but we share similar investment ideas with our clients. They might have their investment interest. So you remember, Sakshi, when it was at $120 and people were talking about $150, $200, it didn't go to $150. It went up to 120 or 125, and then because of the so-called deal or MOU or a resolution, it came down to $70. It did not take time even then. So I think this time a little bit of elevated concern because of the attack on Saudi vessel which was carrying crude oil in the Red Sea by the Yemeni Houthis. And this has added to a little bit of more problem and worries, and along with that, depreciating rupee also creates a double-edged sword for our economy and growth. So while we are struggling with this situation, not only India, but I think the world is struggling with the kind of statement and counter statements that are coming out from the Trump administration and the Iranian regime. I think this will possibly have an impact. But the good part, Sakshi, is that most of the indices, including your Sensex, Nifty, and some Bank Nifty, IT index, and some other sectoral index, they have recovered from the previous low. So we see buying coming at lower levels. At least that's a soothing part.
Absolutely. There's another breaking news coming in on your screen, viewers. This is with regards to Flipkart. There are reports indicating that Flipkart is now soon to enter the online food delivery space. Flipkart will be taking on Zomato and Swiggy. Reports are indicating that Flipkart now plans food delivery launch pretty soon. We are also looking at this Walmart-owned Flipkart company to enter food delivery. That's what the reports are indicating. This is to launch the food service via ONDC. That we are looking at. Those are some initial reports that are indicating at this point in time. So that's something which will, of course, be beneficial to all the consumers with a lot of competition coming into the food delivery space, and thereby maybe some kind of a price war starting there as well to grab the market share. So far, the space has been dominated by Swiggy and Zomato. So that's something that's coming in on your screens, viewers. We'll continue to keep an eye out on that. But Gaurang, coming back to the markets, you did rightly pointed out that IT and banking names are definitely seeing some kind of a recovery at this point in time. How are you looking at what to look at in this market, even in the dips, what to add in this market, and where to stay clearly away from?
So clearly away, Sakshi, I think oil related, right? Because oil has been a joker in the pack. It's been volatile and it's very difficult to predict the behavior of crude oil. So I think oil exploration, oil marketing companies with this kind of volatility, sectors which are directly dependent and sectors which have a large input cost in terms of raw material in form of crude oil should be avoided as of now because of the uncertainty. But where to look at, I think defense, power generation, autos, Sakshi has been, though it is a direct, again, correlated with crude oil, but with the kind of numbers that have come out, not in the first quarter, for the earnings, whatever we've seen so far, Sakshi, but even for the month-on-month numbers, they have been stellar, not only on the domestic front, but export market is a big opportunity, and that's what we were discussing with ABA and Shell, I think it was on Wednesday. I had shared my view, Sakshi, that the number of FTAs that India has signed with various countries, one sector that will get benefited is auto. So autos, defense, power generation, maybe to a certain extent, pharma, healthcare, Sakshi looks very attractive because it is relatively insulated from the external shocks and it's a need kind of a sector. So these are the primary sectors that one should look at.
Hold on to that healthcare thought, Gaurang, we'll come to it, especially because we are now looking at Manipal Healthcare also going to be hitting Dalal Street very soon with a mammoth 9,200 crores IPO, primarily to, of course, wipe out the massive debt from its Sayadri Hospital's acquisition. In fact, I spoke with the MD and the CEO, Dilip Jose, earlier, and to find out why the existing investors are actually going to be still holding tight despite some OFS portion that is going to be coming into the IPO. Let's listen into what he had to say.
The primary purpose of this listing is to, the inputs would be used, the proceeds would be used to repay and actually prepay some debt that we have. We had taken about 6,000 crores of debt some months ago to complete the acquisition of Sayadri Hospitals. And the primary purpose of this listing is to raise proceeds to repay that debt.
Okay. So could you also help us understand, when it comes to the offer for sale, who are your selling shareholders and what would be the stake, or shareholding pattern look like post the IPO?
So, Sakshi, it would be proportionate. All the existing shareholders are selling proportionately. In terms of post-listing shareholding and between Temasek and the Manipal Group, they will continue to be promoters and continue to have a majority stake.
Okay. What factors, Mr. Jose, were considered before deciding on the timing of launching this IPO, and how much of it was driven by the need to give an exit to the existing investors?
Like I mentioned, Sakshi, there is no need to give an exit to any of the current investors. And like I mentioned, our OFS is a very small proportion of the total issue. 8,000 crore primary versus an OFS of the range of 1,200 crores. So there was no desire for anybody to really get a complete exit at all. I think, like I mentioned earlier, people are selling pari passu. And so the primary purpose to reiterate was to raise funds to pay down the debt.
Varang, so we are going to be seeing increased amount of players now for investors to choose from in the healthcare basket. So far, we've discussed with you off and on about Apollo Hospitals, Fortis Healthcare, and many other companies that are already listed. Manipal also, when it comes to the large scale that it has, the presence across about 20 or 24 odd districts, over 12,000 beds is what they already have. It's a strong player there as well. And they're also trying to look at capturing more geographies beyond Karnataka. Maharashtra is something that they're looking at very closely, Mumbai as well. How are you looking at Manipal Health as an opportunity that investors can look at?
So firstly, Sakshi, I think while we have a lot of choice, but the cost of healthcare should also come down, The way people bill patients when they go into an hospital, and the direct question is, do you have a Medicaid? Anyways, that's a part. But, well, the team is working, honestly, Sakshi, on this particular IPO of Manipal Health. They have not yet come out with a decisive note on this particular thing, but I think it will be attractive. I'm not by any means giving any kind of recommendation since we have yet to, my team is yet batting the papers. But this is one sector, Sakshi, that has been always attractive in terms of earning visibility, in terms of capex, in terms of the number of players, and in terms of the opportunity that will arise going into the future. So currently, we have positive coverage on amongst the listed entities, Sakshi. Apollo Hospitals, Fortis Healthcare, Narayan Vidalaya, Max Healthcare, and Rainbow Children's Healthcare. These are some of the names that we are currently positive. I think as soon as we get a note and a go ahead from my research team, I will definitely share our views as far as Manipal is concerned.
Sure. Let's also focus on the earnings that have been coming in. Auto ancillary major Sona Comstar is also looking well beyond automotive sector. In fact, along with its strong Q1 performance, we've seen the company now making a strategic push into robotics and physical AI, market that it believes could eventually outgrow the global automotive industry as well. So, of course, let's try and understand what the management has to believe as to how could this fit into its long-term growth strategy. I spoke with Vivek Vikram Singh, the MD and Group CEO of Sona Comstar, to understand more about this new foray.
The physical AI industry, or even the subset, which is just the intelligent robot industry, will be a far bigger industry than automotive is today in just 15 years. It is going to be one of the largest industries known, and even a small fraction of that is good enough for our ambitions. Now, why does Sona Comstar think it can play and it can win? And good, we announced it after winning a few orders already. Because if you look at what we do, even for automotive, we do gearboxes and reducers, we do motors, we do sensors and software in perception, and these are essentially the building block of any robotic device. A robot has a body, it has gears and motors that allow it to move. It has a perception stack which has cameras and radars which allows it to sense its environment, and then finally software to process that information and take decisions. This is essentially what we do for automotive anyway. And I think the convergence of automotive and robotics is going to happen in the very near future. If you look at Hyundai just bought Boston Dynamics, Tesla has Optimus, Xiaomi does its own robots, BYD is doing robots. Everyone who makes cars is actually in the best place to build advanced robotics. And hence that auto supply chain is actually the most capable to get into that supply chain. So it's a adjacency. We are finding applications for the capabilities we already have.
Right. Gaurang, coming to you, how would you look at Sona Comstar post the earnings that it has managed to post? I think the strongest ever revenue for its quarter that we have seen, and profit numbers have also beat the street estimates this time around. Even though we've also seen that they're talking about Sona Comstar 2.0 strategy over the next 10 years, they're talking about a 10x kind of a growth to chase the similar growth patterns that they've achieved over the last 1 decade. This time around, betting big on robotics and AI.
So, Sakshi, a simple approach. If auto sector is going to do well, then auto ancillary, OEM segment companies, tire and battery manufacturing companies, all these are very closely linked with each other. So if auto does well, all these will do well, not only in form of new auto market, but also in form of replacement market. While catering to the domestic automobile manufacturing companies is a big opportunity, most of these companies have a sizable presence as far as the export market is also concerned. Now, for Sona Comstar, the legacy issue is still hurting. While we remain extremely positive on the sector, no specific comments on Sona because we don't have coverage, but we like Bosch. We are positive on Uno Minda. We're positive on CI Automotive. Samvardhan Motherson is the other stock that we are positive, and positive on battery manufacturing companies like Exide and Amara Raja Mobility. In tires, we are positive on Apollo, JK, and Balkrishna Industries.
All right, so that's the entire auto-related stocks that you could definitely be looking at as well. Also, when we talk about the earnings per se, how are you looking at the IT names? Infosys that's come out with the earnings, yet again the guidance cut, and how would you really look at your positioning there? We've already seen the entire IT pack largely to come out with the earnings. Your stance on Infosys, and now HCL Tech in fact is rising because of its big AI-led investment in Odisha. Your sense of how would you assess, are IT stocks or tech majors finally waking up to their own investments in the AI space and how they need to play catch up, or are things going to still be very cautious around the space?
So Sakshi, this is going to be an evolving sector when it comes to technology upgrade, technological innovations, and introductions of new tools and platforms. And each and every company will definitely have to reinvent themselves and make them capable to compete with this ever-changing environment in terms of upgrades. Earnings for IT sector, one thing, if I can put it in one sentence, actually, it was good that there were no dark spots or no red flags. Commentary from the management and of course the HCL Tech news you're talking about. I think going forward, many more IT companies, they've already started and they will invest more in AI and technological upgrade and changes. So if you decide eventually to invest in IT sector, first of all, you will not get the return the way you were getting return 10 years or more back. You will get decent set of returns, but for that, you will need to keep your investment idea under the microscope as far as IT sector is concerned. Understand and then possibly make your investment. It's not like anything and everything in IT or related to IT is going to give you fabulous returns. You will get returns, but you have to choose the companies in the IT sector very carefully.
Absolutely. Let's quickly look at how the markets are shutting shop, viewers, and we'll come back to your top choice of questions that you have sent us for Gaurang to answer. We have the Nifty now almost ending 80 points lower in this session, 23,788. The good part is that we managed to climb towards the high point despite the weakness continuing for the 5th consecutive session. This entire week has been a painful one, of course, led by the crude shock that we've been getting. The good part also is that the crude oil prices are now somehow recovering from that $100 per barrel mark. Now you're seeing about $96 a barrel, and that's very good news coming in. And that's also one of the reasons why some of the pocket in the market is also improving. You're seeing the Nifty bank rally now into the green. You're also looking at the space PSU banks, especially within the banking names, leading that move. You're looking at the IT pack also turning green. FMCG has also turned green towards the end of the session. You're seeing 0.2% of a move coming in on that one. And we're looking at the media stocks also up and about in the session. India Wix, although maintains about a 3% higher, but that also has considerably improved from the sharp spike of over 8 or 9% that we'd seen in the morning. But auto stocks, metals and pharma still in the leading losers in terms of the sectoral action today. Let's also pull up the top gainers and losers in the session. For the Nifty viewers, you have to watch out for, of course, these banking and IT names that managed to pull up in the session. HCL Tech as the top mover, almost 2% higher. Looking at Cipla, Wipro also up by anywhere between 1 to 1.5% in the session. Let's also move forward to the next slide and show you ITC, HDFC Life and Geo Finance were the other top movers as far as the Nifty gains are concerned. On the losing side, however, when we look at the big drags that we saw, came in again from the auto pack in the session today. The big Nifty losers included names like Hero Motors. Zomato also declined 2.5%. Bajaj Finance was down by 2%. Some heavyweights that declined in the session included also M&M, Sriram Finance and Bharti Airtel as the stocks that declined in the session. Let's take some questions now from our viewers. We have Suman Pathak from Agra writing in the first question for Gaurang. And Suman says, is it the right time to invest in banking stocks with a 1-year investment horizon? How would you advise on the banking space, and which part of the banking names would you prefer?
Well, so I would be biased towards one, Sakshi. I would be equal weight, both on public sector banks and private sector banks. And along with that, I would request him to look at strong NBFCs also. So if you have to pick one name from each, Shriram Finance from NBFC, Indian Bank from PSU banks, and ICICI Bank from private sector banks. But don't have a 1-year time horizon because of the issues which are creating headwinds, both locally and globally. Stretch your time horizon.
Okay. We have Trisha Sen from Kolkata writing in the next query, and this one is, she says, I hold blue chip pharma names in my portfolio. Right now I'm still in losses, but what should I do? Should I hold on?
Well, Trisha, what we don't know is what are those blue chips in your portfolio. I wish you would have shared the names, so it would have been much better. I would have been in a much better position to answer your question, but assuming that you have names like Cipla, Sun Pharma, Dr. Reddy's, these laboratories, maybe Glenmark, etc., or maybe mid-cap names like Glen Pharma, Natco Pharma, or Aurobindo Pharma. Despite of that statement made by President Trump of 2028 and 2029, 100% and 200%, Sakshi, my big question is whether we'll still see President Trump as president in 2028. That's a big question. Let's watch. Midterms are not far away. It's in November this year. Let's see what happens over there. But stay invested if you are invested in strong fundamental companies in pharma.
Okay, we'll also take another query. This one is from Prasoon Jain from Kochi, who says that I'm still sitting on healthy gains as far as the food delivery stocks are concerned, despite their weakness lately. Should I continue to hold them on?
Well, so if you invested in names like Eternal, which is known as Zomato earlier, Sakshi, and if you have time by your side and if you got invested at a reasonably lower level, don't be in a hurry. If you have time, stay invested in Zomato, if it is Zomato or Eternal.
All right, fair point. Okay, Gaurang, we'll have to thank you right here for being with us on the show and for sharing all these wonderful insights like you always do for all our India Today and Business Today audiences as well. Viewers, in case you too have any questions about your investments in mutual funds, in stocks, your SIPs, or even gold-related questions, then please do send them to us on the number that's flashing on your screens. We'll be happy to have top market masters to guide you on your investment journey as well. With that, it's a wrap on the Business Today show right here. Thank you so much for watching in. Have a great weekend ahead. We'll be back to track the markets Monday morning at 9 a.m.
Presented by National Stock Exchange.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise, consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Hello and welcome. You're watching Business Today. I'm Neetu Chandra Sharma bringing you this earnings special on Dr. Reddy's. Thank the company reported a challenging quarter with profits hit by lower lenalidomide sales and an unexpected semaglutide API issue. Even so, the company says its underlying business continues to grow in double digits. To discuss the quarter, company's growth drivers and what lies ahead, I have with me on the show M.V. Ramana, Chief Executive Officer, Global Generics, Dr. Reddy's Laboratories. Ramana, a very warm welcome to you. It's always a pleasure to have you on the show. So let me start off by asking you that your quarterly performance was impacted by the semaglutide API issue. So what exactly went wrong and what corrective measures have you taken? And when do you expect the supplies to return to normal?
Sure. So first, I think in terms of the quarter, what you would see that sequentially, if you take from the quarter 4 to quarter 1, you would see that we have grown, and largely it basically says that post the lenalidomide, the base business is growing well and growing double digit across US, Europe, India, and emerging markets. So there is a strength in the base business. It is